Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Ladies and gentlemen, a very warm welcome to you on this lovely Sunday morning, February 1st, and we have tightened our seatbelts to listen to the budget speech. Finance Minister Nirmala Sitharaman will rise in Parliament today to present her 9th budget document less than 3 hours from now. Will she be playing a T20 match or a 5-day series, or will she take a middle path, which is a 50-over match? This document is not only being looked forward to by 150 crore Indians as the budget decides how they spend and where they save, but also by investors and businessmen across the globe as they navigate a very tough, volatile, and an unpredictable world order. What are we looking at Business Today Television? Well, how will Finance Minister Nirmala Sitharaman take care of taxpayers? Will there be a fresh, different treatment for sovereign funds as well as FIIs as they sell heavily into the domestic markets? How will the rupee be stabilized amongst global turmoil? Will there be a further fiscal consolidation, or will the finance minister choose a bit of populism? Will external reforms such as new trade deals will be coupled with internal reforms, something that we've already seen? A fresh labor code? Will there be a higher Capex? Will there be more borrowings? All this and a lot more will be known in less than 180 minutes. But before we kickstart our coverage, here is what Prime Minister Narendra Modi has to say.
देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म। और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं। हम संवेदनशीलता के महत्व को समझते हुए टेक्नोलॉजी की जुगलबंदी के साथ आगे बढ़ने के व्यू के साथ आगे सोचेंगे। जो हमारे टीकाकार रहते हैं साथी, हमारे प्रति पसंद नापसंद का रवैया रहता है और लोकतंत्र में बहुत स्वाभाविक है लेकिन एक बात हर कोई कहता है कि सरकार ने लास्ट माइल डिलीवरी पर बल दिया है। योजना फाइलों तक नहीं, लाइव तक पहुंचाने का प्रयास रहता है और यही हमारी जो परंपरा है उसको हम आने वाले दिनों में रिफॉर्म एक्सप्रेस में नेक्स्ट जनरेशन रिफॉर्म के साथ आगे बढ़ाने हैं।
Reform, perform, transform. That, ladies and gentlemen, is the mantra that Finance Minister Nirmala Sitharaman will be keeping right in front of her. Remember, we are a beacon of macro stability amid an unpredictable and unraveling geopolitical world order. We've seen extreme volatility on Friday. Silver and gold prices tumbled. We've seen 15 months of pain as far as the Indian investors are considered in stock markets. But to discuss this and a lot more, ladies and gentlemen, we are now joined by Mr. Anurag Singh, Managing Partner of Ansett Capital. He joins us from New York. A very good morning, rather good evening to you, Anurag. Thank you for taking your time out. How do you see this budget document, which should be out in less than 3 hours? What are your 2 or 3 major priorities that you hope the Finance Minister will address?
Chaji, good morning to you and all the listeners. And it is so nice to hear your voice again and, join on this channel after a while. Right, so it is always a pleasure, right, and always such an honor to be on your show.
You're very kind.
Shalji, hamara, our focus is, and I'm talking with respect to all the foreign investors. Our focus always is more predictability in terms of policy, and more predictability in terms of regulation that the government comes out with. We are all for reforms. Government can announce all the reforms. The pace can be debatable. Sometimes slow and faster, but direction should be consistent, uniform, and predictable. I think that's what we are looking at. And with Nirmala ji at the helm for quite a number of years now, I hear that she is kind of the longest running finance minister.
Yes.
I think it is reasonable to expect that predictability and direction, which at times I can quote some examples that it seems a little bit 2 steps forward, 1 step backward.
Fair point.
So that's our that's the high level view. We don't expect any surprises. Nobody wants surprises. Even the domestic investors, I'm sure, don't want that. Yeah.
Right. Anurag ji, while you are from our part of the world, but you represent foreign institutional investors now, for the last 5 consecutive years, from 2021, somewhere like 9 to 10 lakh crores has been withdrawn from Indian capital markets by our foreign funds and friends. Even in the month of January, about 41,000 crores has been withdrawn. This has hit the rupee very badly. It's hard to say whether the rupee fell and therefore FIIs withdrew, or foreign funds sold and therefore the rupee weakened. Now, what exactly is the problem that foreign funds are facing?
So, Shalji, and this is one of the examples I was trying to quote. I think this is the predictability that the foreign investors need. I'll tell you why. Because go back to period between 2021 and 24, it seemed that RBI is just trying to manage, especially in 23 and 24, was trying to manage the rupee between 81 and 83, right? Something like that, right? And there was a prolonged couple of years period, even 3 years, where the rupee kind of hovered in this range. There is no reason that it should have stayed that stable, right? Because dollar was getting stronger, but yet the rupee, just kind of stuck in the range. And clearly RBI was kind of trying to sell dollars to manage that. Since the regime changed, the new RBI governors, I don't know whether it's the change in stance of the RBI, but I'm sure it's the direction from the government as well.
Yes.
Right now, the focus seems to be that let the rupee find its own balance. And so I'm sure now it's headed towards somewhere around 95, because that's what the real effective exchange rate of RBI indicates. So that's our, that's where we are, Shalji. I think foreign investors first knew that rupee is being managed at within a range, and when it breaks that range, it will be a steep fall. And I think that's what we see right now. In terms of selling for the past 5 years, I think, Shalji, I'm sure everybody's talking about it, that capital gains taxation of 15% and 20%, that has something to do with that as well. Because FIs usually in any country, they don't face taxation in the country they are investing. They face taxation only from the home where the investment is coming from. So, but I'm reasonably sure government is not going to do that. That's unique to India, because their sense is that if they do it for FI, a lot of FI are coming in from Dubai and some of the vehicles based there, and then that's just Indian money coming from a different country. So I'm sure there are complications there. And that's okay. I mean, partly it was also to do with markets being expensive, and market is finding its own level. For the last 18 months, I think last time we spoke, I have consistently held the view that markets are expensive for now, and there are no immediate opportunities to invest.
Absolutely.
So I'm sure foreign investors knew about it, right? That's okay. Look, markets can find their own level too, but government policy should be more consistent. That's what we would like the rupee to find its level rather than government trying to set a direction on that.
Okay, that's an interesting thought, Anurag, that you push forward, that market forces should determine the true value of the currency. The top man for the show, managing editor Siddharth Zarabi is getting mic'd. We'll be taking his views in as well. But for the moment, let's listen to what Vaibhav Sanghvi, CEO of ASK Hedge Solutions, has to say about his expectations from the budget. Remember, the markets have been very, very volatile, and it's been a very, very painful 15 to 18 months for investors. Let's see what the top investors are looking forward to.
I think as everybody has a lot of expectations going into the budget, I think from a market standpoint, it's extremely clear that if we continue on the fiscal prudence path, at the same time, keep on raising resources for constructive expenditure in terms of Capex, as well as boost on the consumption side as well. My sense is basically, I think it would be a perfectly, well-balanced budget then. Of course, the bigger question is how to raise resource. And in that, in our view, I think one of the most important aspects is to look for disinvestments, especially on the strategic side. So all in all, while being fiscally prudent, keep on supporting the industry and the consumption, and raise the resources by kind of disinvestment measures is what I would probably sum up in a very, very short brief.
Siddharth Zarabi, managing editor at Business Today Television, joins us early morning on Sunday. Very warm welcome to you, Siddharth. What are the 2 or 3 top things that you're looking forward to hearing from the finance minister in about 3 hours from now?
Well, very clearly, the key thing, according to government sources, is a change in the way that Part B, which was the key finance bill related aspect of the budget, is going to change. Late yesterday evening, we broke this story on Business Today regarding what is the new focus going to be. It's perhaps going to be a mid-term, long-term path which outlines hopefully the journey to Viksit Bharat. And remember, the reason for this is very clearly what has happened over the recent a year or so. One is changes to direct taxes. So that part is mostly taken care of. Indirect taxes, GST, September was when that big change happened, and as a boost for consumption. And of course, now the big expectation in terms of what is likely to happen as far as customs tariffs are concerned. Remember, customs is the third of the Trimurti really in terms of the government's ability to both impact domestic prices, change the signals that go into the manufacturing sector, particularly from an input basis, and of course a tariff regime that should be able to encourage industry in an environment where the rupee has been very sharply depreciating. So if you take it ahead from the economic survey and its commentary on rupee depreciation, and if you then look towards fiscal decision making with regard to the rupee, in a way, indirectly, customs tariffs will also give us a hint about what is the thinking as far as the longer term trade re-engagement policy of the government of India is concerned. Remember, by now we already have 8 free trade agreements. There is, of course, the expectation on the big one as far as the United States is concerned. So, frankly, that's the broader macro backdrop towards this budgetary exercise, the 9th by Finance Minister Nirmala Sitharaman Shell.
Right, Siddharth. We also have Anurag with us, joining us from New York. We were just discussing what the macro platform was on which the finance minister is standing, and he talked extensively about how market forces should be determining where the rupee is. Anurag, coming back to you, in terms of sector specifics, in terms of Capex, in terms of borrowings, what do you expect the finance minister to do? Will she take the middle path, or do you expect some kind of opening up in terms of expenditure? Because at this moment, the fiscal and the macro balance sheet of India is amongst the strongest in the world.
Move on to that. I think Siddharth raised a pretty good point, and I wanted to make this point as well, which is that we've been talking about Viksit Bharat as a very ambiguous definition. Nobody knows what the Viksit Bharat number is. Is that a 25 trillion economy? Is that a 15 trillion economy? Whether it is dollar terms, because that has to account for depreciation of the rupee as well, right? So, that roadmap doesn't exist. I think, the global investors would appreciate really if the government is more concrete and has a roadmap around what that number looks like in 5 years, by 2030, 2035, rather than simply saying, oh, we'll grow at 9% for 25 years. Like that's, and nobody knows whether that's real or nominal or dollar terms growth. What is that? So I totally back that view. I don't think that's coming out today, but if it comes out any point, I think that's one thing that everybody likes to hear. What does that Viksit Bharat mean? Now coming to Capex. So Shalji, I think this is what the industry believes as of now, that the government's focus on Capex and 30% CAGR and Capex rising to like 11 lakh crores, that was a very beneficial move, but that had its path and that has run its course now. Government is now not able to spend the entire money. I think between 20 and 25, the focus was on Capex. But now I think as long as just Capex keeps growing at a nominal GDP rate, which is, by the way, that's one of the things we want to watch out. What's the nominal growth now is not 10%, it's 9%, sub 9%, right? Yeah. Last year. So what is the number that the government takes? Is it going to be 10%? Because then all the calculations, deficit, everything is based on that. But I think now the government has realized that it has to work on demand generation. So consumption is the focus. And you saw that GST and income tax rebates and everything is now, it's moving in that direction. So I think that's the sense. I think we would like to see if the government can give more consumption boost rather than simply investing on Capex. That's fine. I think Capex has happened. But I think if you have 120 airports, are they being used as efficiently? Where is the money? People need that spending balance, right? So I think that's where my sense lies, right? We'll see the details, but I think it'll be more consumption focused, not Capex focused.
Right.
At least that's the sense we are hearing.
Anurag, from a market's point of view, what is it that would really move the needle on market sentiment? Because let's say there is something to do with taxation or other steps that you feel could move the needle as far as market sentiment is concerned.
So, Siddharth, I think markets are not doing badly, really. I mean, when we look at, and I heard Shalji when he said 15 months of pain, look at the growth we had between 2020 and 2024. It is unprecedented, right? The large caps were 20% CAGR, small and mid caps were 30% CAGR for 4 years, from 2020 and 2024, 5 years. It is unheard of in any part of the world. So after that, you need a bit of a pause, right? Everybody knew the pause is coming. So I think we should be ready for that, a bit of, 2 to 3 years of absorption period. even 2026 might be the year of absorption, and I think that's fine. Ultimately, our expectations for the market is that it will grow 12% CAGR. Nifty 50, Nifty 500, if it can do 12% CAGR, that's fine. Historically, it has done 11% CAGR. It can't grow 20% CAGR, right? That's not happening, right? We should know that. And that's also important because when we count returns from 94 to 2007-8 period, the nominal GDP was itself 15%. Today, the nominal GDP is 9%. How can you chug out 20% returns from there, right? So that's a bit of a, and by the way, inflation is lower too, right? We don't have double-digit inflation. So I think that's all in context. I don't think markets are doing badly. They're doing fine. It's the expectations that people have. If they have more expectations, they're going to be disappointed, right? But markets are fine. Markets will find their balance. They're working absolutely fine. Just to address, Shaljit, before you come in, just to address Siddharth's question, what do we expect? I think we just expect more predictability, consistency, no surprises. If the government is taxing, it's bothering me that capital gains are at 12.5% because I know they're going to get to 15% someday. And they might go to 20% because government will say, hey, America has 15% and 20%, so why are you guys worried? But please have a roadmap around that. You should not be expecting that it might come up in any budget.
Which is why the story that we did yesterday about how there will be a structural change shell in the budget and part B, which was the finance bill, and obviously all taxation related proposals, is where there could be a surprise, a positive one. Chetan Bhutani is here with us. Chetan, morning. It's been raining a little bit. I hope there is no rain on the parade as far as sentiment is concerned. You track the infrastructure ministries, including roads and transport, for years now, and they've always got a bulk of the allocations in the past. The point that Anurag was making, take it forward. What can we expect as far as our infrastructure spending priorities are concerned in this budget?
Well, Siddharth, clearly the government will be focusing towards, improving Capex, towards spending towards infrastructure, because that is what is the star of the government, of the Modi government. To say so, 11 lakh crore was the allocation that was done in the previous year of the budget, and today we are expecting to be nearly about 10% plus of roads, railways, ports, shipping, and of course other infrastructure ministries as well. All in all, the government would be keeping its focus towards spending, towards developing brownfield and greenfield infrastructure, because as we know, the government has been indulging and making a lot of construction towards making highways, construction of rural roads, and that's what is going to be a significant part and portion of the budget announcement as well. We're also expecting significant announcement in the railway sector as well, because the government has been planning to expand towards bullet trains and Vande Bharat trains, and that would need a lot of capacity utilization and capital expenditure. So the government would be focusing on these two areas as well, but we are expecting not a higher allocation towards these ministries, because the spending, especially in the highway sector, has been muted in the previous year, but yes, for this year as well, the government would be keeping its focus towards infrastructure as well. Secondly, Siddharth, if I may add quickly, MSMEs will be the government's key focus, because clearly 33% contribution to the GDP, 48% exports, nearly 30 crore jobs is what MSMEs create for the country, and they are still troubled with the tighter credit rules. The government could further ease that.
Okay, Chetan, thanks for that. Do keep getting us more updates. Meanwhile, visuals on the screen, the finance minister beginning her day to get to Parliament to make that historic 9th speech, and very clearly the changes that happen in terms of the budget presentation will be very, very significant. Remember, budget making, budget presentation, budget timing, all have been subject to change, and I'm reminded as we see those visuals on the screen, and as my colleague Sakshi Batra also joins in, I am reminded of that debate that happened quite some time ago with regard to changing the date of the budget presentation to perhaps the first week of January to align with the calendar year as is followed. Remember, viewers, we have a fiscal year concept beginning 1st April, ending the 31st of March. And there was a bit of an exercise that was done on it. Eventually, what really came of it was the budget being brought forward by almost a month to the 1st of February instead of 28th February. But given the nature of government account keeping, ultimately remember that the union budget is at its core and at its heart a statement of accounts of the union government, and therefore that not coming through. So we are pretty much set on the date of delivery of the budget. The time, as we know, is now also fixed, and therefore the change would obviously be what will Part B be all about. Once again, to reiterate, Part B, the finance bill, tax changes and other changes. The hint really that we have is that it's all going to change. In fact, our colleague Karishma Asudani, who broke that story yesterday evening, hopefully we will get her on air with us in the next half an hour before the pre-open of the markets come in. Sakshi Batra is with us. Sakshi, coming to you, tell us, what is the market really looking forward to? Anurag made that point. Please don't surprise us. Let everything remain on track, and we are fine with what you do. We are also perhaps fine with higher taxation. Just don't roil the turf. What do you think, Sakshi, market makers are expecting?
Good morning, Siddharth, and good morning, Shell. It's an unusual Sunday, and we're all here early in the morning waiting Finance Minister to open her kitty of goodies for everybody in the country. For markets, of course, remember we are going in with some losses. All this month of January, the Nifty has fallen by 4% from its all-time highs that we hit on the first trading session of January, right after the holiday that we opened up. Now, remember, we've also seen that the Nifty banked that bit lower, about 1.5% lower. The IT index is down by 17%, and so is Reliance Industries, the biggest boy on the stock markets, 13% lower from its all-time high levels. So the markets are weak, the sentiments are weak. Foreign investors in the month of January have pulled out 40,000 crore rupees from the Indian markets, and that's where the key question is, whether the finance minister will do something to revive the investors' sentiment. Always we have this expectation that 2 years ago, the LTCG that was hiked, there should be some relief on that, if not for everybody, for foreign investors. But as in how I'm speaking to most of the market experts, they believe why only for foreign investors? Domestic investors that have been holding on the weight of the markets for the last 2 years, they should also be given some relief on that. At least on the STT, the Securities Transaction Tax, there should be some easing. Of course, we are going back with big expectations. Whether the government will do something is a big question mark on that account. But even the slightest good news there will be taken up with both hands by
Sakshi, you made that point, and Shell, come in on this, because I was reading some data and analysis by the State Bank of India, SBI Securities, and it says that the Nifty has shown a pattern of closing higher in 12 of the last 15 post-budget weeks with an average gain of 2%. Is that script likely to be followed again this time?
Well, Siddharth, 2 points in favor of the market. It's very light. As Sakshi mentioned, a 4.5% cut on the Nifty in January alone. And this makes us the worst performing global index for the month gone by. We are looking at auto data coming in today because it's the first of the month. In any case, rupee, bond and call money markets are closed. So the focus will be only and only on the Sensex and the Nifty. You might see a bump up, but the problem is that Anurag's friends, foreign institutional investors, will take this opportunity to again press sales. What you see, 41,000 crores being taken out in the month of January is the highest in 5 months. And that's a very, very painful start to a new calendar year. And to your point, if we are coming on 1st of Jan next year for the budget.
No, that's not happening. That's not happening at all. That's not happening. I was talking about the past.
Will be upset.
Absolutely. Anurag, you wanted to come in on that, because just to be clear, that's not what I was hinting at.
No, so by the way, Siddharth, I should not miss this out. I listened to your coverage from Davos. It was superb, right? So kudos to your team, and I listened to quite some insightful interviews from you over there. Okay, so look, in terms of Shalji, this is the point I was trying to make.
We have some live visuals there coming in from Finance Minister,
Entering
walking
Parliament.
out. Yeah.
Go ahead, Anurag.
I always like these VIP visuals like this. Is just so unique that we do. Yeah, or the car is moving.
This is part of Indian television, Anurag. We kind of like things spiced up.
I love it.
We also showed you a wonderful wintry Delhi morning. Anurag, I am sure you have great memories of this city.
Oh, absolutely. Always love this. So, so look, I think the Indian markets will, I think FII exiting will stop if the markets take a well-deserved correction. Honestly, and we've seen people say Korea rose 80%, Brazil rose 30%, Argentina 50%, all of that, all global, even Europe worked for 20% last year. Emerging markets as a basket was 30% up. Here is the point. All of these markets have taken a severe beating after 2022, which is the Ukraine war, right? So for 2 years, they took a sizable correction. Even S&P went from 4,800 to 3,500, right? And then came back from there. Indian markets have not taken a correction ever since for the last 5 years, right? So if the market is at a very attractive level, some sellers will come in, right? And by the way, I've been on record and everybody knows this now. If $100 is sold in Indian markets, 30 comes from FIIs, but 70 comes from domestic money, right? So it's just, markets are very efficient. They're working fine. You have to see whether you want to be on the buying side or the selling side, right? It's working perfectly fine. And if you think the valuations are pretty high, well, it is then. Here is a point maybe I would like to leave with that. Because the expectation, because of this rupee depreciation every year of 3% and the capital gains, another 15% gone, Indian markets work pretty well for foreign investors if they grow by 15%, right? Because then they can sniff out some 10% return on the capital. But with the nominal GDP at 9-10% and earnings growing by 10%, that leaves a little room for markets, for foreign investors to make money on that. So that's the limited equation. I hope we hear something from the FM on this.
One thing, Anurag, that we will also hear, and viewers, this is going to be a once in 5-year development really, is the tabling of the 16th Finance Commission report, that constitutional body headed by economist Arvind Panagaria. Now, what is at stake here? There are multiple issues that confront this Finance Commission, and we are focusing on the macro for a moment here, viewers, so bear with us. Between the 11th Finance Commission, which was from 2001 FY to 2005, the state's share of the tax revenues has gone up from 29.5% to 41%. 5 finance commissions implemented during this period. The 16th will also come today as the finance minister tables the commission report with an action taken report. And this at a time when GST has already been implemented. So if you look at overall spending urges and directions, the states is where a significant amount of action and also state level Capex happens. There is also the argument around the welfare state becoming bigger. But with the states getting more and more of the kitty, a lot of attention, frankly, I think will also shift and should continue to shift towards state budget. So Sakshi, Shell, that's also one of the other macro elements that we need to focus on in today's budget. It's of course a separate exercise. It's not part of the budget document, so to say, but this is also very, very significant in terms of the money that the states will ultimately have to spend.
Absolutely. Thank you so much, Anurag, for being with us. And let's keep our fingers crossed for the budget speech and see what really happens in. But we have some more guests joining in. We have Gaurang Shah, Senior Vice President, Georgit Investments, now joining in. And we also have with us Vaishali Parekh, Vice President, Technical Research from Prabhudas Leeladhar. Good morning to both of you. Good to have you with us. Gaurang, to you first. You've seen so many budgets. What is going to be different this time? Of course, it comes with a backdrop of a lot of geopolitical tensions, the US tariffs yet again again knocking our doors and perhaps in a severe fashion than in 2025. How would you really look at what is the opportunity that the finance minister is going to make of it?
Sakshi, thank you so much for having me on this show this special Sunday morning. Very unusual. All of us are working this Sunday morning. Thanks to the government and the finance minister. Morning to you, Sakshi, to my good friend Shail, and of course to my friend Siddharth, whom I've been talking after a very long time.
Good morning.
And morning to Vaishali as well. So a small disclosure, because we may go into stock specific, that all recommendations that I'll be sharing this morning are a part of our fundamental research team long-term recommendations. Our company Geojit or myself do not have any personal investments, no financial interest, no conflict of interest, but we give advice to our clients on similar lines, so they might have that investment interest. So Sakshi, to answer your questions, I think the wish list is never ending when it comes to the expectations from the Honorable Finance Minister, but we also have to understand that there is a tightrope walk that the Finance Minister has to do between growth, fiscal prudence and creating opportunities and attracting FPI. So I think some parts that my sense is, and I hope I'm right on it, budgetary allocation towards defense is going to go up. Capex, infrastructure creation, creating employment, simplifying complex tax structure as far as foreign FDI is concerned, and of course a large expectation towards long-term, short-term, etc., etc. And of course, last point is boosting consumption by giving that extra spendable income on the hands of common citizens. So this is the large perspective, and I hope that the topmost priority will be fiscal discipline and of course creating growth opportunities.
Right. Good morning to you, Gaurang. A very warm welcome to Vaishali, and a little later Vineet will also be joining us. But Sakshi, I've been holding myself back for the last 15 minutes. Notice the halo around Siddharth's head.
That's where the enlightenment.
Right. And you know why that has come? Siddharth spent a very fruitful 1 week in Davos listening to everybody who has a voice on global trade. And
there's a horn on your head also. I can see that horn is
I have been an eternal bull. People will always bear me out on that one.
Let's go to our guest.
Okay, but I have one question for Siddharth. Siddharth, a quick one. What were the 2 or 3 things that you learned from Davos? What are they looking forward to in terms of the budget?
So
and how do they,
the age of super intelligence in AI is upon us sooner than later. Our IT industry, which is a powerhouse in the Indian context, has a massive challenge coming at it, and some companies, including the likes of Coforge, are taking the inorganic route towards it. But on the whole, while Indian IT is intellectually fully aware and grappling with it, I think the pace at which technology is moving, over the last 3 days or 4 days alone, we have seen a community of AI agents sort of become semi-sentient, and that is perhaps the future that we can see as far as AI is concerned. Apart from that, I think at a macro level, the G5 is splintering. America is isolated and it works for us. And finally, the big headline really at Davos was the EU commissioner announcing that the mother of all deals will happen with India. I have never seen India come into focus in that manner. So, Shell, Sakshi, that was clearly one of the biggest headlines from there.
I think the big question then is, after mother of all deals, will this be the mother of all budgets that the finance minister truly presents here today? Vineet, do you think that is a possibility?
Yes, I think it would be a very positive one for this year. And, we are seeing the change in the text and content of the budget, where we are going to present more of futuristic ideas, roadmap for the future that is going to be added. So I think we're going to see this play out very well, and I'm very dovish on a lot of aspects, because I think that we've seen a little bit of negativity around the UGC this thing, and I expect that there will be a lot of positivity playing out on the elections that are forthcoming, and hence, I think that it's going to be a very women-oriented budget, especially for the lady of the house. So I think I'm looking very optimistically at what things are going to play out. Very, very dovish on what kind of, things are there on the platter of the finance minister.
Right. We'll welcome our Lady Luck. Vaishali joins us from Prabhudas Leeladhar. She's been giving us fantastic calls on the long and the short side for the last 36 months or so, and therefore our Lady Luck. Vaishali, the first and the foremost question in the mind of every trader is the best part of silver and gold rally behind us.
Very good morning. Yes, so that was always the flavor of the season right now. But now we are seeing that, yes, metal index, especially gold and silver now, we are seeing a downward trajectory. So I think silver also, to my understanding, the way it's falling, we can see it going towards 280, 250 levels. And gold also, I mean, we have seen good run up. We've seen nearly more than 200% return in the last few months. So I would say that yes, these metals are going to take a breather. We may see some corrective move, and along with that, we are also seeing some exhaustion coming in the metal sector on the whole. So I would be worried at these stocks now.
One point I'd like to mention, and I'll request the PCR to kindly draw the chart of the Nifty Metals Index. Siddharth, on Friday, there was a 5.2% plunge on the metal index alone. And that comes after a 29% rally from a low in December 9th, 2025 to 29th January's peak close. So that's the run-up, ladies and gentlemen, a very narrow but a very strong bull market only in the metal sector. While the rest of the market pauses. Let's get...
I wonder how much of it really has to do with fundamentals. Is it that because of industrial demand, for example, for silver with particular reference to new and emerging technologies, is it that, or was it just a safety bet that kind of saw everybody piling in from fear of missing out, that FOMO factor? I don't know if Gaurang, you have a view on the question that Shell asked. Is this really fundamental or driven by other factors, and that's why the pullback too seems to be profit booking?
So, Siddharth, our view is that after a brief pause on the precious metals pack or a profit booking, our sense is that from a long-term point of view, the momentum is still intact on the upside. And the reason why I say this, Siddharth, is because, look, there was, of course, like you mentioned, there's a mix of all these things. One is, of course, geopolitical tension, flight to safety. Other is on and off scarcity of supply. Third is central banks lapping up gold to a certain extent, increased number of footfall in ETFs. And as we all know, underlying securities, precious metals for gold and silver ETFs, you have to have physical gold and silver ETFs deposited with the authorities, and then only you can come out with new units as far as gold ETF is concerned, or even mutual funds are concerned. And of course, applicability in terms of industrial use and newer technologies. So silver did a phenomenal run over the last year and a half or two, Siddharth. Maybe there is a brief period of pause, profit booking, which is absolutely okay and healthy according to me, and it will definitely give opportunities for all those investors who are living in that FOMO factor. So if you're asking me from a 3-year plus kind of time horizon for precious metals, gold, silver, definitely there is more upside. And let us not forget, this is a pause in terms of geopolitical uncertainty. I think if there is going to be more such unpleasant situation unfolding, you will definitely see once again flight to safety. Okay. So I would say that, and unfortunately, Siddharth, in India, there is no product with respect to platinum, because platinum has also given a good decent run. But unlike gold, silver, you don't have any other platforms to invest in platinum. So long term, the uptrend is still intact.
All right, let's go across to our colleague Karishma Sudani, who's been tracking all the pre-budget news coverage for us. And last night she also broke the news that this time around there could be Part B speech that could be longer. And this could be a breakaway from the tradition of almost, 70, 75 years, Karishma. Give us our understanding. What's the mood on the ground?
It's actually ninth consecutive budget of Finance Minister Nirmala Sitharaman, and on an average in the past 3 to 4 budgets that I have consecutively covered, her speech has varied from say 108 minutes to that of 80 minutes. On an average, let me say that's about 80 minutes. Under 80 minutes, the emphasis on Part B was usually around 35 minutes as per my research, but this year, this budget, we are expecting that the announcements on direct and indirect taxes is going to be way beyond the usual, which means that her emphasis on talking about taxation, on reducing the compliance and on easing the taxation reforms is going to be the crux of major announcements. Let's not forget that when the GST rationalization exercise was conducted back in the month of September 2025, Finance Minister Nirmala Sitharaman had also shared out there vocally that her next agenda, her next task to do is going to be on simplifying the customs taxes to make import duties better and simplified to reduce the slabs when it comes to the custom duties and to make it easier for the trade deals also to happen in terms of lesser compliance. So that is going to be the crux of today's announcement. Of course, besides the fact that government has been big on its drafting its fiscal path, this year onwards, they are also going to move their emphasis from the fiscal deficit to that of debt to GDP ratio, which has also been announced by her a while ago, and continuous emphasis on Capex. Just in few moments from now, minutes from now, Finance Minister Nirmala Sitharaman will walk along with her A-team, the creme de la creme of Finance Ministry, as we call the budget makers, which constitutes a mix of veterans, stalwarts who've been a part of budget making exercise for a while now, along with new joinees as a part of the budget team who are experienced bureaucrats, and at the helm of it, two women participants, one Secretary Department of Economic Affairs, who's Anuradha Thakur, and of course the Finance Minister herself.
Absolutely. Thanks a lot, Karishma, for all of that. All right, let me just quickly go across to Vineet once. Vineet, what's your quick understanding? Tell me in one sentence, what is your big expectation?
Going to be a plethora of, ideas that are being presented, which are going to be very positive for the market. So, gung-ho on the, the announcements that the finance minister makes.
Okay.
Sakshi, I think one of the most important questions got left, which we should have asked from Karishma, which is all fashionistas like you would be really concerned about
what sari she wears,
what texture, what color, which brand, and of course, which part of India is she representing today in Parliament. So that Karishma, I think, can Karishma hear us, PCR? Yeah, hi Karishma, Shell this side. Sakshi and I were just discussing the color of the Finance Minister's sari. Would you want to throw some light on it? Well, she's on mute.
Okay, so as we count down to 9 a.m. and when we start our budget coverage, also viewers to tell you that we will be doing a collab show with our sister network, the India Today TV channel, and on that we are going to count down both to the market opening and live on what happens as far as the markets are concerned, and of course the beginning of a new relationship with the National Stock Exchange on that show as our prime sponsor for the show, as we try and expand the reach and understanding of India's stock market to many more viewers than those who just tune into business platforms. The focus really, Shell, Sakshi, and to all our guests who are here with us, to try and expand the markets, because as we have seen with the expansion in mutual funds, the kind of investing culture, saving culture that has come up will be a focus. One quick point that I want to just bring out for our viewers. We recently spoke to the State Bank of India Chairman C.S. Sethi, and he made that point that there should be a level playing field across all financial savings instruments, and this is something that he told us at Davos, and that point being reiterated. Will there be something in the budget that directly or indirectly helps move towards better deposit mobilization for the banking sector will be critical, because remember, bank finance shoulders most of the burden of growth, including the infrastructure sector, and there are so many sectors in India, and by some estimates around 100 lakh crore is required over the next 5 years. And where is that money going to come from? Will the budget be able to address that? We'll have to also wait and watch for that.
Well, ladies and gentlemen, we are just about 10 minutes away from pre-open. We'll pay a little attention to the markets, actually. A painful opening awaits us, mainly on account of the pain that we witnessed on Friday as far as metal stocks are concerned. And what we'll do, ladies and gentlemen, we'll come back very, very quickly, but here's a short commercial break, and on the other side is the best coverage for the budget that you can ever see. Stay tuned.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Quickly on the reform, one policy narrative I definitely want Finance Minister to touch upon is India relative representation in the global AI landscape. So articulate a very strong AI narrative, step up funding for digital infrastructure, focus on data centers, semis, electronics, R&D. Our R&D spend has not moved a needle in the last 1 decade. So definitely a narrative on new age technology sectors, I think will be very good from an investor point of view.
I would be watching actually the signals on fiscal, and I think a clear and very clear signal on fiscal prudence is needed, because bond markets are on tenterhooks because of supply concerns. So I think the message that even as we are moving to a debt targeting regime on the center side, the fiscal deficit will be lowered in the coming years, and that it's not just going to be a center-driven consolidation, but state on the debt side will also consolidate. I think if we do send those clear signals, then at least the fiscal-related concerns that are a big overhang on the bond markets, some of that can be taken off the table.
It would have been easy to say after the lack of a deal with the US, let's turn inward. We haven't. In fact, that's motivated us to go on a spree of signing free trade agreements, right? And the EU was the latest. Now, what is the reform that's needed to complement that? In my mind, the old adage in economics, an import tariff is the same as an export tax, has never been truer than in a world of global value chains. So what I'd like to see in the budget is a start of a dramatic simplification and rationalization of the customs duty scheme. That we want to lower tariffs, we want to simplify the whole process, we want to correct inverted duty curves, and thereby make it much easier to import to help to re-export. So I think given the focus on FTAs and export-led growth, we need to clean up the customs duties and import regime so as to seamlessly integrate better into global value chains. So I'd be looking for a whole big package on customs duties, lower import tariffs, lower non-tariff barriers, including QCAOs. We focused on income taxes in the past, we've done corporate taxes, we now need to do import duties.
The budget, I think, will be, focusing more on the growth aspect. We've already seen, and the announcement that instead of a fiscal deficit percentage targeting, we are going to start targeting debt to GDP, which is at 56% currently. The glide path to 50% is being made. So clearly, the change in stance of the RBI and the government over the last 9 to 12 months has been to stimulate more growth amongst the global uncertainty, because we've had huge shocks in terms of President Trump's erratic tariffs. We've also had shocks in terms of the geopolitical issues. So the focus will be more on growth, I would say. The important thing to observe is to figure out whether the thrust on capital expenditure continues like it has been in the past 5 years, where the private sector slack has been taken by the government, and that's been a huge support to the economy. Last year, of course, we saw consumption boost also by cutting income taxes and GST cuts. So the government is, I think, firing on all cylinders along with the RBI to stimulate growth. But this year, again, we need to see continuity of Capex. So that's one of the key data points I'm looking at.
In the budget, I mean, everybody is giving their wish list of what they want in terms of either concession or investments in their area of business. But the point is that if you look at the numbers, the government doesn't have much room to do anything, because what has happened is that the tax collections are running way below expectations. So tax collection numbers are available from April 1 to January 11. And see, first let me tell you what was budgeted. So when the budget was made, the nominal GDP growth was supposed to be 10.5%. So accordingly, the GST and corporate tax collections were estimated to grow at 10.5 and 10.9, something like that, to both of them. Surprisingly, and this is something I had pointed out last budget itself, even though the personal income tax rates were cut, the budget showed that the personal income tax was estimated to grow at 14.5%. So I said, like, how you are expecting the personal income tax to grow much more than what you're budgeting for the other taxes. The only explanation can be that you're budgeting huge collections from capital market related taxes. STT was supposed to grow at 40%. So now, personal income tax has actually grown at 1%. STT has barely grown. Even GST and corporate tax, there are big shortfalls. Now, of course, what was kind of controllable, they have given far less refunds this year. Even then, as against a budgeted tax of 11% growth overall for all taxes put together, we are not even at 8%. So there's a big shortfall. And the reason, of course, is that nominal GDP growth has been very, very low. So आपको जो headline नजर आती है वो होती है real GDP growth, but what is actually, whether it is corporate tax, corporate profits, and whether it's taxes, they all depend on nominal GDP, which is the actual rupee GDP. And there the growth has been very low. So, it's been barely more than real GDP.
I think there are two aspects here, Sakshi. I think the government is walking a very tightrope when it comes to finances. So I think if you look at the fiscal deficit for this current fiscal year, it's probably going to end up around 4.4%. I don't think she will project more than 4.2% for next year. The reason for that is that indirect taxes have seen a dip in collections post the GST cuts. Income tax and corporate tax is all right, but I think we're probably looking at tax collections for FY27 to be, say, about between 9 and 10%. GDP growth to be somewhere around 6.8 to 7%, add about 3.5% inflation to that. So you're looking at something like about a 10.5% nominal GDP growth. So I think when you're in this growth environment where your tax collections are a bit constrained, I think the government will have to watch the expenditure side very closely. I think you'll probably look at a situation where Capex growth will probably be around 9-10%, is my sense, at best about 10.5%, in line with nominal GDP growth. Within that, I think if you look at the two major sort of legs, which is roads and railways, I think the spending there also could be in that range of about, say, 9 to 10, 11%. But I think the focus, and I think we got a hint of that in the recent FTA announcements as well by the European Union and India. I think if you look at the defense spending this year, which has gone up, I think, 45, 50, 55% maybe.
Just back from the icy climes of that. Yes. We're in the sort of relative warmth of the studio, but the news treadmill never ends. You're looking forward to this budget. What number budget is it of yours consecutively?
Okay, that would reveal my age. I'll leave that. But I think the
other big part of this record budget, you spoke about Nirmala Sitharaman's and her 9 turnout with this speech, is also that there is likely to be, as per government sources and this story that we broke yesterday evening, a fundamental change in the manner in which, and according to sources, this will be the first time in 75 years of budget making in India that there would be a change, particularly in Part B. And those of our viewers who follow this very closely know that Part B of that budget speech was the real action. It was where the finance bill and all the changes on taxation and tariffs used to happen. What will this change be? Indications are that it's going to be a longer-term vision statement tying in with Viksit Bharat. And remember, Rajdeep, this government has made several changes to the nature and manner of the budget presentation exercise. The date changed and that was brought forward. In terms of the focus, we have seen massive announcements happening outside the budget, the government showing flexibility to respond to emerging economic changes. So that, I think, at the macro level will be the big thing to look out for. And one quick element, deregulation, and this was again something that we picked up at Davos, but the markets have now currently in pre-open, and let me at this stage introduce our colleagues on the show. Shailendra Bhatnagar, Chief Markets Editor of Business Today Television, joins us here with us. Abha Bakaya, our Senior Anchor for Markets, a Consulting Editor, is here with us. Sakshi Batra tracks the markets very, very closely for Business Today Television. You see her every day on India Today and Abha. And we also have a very special announcement to make, Rajdeep. From today, the National Stock Exchange becomes the prime sponsor of the market opening and the market closing show that is shown 5 days a week here on India Today. So also some new firsts for us as well. But let me quickly go across to Abha to set the tone for the markets. The markets have, in the run-up to this budget, been a little weak, but 12 out of 15 times data shows that the markets show a bounce back. Abha, take it from here.
Good morning, Siddharth. Good morning, Rajdeep. And yes, given the state of the markets that we've seen, I think ever since the last few months, we saw a brief respite during festive season, and then there's really been completely lackluster trade and Trump's, complete, politics in the background. The budget so far, according to Market Master, seems to be kind of a subdued non-event unless we really see some major reform push. And that's where I'll come back to both of you in a minute, because what is the scope for the finance minister this time around to really give a fillip, whether it's on the consumption side, whether it's on the private Capex side, in terms of some kind of incentive for corporate India to come to the table, or even if it's further government expenditure. But they do need to see some major push, not just something superficial, but something that will actually give a huge fillip to the economy. Remember, when we look at the kind of growth statistics that we're seeing here in India, we are on track, we're looking robust, particularly in the global environment. But in order to really capitalize on that and see all of those growth engines running, we are going to need to see some kind of incentive.
Finance Ministry officials, including Chief Economic Advisor, there is always a meeting of the Union Cabinet that provides formal approval, and that is Nirmala Sitharaman with a new age Bhai Khata iPad possibly behind that red velvet box with the Ashoka emblem on it, and a resplendent sari. I'm waiting to figure out which one this is. That's the entire Finance Ministry brass. There is another first, Secretary of Economic Affairs, Anuradha Thakur, that you see on the left of Finance Minister Nirmala Sitharaman, a woman officer of exceptional ability and capability. So you have that touch also for the budget. We are also joined by our other guests, but I want to quickly go across to Shail. Shail, in specific terms for the markets, what is it that they are looking forward to? Because we have over the past several months seen both outflow of capital, perhaps on account of macro factors like the rupee, but also some taxation overhang as far as the market is concerned. Shail.
So, Siddharth, a three-letter word, tax, and another three-letter word, what do we do with FIIs? So there has to be something that comes in for sovereign wealth funds, that comes in for foreign institutional investors to stem this flow of very heavy selling that you see on Dalal Street. That is something that I'm looking forward to. Then fiscal consolidation as also a higher Capex, a lower borrowing, and of course, lots of external and internal reforms. Siddharth.
Okay, before I go across to Sakshi Batra, let's quickly cut across to our Business Today reporter, Karishma Sudani. Karishma, yesterday you broke that story about a fundamental change, and as sources put it to us, a unique change never seen before in 75 years with regard to the manner in which the budget will be presented, specifically Part B. Very quickly, what is it that we can expect as far as that change is concerned? Karishma Sudani. Okay, as we connect with Karishma, visuals there, Kartavya Bhavan, the new...
Karishma is joining us. By the way, just to say, you wanted to know what sari. Remember, Tamil Nadu goes to the polls in about 2 months from now. So it's a Kanjivaram sari. Nirmala Sitharaman comes from Tamil Nadu, Rajya Sabha MP from Karnataka. But the symbolism is there. Remember, Tamil Nadu is one of the states where the BJP has never really been able to make that major breakthrough. But they will hope that with the AIDMK, they can do that. And the symbolism is of her wearing a Kanjivaram sari. This is only since Siddharth wanted to know what specifically was the sari Nirmala Sitharaman would wear. Karishma Asudani joins us. Karishma, you want to take forward the question that Siddharth raised. What is going to be unique about the budget, particularly Part B of the budget this time?
Okay.
Okay. We'll wait and see if she can. Let me just introduce our other guest joining us. Rajiv Mantri joins us, author and investor. Welcome, Rajiv, to the show. Shankar Iyer joins us, veteran journalist, author, someone who's tracked the economy for what, 50 years now? You can reveal your age. Siddharth is worried about revealing his.
This is my 37th budget.
This is your 37th budget. That's pretty awesome. There is Dr. Sanjay Baru joins us. Dr. Baru also needs no introduction. He's authored several books. He's also been editor of several economic dailies, as well as, of course, been in the Prime Minister's office. What number budget is it of yours, Dr. Baru?
35th.
35th budget. Okay, 35th budget. Okay, 35th budget, 37th budget. Siddharth,
for the record, the 27th budget, since you will persist. But,
okay, good.
But Dr. Baru, do tell us, when the government says that Part B will change, it will be a unique presentation. Income tax changes already made. Indirect taxes now completely out into a federal council. The only scope left is tariffs and customs, and that has to align with the broader trade realignment. What would you have to say? And you can also see the finance minister right up there with the rest of her officials. Dr. Baru.
Well, I don't know what they mean by changing Part B, but you're absolutely right. This time it's going to be all about tariffs because that is where significant changes are expected. What we are not seeing in the last few years was the final statement of, what are your revenues, what is your expenditure. The combined statement was not being given in the budget speech. That was left for us to read in the other documents. Now, that used to be a standard practice in the past. So I don't know if she's going to revive that, because at the end of the speech, we need to know what is the total the government has collected, or how is it going to spend. Those numbers were out of the budget speech. Budget speech became essentially a political speech with Nirmala Sitharaman. So I don't know if she's going back to a standard budget speech, which is more about numbers than about policy statements.
Well, we just need to wait now pretty much till 11 a.m. to get those details. Two other guests who join us, Akshay Bhagwat, the Senior Vice President of Derivatives Research at JM Financial, and Manish Sonthalia, Director and CIO at MK Investment Managers. Very quickly to you first, Manish, what is it that would move the needle as far as market sentiment is concerned today with any budget announcement?
You're on mute. You're on mute.
Manish, you are on mute.
The only statement which the markets would be watching out for carefully would be the taxation part. LTCG, STCG, STT. You got to lower some of these. These are the only things which are worrying the market. Apart from that, the fiscal deficit number at 4.2%, your nominal GDP growth assumption of 10.5% translating into revenue collection, and incentives for exports because tariffs are hitting us, and plus your Capex number. Of course, fiscal 26 will be left with some sort of revenue shortfall as things stand today. So, FY26 Capex numbers are going to be whittled down in all probability. And in that backdrop, we should be looking at slightly elevated Capex numbers for FY27, around 12.5 lakh crores ballpark. Plus the borrowings number, gross borrowings number at around 16.5 lakh crores. If these things do come about, markets are going to fly.
Sakshi, take it ahead with Akshay for us.
All right, Akshay, just about 3 minutes to go before the markets open for us. The indicative action is that 13 points higher on the Nifty is what we could start at 25,333. Although it's gold and silver that's crashed right at the open. 17,000 rupees down for silver, 9,000 rupees down for gold. So the over the weekend kind of a crash that we see is now getting even graver. How are you looking at the markets? What will you watch out for? What will your pre-positioning be before the before the speech happens? How will you trade the markets?
Good morning to all. Good morning, Sakshi. And it feels so good to see so many cheering faces on a Sunday morning. Well, for the Nifty, the data positioning continues to be weak as far as the FIs are concerned. A lot of short positions continue in the FNO segment. Technical placement is more or less neutral. I would suggest go for a level-based approach where 25,500 based spot Nifty would be an important level to watch out for. There might be some bit of an uptick in the initial first hour before the budget announcement. 25,400, 25,500 may be tested, but we need to be a bit more careful. Only if market sustains about 25,500, I would recommend to go for a buy position. Otherwise, it's more of a muted approach the market might give to the budget today. Let's focus on some prices that have already come in. The Nifty Metals Index, ladies and gentlemen, is going to open 3 percentage points lower. A 6% down circuit on silver, on MCX, ditto for gold, and therefore all equity derivatives linked with them, Hindustan Copper, Hindustan Zinc, Vedant, National Aluminium, all of them slipping dramatically in trade. Broadly, the first 1 hour will be quiet, and then beyond 11 a.m. when the part B starts, ladies and gentlemen, the action will pick up.
So apart from, of course, the big picture, let's take a look at specific stocks that are going to be in focus. First of all, let's remind everyone, this is the first time, I think, that the budget's on a Sunday, or at least the first time in as long as I can remember. Yes, it is, say our experts who have been doing this for close to 40 years. So this is highly unusual. Markets have also opened, of course, to track all the action. Keep an eye also on pockets like defense. Keep an eye on rail. Keep an eye on anything that is PSU related, where we could see the government announce some kind of fillip or some kind of spending budgets or allocations. This is really what the market's watching out for. Any boost to manufacturing would be a huge positive. That's a bigger step that we're watching out for. Industry status for certain pockets. Of course, anything on exports and tariffs. So the hotel industry is going to be watching out. Pockets like jewelry, textiles, all of these, smaller pockets of stocks will be keeping a very, very close eye on the budget. So from a market perspective, it's not just the big picture. It's also for the broader markets and really where we could see some of that action. And key to track will be defense, will be rail. These are the pockets that have actually been moving ahead of the budget. So maybe not on the index, but in terms of a build-up, we've definitely been seeing it across some of these key pockets. All right, opening bell on your screens. Actually, what are we picking up on opening bell?
25,312. I mean, we've quickly slipped into the red, Abha, as far as the Nifty is concerned, just toggling at the flat line at this point in time. Let's also pull up the Nifty Bank there to see if there is any action on the banking space. Again, flat with a negative bias. So there is nervousness right ahead of the budget speech today, viewers. That's how are you looking at. But private banks, about 0.2% higher, giving us some hope that there could be something for the financial sector, something but PSU banks are down by 1.3%. There was a big expectation that something on the mergers consolidation front could be announced there. Broader markets taking a hit, 0.7% down for the mid-cap 100 index. Look at the small caps, even further down, 1.1% lower. So the larger mood, the broader market sell-off is pointing out to some nervousness. India VIX, the volatility index that tracks the greed and the fear in the markets, that's up by 3.9%, clearly indicating to a lot of nervousness on the D Street. Metals index, look looking at and mirroring the gold and silver fall. It's again 4% down. What Shell was pointing out, on Friday we had a massive 5% fall there, and the stocks that have been tracking, copper, silver, all of those stocks are down in double digits, about 15.5% lower for Hind Copper. Look at also in zinc at this point in time, a 10% lower circuit for Hindustan Zinc at 565. So all those gains that we've got in the last 1 month, many of them are going away. Hindalco down by 5%. Shell, what else are you watching out for?
Well, Sakshi, the top 5 losers are either metal stocks or related metal spaces, including MCX, 10% lower at 2275. This is, of course, the global sell-off that we are seeing. Let me just point out some positivity. We've hit upon 5 top losers. Let's look at the gainers as well. Well, the complete defensive market comes into 4. Look at Sun Pharma, 3.5% higher. And Siddharth, a very good beginning for the NSE partnership. IFCI, which is a major holder of NSE stock, is up 10%. It's the top gainer. You have Escorts in the green, 2.5% higher. The Nifty Auto Index doing pretty well because we are looking for the auto numbers to come in. And of course, the likes of Zentech ahead of the defense budget, 2% higher. Insurance stocks are doing well. That's what at least I am looking at.
So I want to come to you, Siddharth, on something because, given a slight nervousness in the markets, but largely the budget has been priced in. So unless and until there's some kind of fillip to growth, there's no real particular downside as far as, Nirmala really disappoints. I mean, if she absolutely does nothing, not even any kind of surface level consumer-led incentives or something, that's really when we'll see the markets nosedive. But otherwise, I see a limited downside. What do you think?
About 3 factors to remember. One, the Goldilocks movement that the Indian economy is going through, and our guests here would comment on that, but since we are focusing on the markets for the next few minutes, let me try and respond to that question that you made. Is there scope, necessity for tinkering around with further as far as our indirect tax architecture is concerned? Of course there is, but where will that happen? Outside of the budget. Is there necessity to look at further direct tax changes? Well, there could always be at the margins changing this, changing that. But remember, we are now in an environment where the government of India, the finance ministry, wants everyone to move to the new tax regime. No exemptions, lower thresholds of taxes to pay. And therefore, that is a policy direction that will continue. Therefore, what is left? It is customs tariffs. Now, customs tariffs used to take a lot of time in the budget speed. Dr. Baru would recall that it sometimes used to be 20, 30 minutes plus, including the days of Pranab Mukherjee as the finance minister. He brought that back when he came back to the finance ministry 2009 onwards. So effectively, the scope to tinker around with taxes and tariffs is limited to that extent. So what does it leave with? A statement of medium-term priorities, because remember, one of the criticisms of our budget making process is you announce something on 1st February. By the time the first policy architecture is made, half of the next fiscal year is gone. And that is why implementation becomes an issue, and outcome budgets were supposed to fix that for us. So I would say, don't surprise anyone negatively. Continue down the path of fiscal consolidation and solid, factual, credible numbers.
Go ahead, please. Let me just mark the markets. Nifty Metals Index, Sakshi, is now down 4.5%. This comes after Friday's loss of 5.2%. In the red are the PSU Banking Index, 1.35% lower. Remember, ladies and gentlemen, this is very heavy profit booking, nothing much to be worried about. We had seen a very sharp rally in the metal prices as also in PSU Bank. So money is moving from the book into the bank. Small cap index is down 1.2%. And it's a very light start to the market, Siddharth. 1,057 shares in the green, 1,200 in the red. The market is light. It could pivot if there is something interesting on the tax side.
Well, we have seen pivots in the past that used to happen when Part B would start. But Chetan Bhutani, who tracks infrastructure for us, standing by at Vijay Chowk. Chetan, very quickly, give us a sense of what the continuing focus for capital expenditure will be. Will it be in line trend with what we have seen over the past few years, especially post-COVID, or should we expect a major change?
Siddharth, we would be seeing a normal minimal hike that has been continuing for the past 3 to 4 years. Nirmala Sitharaman knows that the infrastructure ministries are very capable of spending their money, and they have been spending quite regularly, and so they don't have much of the budget revenue left. So now we will expect normal 3 to 4% allocation for both roads and railways coming up. Not much highway spending would be done because the ministry is itself managing its own expenses, raising money from the markets, getting its highways listed and monetized. So these strategies have worked, and in case the ministry will not be taking too much money from the budget, but a significant 3 to 5% allocation for highways, 3 to 5% for railways, and port, shipping, waterways, telecom sector would see the minimal hike going forward. Secondly, Siddharth, what we know is, of course, the MSME sector. The government would be focusing on MSMEs and agriculture, with the government probably giving a very big announcement for the agriculture sector and in the name of the PM Kusum scheme and its subsequent continuation.
Absolutely. Dr. Baru, very quickly, deregulation is something that is echoing across the world. We have had a deregulation task force. Some policy changes have already happened, and Rajdeep and I both heard Chandrababu Naidu Garu in Davos tell us that it should no longer be about ease of doing business, it should also be about speed of doing business. Is deregulation likely to be a focus, and what would its merit be if at all it were to be announced today?
Well, clearly it has to be. You know, you spoke about Goldilocks moment, and this has become a popular phrase. I've never understood what exactly it means, because what we have, if you see the overall economic situation, is a fairly good record on fiscal stabilization. But demand has not been picking up. Demand continues to constrain capacity utilization, which is below 80% across the manufacturing sector. Private capital, has not been forthcoming. There's been a stagnant share of private capital formation to GDP. So what we really need is to trigger the animal spirits. I mean, Nirmala Sitharaman herself asked a year ago of Indian business, why are you guys not investing? And I think the answer lies with the government.
That's absolutely right, sir. In fact, Sakshi, just come in on the defense theme, because defense is one of the themes, and this question that Dr. Baru raised, we have put it across to policymakers and to industry, and they say, listen, don't always expect investments to come in mature sectors. Look at new age sectors which are seeing investment. Explain this point of view from the defense pack on the screen. Sakshi Batra.
Today, defense sector is up by about 0.5%. So looking at it, there is a high expectation that there could be a higher allocation. Remember, this is the first budget after Operation Sindoor. So that's why this is going to be extremely important. We have been seeing a slew of announcements where the Defense Acquisition Council has been announcing massive orders over the last 6 months. This time around, again, there is an expectation. How much could that defense outlay increase by is the question. Will it be 10% all the way to 25% as well? That's the broad range that most of the experts are expecting. What it comes out to be finally is something that we will have to watch out for in the speech. But definitely, defense is going to be a talking point in the budget this time around. There will be a higher allocation in the budget, that the government will be doing. That's for sure. What is the percentage outlay? Plus, I think, Siddharth, the big question is, given the, lower headroom that we have shortfall of tax collections here. How much fiscal room is there to really elevate the defense spending is the key question. Will there be a way where the finance minister will be able to raise the non-tax revenues and be able to spend big on defense? Looking at the geopolitical scenario is something that we need to watch out for. It's a complete changed world order, and we need to see how the government will be maneuvering.
Shankar, come in on this, because the point that the survey made about a disinvestment approach which says that the government will perhaps hold up to only 26% and therefore a second round of further divestitures. Now, there have been questions around individual companies. Let's not talk about that. But taking that point forward, how much of a scope do you think? You saw that macro chart in terms of percentage trend line shifting downwards as far as defense expenditure is concerned. But from your point of view, how much of scope is there for a post Operation Sindoor moment to be captured as far as defense allocations are concerned?
See, the defense allocations, for them to translate into actual acquisitions and purchases takes time. So I expect that the announcement would be a kind of medium-term perspective, just like with the NATO guys, they are saying we will reach 3% of GDP and 5% of GDP. India will probably present, Nirmala Sitharaman's budget should sort of probably give you a roadmap for the next 5 years on how they will increase or ramp up spending in defense. Remember, you may not have a headroom this year, but you can always promise that there will be headroom in the next year and the year after that. And that should be the approach anyway for defense acquisitions, because the process is very long drawn.
Right.
And as far as the story, you mentioned the PSU disinvestment story. I think whoever came up with this idea of 26% sort of never looked back at it, at the government's own record. Since 2004, the 30 companies have been listed through various IPOs. These 30 companies are valued at around 19 lakh crores. Out of these 30 companies, 29 companies, government owns more than 89%. So let's get to 51 first, then we can be ambitious about 26. Let's sell some stuff first, I mean, this is...
Fair point. There is so much
dead
scope.
duck, actually.
Abha, you wanted to take it forward with our market guests. Viewers, we'll stay on the markets for another few minutes and then go back to broader policy making. Abha.
Absolutely. I think, just before I do that, Siddharth, I know he asked everyone else, but I want to ask Rajdeep how many years he's been actually observing the budget. Yes.
I can tell you a little story. In 1994, I was at NDTV when we were commissioned to do the post-budget reactions. So I recall standing, and this was Manmohan Singh's probably third or fourth budget in 1994. I recall standing in front of the BSE in Mumbai on Dalal Street, and the connection kept going off because the technology wasn't good enough. So we were doing it for Doordarshan, cracking large OB van, I think had been placed just outside BSE.
I remember those, yeah.
So that's my first memory. And it is a day since then that I dread, because as an economics graduate, it forces me to almost go back and start reading about things that I thought I had forgotten over the last 30-35 years. Yeah, but it's been a long time, and I think that was Manmohan Singh brought that entire early 90s brought excitement to the budget. You can, whichever way you look at it, after 1991, a certain excitement came in, and it's never really gone. With the Chidambaram budgets in a United Front government, then you had Yashwant Sinha, Jaswant Singh. Every budget had something that became a major talking point. And I think that's been the big change that's taken place. Rajiv is probably the youngest here out of us all in terms of tracking budget. But as an investor, I can very quickly ask you, is there that excitement that exists today about a union budget? Or is there a sense, as Siddharth pointed out, they just want the markets just want the finance minister not to do anything that will harm the budget or harm the idea of the economy. No retrospective tax kind of bombshell suddenly being brought in. That's all that people really want.
No, I think once you achieve the major tax reforms, the budget becomes a more mundane procedure and process, as it should. Obviously, the earlier era had number of major policy changes that required to be implemented, and the budget became a platform to announce those.
And also, so much more happens outside the budget, and you've got the geopolitical risks that are taking place. I know friends of mine who are more interested to know what Donald Trump's going to do with Iran, which they fear is going to have far greater impact than what happens at home. He's made an announcement today that India has agreed to buy oil from Venezuela, not Iran. Now, he does these statements.
But Rajdeep, that's fair enough. 2 days back, Prime Minister spoke to Delcy Rodriguez, Venezuelan stopgap president or Maduro's stand-in president. So
but why should Donald Trump, my only problem is why should Donald Trump be making that announcement? We are a sovereign nation.
There is really no announcement. We've always been buying Venezuelan crude. It was the US and allies who sanctioned Venezuelan crude. We couldn't buy it and we had to switch. Now if it's available on the market, without sanctions, it's
my point is, why should Donald Trump be making whatever decisions are taking us? Anyway, the pictures coming in are part of the ritual of budget making, where the finance minister meets the Rashtrapati, presents a copy of the budget to her,
in
copy, and then sort of moves on her way to Parliament. So this is all part of the act of budget making. Next to Mr. Murmu is the MOS Finance.
Yes.
And he's also now the UP BJP president. So Mr. Chaudhary wears various hats. So Draupadi Murmu and Nirmala Sitharaman, and probably, of course, you've got a woman president and a woman finance minister. That doesn't happen too often. Today I was recalling when That when they spoke of Nirmala Sitharaman's 9th consecutive budget, Nirmala Sitharaman first came on a TV studio on a show I did in 2008. And the only reason is I rang up the BJP person and said, I want an English-speaking spokesperson. Because they were giving me only Hindi-speaking spokespersons on an English language show. And they said, oh no, we've got this new spokesperson, would you like her? I said, sure. To the credit of Nirmala Sitharaman, she came perfectly prepared, focused, came to the studio. Didn't even say that I want to do it from some external Zoom link. There was no Zoom also in those days. Came and, it's quite a meteoric rise when you think of it. She's been Minister of Defense and she's been Minister of Finance.
And Commerce. Let's not forget
So
Commerce.
In 17
in
years,
2014, yes.
since I first met her, Nirmala Sitharaman यहाँ से वहाँ गई है, हम यहीं के यहीं रहे. That's the only difference.
Before we slip into a break, a quick look at the markets. Wrap it up for us, Sakshi, on what the markets are looking like right now.
Absolutely. So the markets are nervous. I mean, we are at 932 at this point in time. And what we are going to be probably asking the question is, after we've signed mother of all deals, is it going to be mother of all budgets that Finance Minister is going to present today? And that is something that the markets will be watching out for. Remember, the markets are down 4% down on the Nifty ahead of the budget all of January. And the Nifty is now only looking at any good news by way of taxation that can probably lift the sentiments on ground for investors at large. At this point in time, a nervous getting into, the budget speech at this point in time.
Okay.
Fingers crossed for all the sectors.
All right. At this point, let's thank our colleagues from Business Today, Shailendra Bhatnagar, Abha Bakaya, and Sakshi Batra. And viewers, this is also a beginning for us for the Business Today show, the markets show opening and closing here on India Today, brought to you by the National Stock Exchange. As we continue our coverage, I want to toss this one to you, Rajdeep. In terms of that term that you have dealt with, dream budgets, the scope for dream budgets again changing because the Indian economy has been opened up, license Raj has been dismantled to a very, very significant extent. Yet budget making continues to fascinate everyone, including us who do it for a living. What do you think is your most seminal memory of the budget days?
Look, I'm not going to go into the past. You'll make me feel even older. But I'll only say that these words used, big bang budget, dream budget, I think we should refrain from making, these catchwords. They make great headlines. You remember Chidambaram's budget in 97 was sort of billed as the dream budget. Then we've had budgets being built as big bang budgets. I think budget making should be prosaic. What should be there is a vision. I have absolutely no problem that budget making increasingly should be about the vision and the direction in which you're taking the government. The word you used is the buzzword at the moment, deregulation. Everyone you talk about to says this budget will be about deregulation. Now what does that mean? I know Shankar has been writing about it for years. And just one more point.
Yeah.
For years, we have not focused on state budgets. As the economic survey also pointed out, you've got about 19 states now with high revenue deficits. How much do we actually look at state budgets? State budgets actually at the end of the day affect far more.
No, Rajdeep, and that is why one of the other things, and that happens every 5 years, will be very significant this time, which is the report of the 16th Finance Commission headed by Arvind Panagaria. That will now decide what will be the share of states in the overall central kitty. And remember, from 2001, it's gone.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
two things which, market wants. So one is, they want the direct thing. I want capital gains to be cut it for everybody. Now, because, foreigners have been selling so much, it is, cut it for the foreigners at least. Where, there's some actually logic to do it, because India is probably one of the few or maybe the only country where FPIs pay capital gains tax. Most other countries, FPIs do not pay capital gains tax. So at least for the FPI, there's a logic that we want to cut it for them. And I don't think they'll do it for the locals because, they just increase the capital gains tax. So, if they keep increasing and cutting every time, then it will be somebody will say you're not able to come with a stable taxation. So, one is what people would want direct. And maybe here, what they could think of doing is if they can do on the FPI, they can remove the taxation. Though their view has been that we don't want differential taxation for the foreigner and Indian. And the other thing is what they do to provide a thrust on the economy and ultimately what comes down to earnings. So for me, the wish list would be you do capital expenditure so that the economy gets a thrust. Because ultimately, one reason why markets didn't do well whole of last year was the earnings never grew. So the last 6 quarters earnings have been in single digit. And ultimately, markets are slave of earnings. So if you have a single digit earnings growth, then market tends to reflect that.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
On business today. It's budget morning. It's Sunday, first budget ever on a Sunday. We're deep in already tracking all the possible outcomes. With me, we've got Sakshi Batra, Shailendra Bhatnagar, the entire Business Today team with you this morning, counting down to the speech at 11 o'clock, keeping an eye on market action as well, which currently is looking pretty tepid ahead of the budget, waiting and watching to see if there's any kind of positive or negative surprise. We've got our market guests with us as well. Arun Kejriwal joining us this morning, Arun. Good to have you with us. Let's kick off with your expectations from the Finance Minister this time around and the 13th budget under this current government.
So, good morning to all of you. I believe today at the end of the budget, the market would be cheering not for anything else, but for the fact that they have opened up what they feel is the best way to tackle tariff Trump. Okay. Now, he has been doing all sorts of things, good, bad, ugly, and less said about him, the better. But there is a challenge which has been thrown not only to India, but to the world. Not having got the Nobel Peace Prize, he probably wants to invent a new prize for the person who creates a war. And that is what he's up to. India was touted as a very good friend of the US, but now it appears that there is jealousy at the fact that we have moved up the top countries in terms of ranking and are now fighting for third spot. So you already had the EU-India trade deal. Prior to that, 2 months ago, you had GST 2.0. And now you have an opportunity where the government sets direction to become competitive globally and to counter what the Americans want. Three things is what I expect from this budget. One is clarity that India has to become not only make in India, but competitive, making in India and exporting to the world. The simplest way of doing this is extending PLI schemes for a number of products. Now, PLI has two major advantages. You create capacity, you manufacture goods, and you sell it. Only then does the manufacturer, the businessman, get some money. It's not a capital subsidy. The second thing that we need is to bring further stability to our capital markets. We need to get sovereign funds into India who have a minor complaint, if I could say, that they are being taxed at much heavier rates than what they do globally. So some sort of redressal of their complaint, and mind you, they are sovereign funds, not people who are doing punting in the market. The third thing is for our domestic markets who have become a force to reckon with as far as the FII unabated selling is concerned, is some rollback of the tinkering that was done to capital gains tax a year ago. That could happen. I believe these are broadly some of the things that one should expect. And if we do hear something like this coming in, you can be rest assured that the market would be cheering Nirmala Sitharamanji.
Right. Arun, good morning to you. I want to understand from you, this budget really comes in at the backdrop of a lot of geopolitical tensions, the Trump tariffs as well, that have truly impacted our export-oriented sectors. What is essential for the finance minister to do at this point in time? To continue on its growth-focused budget schemes, or to protect the economy largely from these external shocks? Can both be done at the same time?
So you've asked a very valid question, Sakshi, but let's understand the EU deal has probably happened after about 18 years. Europeans have been hell-bent on selling two products to India, one automobiles and two their wine and liquor. Both have been included. And surprisingly, it's almost a week since the trade deal has been announced, and no one from these two sectors has literally complained or whined about what has been done. I do understand it's early days to read the fine print. It's for the first time that we have such a long program rolled out where reduction in tariffs would happen over 7 years. This is pragmatic thinking, and it gives time to the local manufacturers to stand up and compete. Something similar is expected in a larger range of industries where the Indian industry can stand up on its own and become competitive globally. This is what I am critically looking for, and I expect the FM to deliver.
Right. A very good morning to you, Arunji. I'm sure the first thing that comes on the mind of every investor and trader is this very sharp sell-off that we are seeing now in silver, gold, other metals, and of course their equity derivatives on the Lal Street. Now, what are your views? Is this a shake-off that's happening of the speculative bubble that was being built, or is this the end of the road for metals?
So, sounding positive, not trying to hurt people. Metals, particularly precious metals, bullion, had become, let's join the party, isko kharid lo, bina kuch kiye paise ban jayenge. And when I'm talking of paisa, I'm talking of tons of money. So it was the talk at maybe a kitty party, maybe a casual meeting in the evening, morning walk, and what have you. What led to this sell-off is primarily what Comex did in the US, where they raised margins sharply and shook off all those party poppers who had just come in, walked in, trying to make a quick buck. Bull liquidation of the highest order happened. I believe it's good for the commodities, precious metal, that this shake-off has happened. And with such a rise, a good sharp correction is always welcome. You will find a lot of people who had speculated beyond capacity, beyond means, getting off, panicking, liquidating, and probably in the next couple of days, things will normalize. Understand that this rally has been triggered by larger geopolitical implications, which include de-dollarization, the attempt and serious effort of global central banks increasing their holding of gold significantly, and some of them selling off this, buying gold by selling off treasury bills of the United States. Now, this is something that has led to gold being where it is, and geopolitical tensions, war possibility in one place, somewhere else we had the president being picked up overnight, etc., has all led to this. So, comfortable with what has happened, it doesn't mean the rally in bullion is over.
Right. Arun, just we are getting the GST collection figures now for January 2026. It is at 1.93 lakh crore rupees, the GST collections. The big question ahead of the budget will be, we have been seeing a shortfall in tax collections, both direct and indirect, from the budgeted estimates that we had. Looking at this tax shortfall, how much room does the finance minister have to continue to spend big and do the heavy lifting that the government has been doing for last couple of years, with the private investments continuing to be subdued? How are you looking at it? And with the new GST collection figures, what is your sense there?
So, Sakshi, let's understand, in previous years, I'm talking about 10, 15, 20 years, the deficit kept on going up without any control, if I could use the word. Now you find there is a financial commitment and deficits are being contained in that. If the government is of the view that the time has come to support economy so that we continue the spend, do not cut down on spending, sacrificing some amount of financial discipline to take industry through very, very difficult times, I believe market will welcome that. It's not something to get overtly worried about, but it would be taken in its stride. Coming back to your important question which you raised, that Capex from private sector is just not coming. It's a fact. Let me give you another dimension to this. Of the 100 odd main board IPOs which came last year, less than 10% of the IPOs had an object where Capex was the reason for fundraise. It was primarily repayment of debt, working capital, and so on and so forth. Very clearly, even IPO-bound companies were not looking at Capex. So this Capex cycle has to revive, and with the EU trade deal done and government post this budget inducing Capex expenditure, I believe we should be back on track where the deficit in Capex spending from private sector starts kicking in.
Arunji, in this fairly decent fall that we are seeing in metal stocks, be it National Aluminium, Vedant, Hindustan Zinc, Hind Copper, in particular Hindalco, is there anything at all that catches your fancy at these 10, 15, 20% lower prices, or are you waiting for much worse to happen?
So whether it happens today, tomorrow, or day after, this entire pack will bounce back. Understand what is happening in this sector. Aluminium and copper are two requirements for not only the electrical power transformer, electricity distribution business, but also for a number of capital goods that you talk of. On the other side, if you look at steel, which has also fallen very sharply, steel forms the basic for any manufacturing activity that you have. All of this rose in a pack and fell like a thud. So it is when the bottom of the pyramid entered this sector expecting sharp, instantaneous gains and profit that this sector cracked. And I think it's shaken out a large number of people with hefty losses. Something like this is good for the health of the market, and sooner than later you will find the rebound kicking in, because there is a genuine demand which is coming up and backed by mining shortages which are natural in such circumstances where you have limited resources available for mining.
All right, let's also welcome Punita Kumar Sinha, who will be joining in just shortly in the studio in Noida, right here in Film City, with us to decode for us what should be the massive expectations from the upcoming union budget of 2026. Remember, this time around, viewers, it's the markets that are penciling in a lot of expectations with regards to any kind of tinkering on the LTCG or STT that could finally revive the sentiments. Punita, if I can come to you, good morning to you. Tell me, you've been speaking to so many foreign institutional investors. They have been at bay when it comes to India and Indian markets. 40,000 odd crore rupees is what they've pulled out in January alone, on top of the 3 lakh crore rupees in cash markets that they had exited in 2025. What is it that the finance minister can do in this budget to bring the FII money sustainably back into India?
Well, you know, the reasons for why FIIs have pulled money out of India are not necessarily very short-term in nature. The main reasons are that India's valuations were high compared to other markets. That was the first reason. Second was that the general view that India wasn't doing enough on innovation, particularly on the AI front. So on that front, I mean, if there is some Capex that the government can do, or some signaling that the government can do that India is going to become more focused on AI, that might help foreign investors, really relook at India. The third thing is that, foreign investors also were very worried about the Indian IT services sector as related to, again, AI investments, and whether there is going to be enough jobs for all the population that, the young people that India is generating, because IT services was a very big employer. So I think unemployment, skilling, all of those areas the finance minister could potentially add some budget allocations.
All right. Good morning to you, Punita, and a very warm welcome. You are the absolute right person to ask what Mr. Trump will be doing next. According to him, we are starting to buy Venezuela oil, as also declining to buy more Iranian oil. So what exactly is he thinking, and how does his overarching presence help or not help Nirmala Sitharaman?
I mean, well, I think it's a very tricky to predict President Trump's actions, or even Finance Minister Nirmala Sitharaman's budget, which is going to be coming up soon. One shouldn't be hazarding a guess on what is actually held in very closed door meetings. But I think one thing, that the trade deal between President Trump and India, especially after India signed the EU agreement, I think US could feel that India, isn't going to yield, and India is going to go on its own agreements with other countries, and so there could be a softening of stance that might happening by President Trump. I mean, I think that is one area that I think, and I hope that this year we could have a deal.
Punita, it's so good to see you in the studio. First of all, thanks for joining us today. We usually have Punita, on Zoom, troubling her at all kinds of unusual times, as she's usually in the US. Now, when it comes to FPIs, also any expectations on tax, even if it's wishful thinking, whether it's some kind of relief for FPIs, whether it's broadening the base a little to allow for more pools of capital to access Indian stocks, simplifying buyback taxation perhaps, anything that you feel could be plausible this year in the budget?
I mean, I don't know if that will be coming or not. I mean, if it comes, yes, it could provide a short-term trigger. But again, as I mentioned, the reason the FIIs have been pulling out of India are related not so much due to taxation, but due to other reasons. And so while this, if it happens, could provide obviously a sentiment boost, it isn't going to be altering the other reasons. I mean, one of the other things that I do also want to add is that, India is a good hedge against any kind of correction in AI. Related stocks, and we've seen what happened with Microsoft on Friday. The stock really collapsed, and I'm wondering if at all this kind of concern about the huge capex that is required for AI by the tech companies globally starts taking some of the sheen off those stocks, then I think again India would be a good hedge and could benefit, and that could bring FIIs back as well.
You yourself are a very big investor in India apart from other markets. Punita, what exactly is on your radar or on your buying list should the price come to your satisfaction?
Well, first of all, I think one should wait to hear what the budget outlines, because anything that you're thinking before the budget could change dramatically after the budget. But in general, I would say that we have to, if there is a trade deal that works out, then one should keep an eye on exporters. At some point this year, I would hope, I don't know when, that exporters should get a boost. I would also focus on domestic companies, Capex related, because I think investment in the Indian consumption theme, whether it is real estate, whether it is domestic consumer companies, whether it is infrastructure, manufacturing. I think those are areas that would be a good place to invest for the long term.
Punita, I want to ask you about the falling rupee and the depreciation that we've seen here right ahead of the budget. Do you think the government will pay attention by way of budget by announcing anything that we could understand by way of what could be the trajectory going forward on the rupee, or will it be again next week when the RBI comes out with the policy, it will be left to the central bank to really tackle? So far, they have allowed the rupee to fall despite some little interventions that they've done. Will this be the first time when the government can do something to protect the rupee?
Well, I think that's more an RBI initiative to work on the rupee. But, it is not just the rupee that is weakening. I mean, there are a lot of currencies that are weakened, including the US dollar. So we've seen that, there has been a general debasement of currencies and the money has gone into gold and, precious metals. And some of that we saw reversing very dramatically on Friday. And so that itself, if that, that reversal could help some of the, currency strengthen. But main reason, of course, is that if we have a trade deal, we collect more foreign exchange, we can export more, and we can draw in a lot more FPIs. Those are the things that will really help the rupee.
Well, Sakshi and Abha and Punita as well, a bit of cheer. The Nifty was very briefly in the green, but slipped back again in the red. The Sensex, of course, is in the green, 44 points higher. The Nifty Auto Index, thanks to all the numbers that are coming in as far as monthly sales are concerned, is in the green, as also is the Nifty Energy Index. But apart from that, it's a pain as far as markets are concerned. The Nifty Metals Index, which in early trade was down about 4.5%, is down just 2.5% now, which essentially means that either shorts are being covered on those that were taken on Friday afternoon, or you have some quality buying coming into, counters such as maybe Vedanta, maybe Hindustan Zinc, maybe Hindustan Copper. But pain as pain can there be in the metal space. Sakshi.
Absolutely. Punita, let me also come to you when it comes to the customs reforms. There's some heightened expectation there. What can really come in there, and why is it essential at this point in time, for the government to keep focused? Do you think the inverted duty structure really needs correction at this point in time?
Well, the duty structure should probably move in line with the tariff agreements that we sign with various countries. So we can't just cut duties without having trade agreements with countries. I mean, at least on the bigger items. So I am not sure how you can do that in isolation.
So, Punita, if you had to pick 3 key reforms that you'd want to see this time in the budget, giving everyone an incentive to really look at India, perhaps with a little bit more emphasis, what would be the top 3?
I mean, I think government Capex, because that is required. Our nominal GDP numbers are quite low, and we are seeing, the slowdown in earnings growth. What used to be more than 20% is now, for the average Indian company, is now already down to 10 to 15. And so nominal GDP, anything to boost the nominal GDP growth. I think some kind of more investments towards AI or signaling that this is an important area for Indian companies and the government to invest. I think that would be important. And then I think with respect to skilling, because again, one of the concerns is that we have a very young labor force and we don't have enough jobs, and particularly with the IT services sector not hiring as aggressively. How do you skill these young people so that they are productive and can contribute to the growth of the GDP?
Punita, one essential fact that we have to discuss with you is that how significant will also be the Finance Commission's report, as it will be also tabled alongside the budget this time around. Do you think changes in the Finance Commission can in any way create meaningful fiscal space for the government, given the shortfall in taxes and the other revenue sources at this point in time? Is there going to be any change, do you see, to the 41% devolution to states here?
I actually haven't focused so much on the Finance Commission, quite honestly, as to what and how that would impact the fiscal space. But in general, I think, our state revenue and finances have to be better managed.
Fair point. I think this is as good a time as any to look at stocks. How are they behaving in terms of top losers? Apart from what's happening in the metal space, there's Karur Vyasa Bank. Remember, banks have also shown a bit of profit booking. This was at a record high on Thursday and Friday, 4.5% lower. Angel One is down. So is Radico Khaitan, BSC and EID Parry. I'm just giving you a broad brush. There's no volume in the market except for the metal counters. That's because we're waiting for the speech.
So 1 hour to go.
Absolutely.
1 hour to go, and then we'll see what happens. And How long do you think the speech will be this time?
I don't know, it can be longer in the part B as we've been discussing, Abha, because that's a different aspect, probably a unique aspect, nothing that has been seen in the last 75 years. Part B usually is just about 15-20 minutes or so.
Exactly.
This time it's going to be longer as we are told.
So 1 hour, 15 minutes.
That's last time she'd really concentrated it, hadn't she? She'd really managed to keep it tight.
Yes.
So let's see. Well, if it's good news, we don't mind how long it goes, right?
Absolutely.
And it's a Sunday.
And it's a Sunday, yes.
We have more guests, I think, joining in with us. So let's welcome, I think, Rumki Majumdar, economist, Deloitte, is with us at this point in time. Hi, Rumki, good morning to you. Tell me your biggest expectation. What do you think can be a make or break in budget of 2026?
Good morning. Nice talking to you all. And make or break. Well, what I believe is this budget is going to be all about reform and perform, because that's what the government has been kind of indicating towards. From last year onwards, they have been on bringing in series of reforms, be it GST or tax exemptions and the labor policy reforms. Now I think what they will focus is on the supply side reforms, ensure that there is more of ease of doing business in the economy and ease compliances, make sure the regulatory hurdles are kind of moved out. That's one. Second is, I think, MSMEs. I think that sector has suffered a lot, so a lot of support is required to the MSMEs, and I think there will be a lot of focus on how to make sure that MSMEs have access to credit, has access to skills, has access to technology. And I think third, I think it's my wish, is the fact that the government also can focus on R&D and innovation. How can they incentivize the private sector to jump into the R&D and innovation? Because now it's a game of play at higher margins, higher value add, be it manufacturing or services. And that's where I think there should be a focus on how they can focus on skilling, AI skills, AI investments, and R&D. So yeah, three wish lists that I have.
In terms of the kind of growth potential we're looking at here, given, as Punita also mentioned just now, nominal GDP still could be a little bit better. If we look at a sort of more concentrated push in terms of how we can maintain or alleviate the growth, accelerate the growth rate, would you narrow it down even further?
So accelerating growth, to be honest, see, the government has very few ammunitions left to boost the demand side. They have done all what they could have. Maybe a little bit here and there, but on the supply side, there's a lot can be done. Because see, if you look at a push, it comes from the demand side as well as the supply side. And this is where I think the private investors can actually do a big push to the overall GDP growth. Private investment so far has been modest, and I think it's not because they do not have the appetite. If you look at the outward FDI investments, these companies are going out and investing. Right now, they need to come in and invest in India. And I think that's where the QR, that there's an appetite to spend, but it's just that they need the reason, because they see a lot of hurdles, a lot of startups, they themselves are who want to come up, they can be quickly doing business. So infrastructure side, again, the government has spent a lot on Capex. So now they need to broad base, they ensure that the tier 2, tier 3 cities can also participate in this growth story of what India is seeing. If all these can be ticked, I think the growth will be much more self-sustaining, broad-based, and actually can ensure that we actually touch 7% in the long term over the next 25 years.
All right, let's take a look at some breaking news coming in on your screen as well. Let's just pull that up for you, all the latest as we count down to budget, and just about 45 odd minutes to go now before we hit the speech. And everyone's counting down to see what the finance minister presents this time. Now, Jan GST numbers have come in. Remember, we're at the first of the month and it's a Sunday, so we get to report all of these numbers for you live. GST up 6.2% on year. We've got strong GST mop-up numbers coming in January, so everyone concerned about some amount of tax shortfall, I think these indicators are showing otherwise. Strong indirect tax collections as well. We are seeing at this point of time. So Jan collections are good, indirect tax collections are good, GST is at 1.93 lakh crores for January alone. So it's looking good altogether. In fact, if we just take a look at the build-up of data ahead of the budget as well,
GST is up 6.2% firstly on year in Japan, as I mentioned, but we have had strong growth numbers coming in from the GDP numbers. GST mop-up numbers are also looking good and strong. All of this, Siddharth, is just building a case for the government to spend more. We know that there may be restraint fiscally, but the data is all stacking up and looking really positive.
On certain budget heads, we've seen in the past that even if there is allocation, spending does not keep pace. At this stage, let me quickly go across to Yazdi Nagpurwala, the CEO of KPMG in India. Yazdi, welcome to the show. As Abha was taking us through some of the latest data, it's very clear that attention needs to also be focused on how our states are performing, but let's leave that for some other time. What do you think is the most important item that this budget, Nirmala's ninth, has to deliver on today?
To my mind, one of the most important aspects is to protect growth. We have seen in the last 1 year a huge amount of uncertainty. We've seen a trade imbalance, if you like, and one of the key things that we need to now do is protect our growth, our numbers, whether it's 7.4%, as well as parallelly. Whatever we spend, we need to spend it smartly. Whether it's Capex, consumer, we'll see how that pans out. And the third aspect I would bring out is the element of policy certainty. Now is a good time to consolidate. It's a good time to bring in simplicity in our reforms.
Okay, let's also go across to Karishma very quickly. She's, of course, live on ground, keeping an eye on all the action as we count down to the budget speech. Karishma, over to you.
All right, as we get Karishma mic'd up, Yazdi, staying on that topic further, in terms of the scope for tax-related realignments, there is, smaller things like TCS. What would you say we can expect as far as tax is concerned? Because some of the big heavy hitting happened last year, and GST, as we all know, is outside of the purview of a budget announcement.
The positives come from away from tax as well. There can be a simplification of the TCS. There is, of course, a focus on increasing the pool, deepening the pool, and things like that. We've seen it over the years, how things have improved. But to my mind, it's more than cutting rates and things like that. It's more about predictability. It's more about dispute resolution, whether it's faster refunds or lower compliance friction. And these are the aspects. We have a lovely opportunity this year to move the needle on those fronts.
Yazdi, as far as customs is concerned, that remains completely within budget ambit. And there are two things that one has picked up in the run-up to this budget. One, some sort of amnesty scheme, maybe a customs version of Vivad Se Vishwas Tak. And also a broader realignment of tariffs given our recent trade engagement and the fact that we are getting into deals which in any case require us to promise a lowering of headline tariffs. What do you think can be expected on the customs front?
Yeah, on the customs, I would say we have an opportunity of lowering some elements, which in turn will improve our productivity, which in turn will improve our competitiveness on the exports. So if we have an opportunity to lower some elements of customs, but with a corresponding visibility of how that improves our competitiveness in the exports, I would think that will be welcomed by the industry.
Okay, Yazdi, one more point, and I'll then go across to Punita. We've been trying to fix some audio issues here in the studio. In terms of the indication by the government that the nature of the budget Part B, which was the finance bill, will change and this will be unique 75 years. You want to hazard any guesses that what could this imply, and if a medium term, long term growth statement is Part B, is the very structure of the statement of accounts being changed?
I'm sorry. That's a very, very tricky one, and I wouldn't respond to that.
Okay, Karishma, tell us quickly. You've been reporting this story since yesterday. What is this Part B change likely to be? Are you any more wiser now that we have perhaps 40 minutes left for the budget speech to begin, Karishma?
So that the Part B, I wouldn't call it a change. I would rather call it an increased emphasis on the fact that Finance Minister Nirmala Sitharaman, in her 9th budget that is going to just commence in next few minutes, will focus mainly on the taxation part of it. Now, I was sharing this early in the morning with Sakshi also, that yesterday evening I went through her past few budget speeches, and I also tried to time them. Between say 108 minutes to roughly 75 to 80 minutes on an average. If I pick up 80-minute speech,
right,
she focused 35 minutes mainly on the Part B, which is the direct and indirect tax reforms, and they've been pretty direct.
Right.
In terms of the announcements that she's made, be it the last major income tax cut that she had announced. Now, this year and this budget, why we call it a big bang Part B budget is because we are expecting that she's going to definitely go beyond 40 to 50 minutes on just emphasizing on Part B. And Part B, when we talk about Part B, we are talking about direct and indirect.
I am looking forward to, Karishma, what A plus B will equal to, but
I was just going to say.
Hang in there. Yasdi, I'm coming to you, but if we can get Punita in on the frame as well. Punita, you are here with us. Do you have any insight that you could offer as to what, and we are completely speculating, viewers, what this rejigging of A and B could eventually be aimed at?
I have no idea. I think this is very cosmetic, quite honestly. It won't impact the growth.
Okay. So let's discuss business, because there's
Which
enough that is
excite the market more. That's the question.
There's enough that is discussed on the margins. Punita, in terms of policy focus and a sectoral focus, either from a boost to that sector or from an allocations perspective, what would you highlight?
No, I would think that the need of the hour is more manufacturing Capex. And for that, certain incentives need to be announced. And that is important because once we have the trade deals, we will need to have more manufacturing capacity. And that would require more incentive, whether it is PLI schemes. And manufacturing is, of course, very broad-based, including, sectors like pharma and other energy, oil and gas. I think one of the other areas that could be highlighted this year is mining, because the whole world is talking about critical minerals, and India hasn't invested enough in our mineral resource sector. So there could be some incentives there. And I think agri as well would be an area. And then I think innovation, whether it's R&D, AI, or any other kind of innovation, that is going to be very important. So from a market impact standpoint, Punita, and more immediately sectoral reactions or sectoral hopes at this point, outside of manufacturing, should we look at defense? Should we be looking at perhaps power, renewables, some of the other pockets where we could see the government sort of apply some kind of incentives? Where else would you be looking? Now, for instance, like if you increase the AI spend, you need to commensurately add capacity on the, computational needs from an energy perspective are quite high. So you will need to invest more in the energy sector as well, real estate, because data centers, etc., are needed. That could be another sector that could benefit. So yes, energy, power, minerals would all be required. And then of course you have to keep doing the Capex, that your normal Capex
to keep up with the nominal GDP growth,
Right.
you have to keep investing in infra.
Yes, the banking and financials, manufacturing and PLI, and I'm sort of putting, trying to summarize Punita and other points, tech and digital economy and energy and green transition. These are the 4 pillars that I am personally looking forward to. What do you think will be the sectoral focus out of this 4-pillar approach that I just highlighted?
To me, our growth comes from Capex, it comes from infra, and we have an additional dimension now of the digital infra as well. And that is a segue into energy aspects. So as Punita mentioned, once we go down data center, you need real estate, you need water, you need power, and those aspects have to be, without that you are not going to succeed with some of these initiatives. But parallelly, I'd also bring in defense, which is the need of the hour. We've seen in the last 1 year that nations are stronger with defense capabilities. So I think that will also feature in the scheme of things.
Let's take a look at defense stocks, because this has been discussed ad nauseum, the post-Sindoor effect and what it means for defense stocks and whether there will be a higher allocation in the green, the Nifty Defense Index, but that could just be expectations. Now, some of the newer age work that is happening in the defense space involves a lot of high-tech, drones, software, and perhaps that value chain is not being captured by all the existing companies. So we will see, given the changes and the lessons that are being learnt in warfare, plus with that ongoing massive battle war in Ukraine. Rumki, I want to bring you in. The macro backdrop for this budget could not have been a better one for any finance minister. There is, of course, a big overhaul of all the big data that is going to happen separately and outside of the budget. But in terms of setting growth priorities, what are the numbers that you yourself are factoring in that are likely to be announced in the budget? Rumki, I think you are on mute. You need to unmute yourself.
Sorry.
Yeah, go
My
ahead.
apologies.
Go ahead.
Hi, Siddharth. You're absolutely right. This is one of the budgets where pretty much all economic fundamentals are very good. If you look at the inflation, it's all-time low. As you see that the current account balance, it's one of the lowest in a decade. Fiscal deficit, the government has met its targets every year consistently since the pandemic. And if you look at the growth, first half of the fiscal year was 8%. Nobody even expected. So fantastic economic fundamentals. And that's where I think the government will take an advantage of being in a very sweet spot, people say Goldilocks moment, to ensure that we kind of keep the momentum going forward. And as you say, what are the economic parameters? I think where it will need to look at is as FDIs. We have seen FDIs, net FDIs being very low. It's less than 1 billion this year. Not because that the gross FDI has been very good, actually, is the repatriation, which means there's a lot of confidence, low confidence among investors in India to continue to repatriate. And that's leading to repatriation. And that's what the government will try to address. Second is the currency depreciation. We have seen currency depreciate really fast, and that's where I think the government will try to focus on ensuring, giving more confidence to the investors that yes, India is a destination to invest going forward. And that's why all the FTAs that we are signing in basically will help ensure that a lot of investments come in. So these are some of the parameters that the government will try to address by the reforms, by the performances or executions that they announce during this budget.
Okay, Yazdi, I'm coming to you again before we let you go. We believe you have to leave. What do you think are the possible incentives that could significantly influence FDI coming into India? Because we've seen how both portfolio investors have behaved and how FDI has behaved. There have been very massive announcements, but overall, what could lead to a trend shift?
So one is, as Rumki mentioned, some of the macro aspects. The currency itself today is encouraging for FDI investments. Our inflation is low, so the macro piece is in place, I'd say. But what do investors look for? They look for consistency, they look for stability, and they look for returns. So if we can offer that, and this is not something you can offer in one budget, it has to be, it's a journey, so to speak. And we are already, I'd say, halfway down that journey. And if we continue further down, making it easier for investment to come in, but at the same time have a climate that gives returns to those investments, that itself would be a good switch.
That's a good point. Punita, return on investment, and that factor has played out with what has happened to the rupee. You could be on two sides of the argument. The fact that over the last 6 months or more, we have had to respond to what of Trump's tariffs on India, and therefore we have let the rupee behave in a certain manner. On the other side, our forex reserves are very, very substantial, $700 plus billion at last count that I can recall. Not related to the budget, but in terms of currency management, what do you think is the priority to at some point also now think about the cost of imports going up?
Yeah, so, first on currency, I think one of the big concerns investors have, and I'm not just talking institutional investors, I'm also talking NRIs, right, who would like to invest in India, who would be, would like to be part of the growth story. They say that, whenever we brought money into India to invest, we've lost so much on the currency. And that, even though the returns have been good, US has still been the best performing market. And after adjusting for currency, they don't see much incentive, particularly all the NRIs in the US, to come in to India. And I think the same holds for a lot of other NRIs. So in the institutional investors, obviously, if you're running a fund, your investors would like you to deliver at least 12 to 15% annualized. And if you lose 4, 5, 6% in currency, then the fund manager has a much more difficult job of delivering the returns. So what do? They invest in countries which also have currency stability. And India has not offered that. Should the RBI be intervening, given the large amount of FX reserves that we have? And that's something that the government, finance ministry and RBI need to discuss. But of course, a weaker rupee should help exports, but then we don't have all the trade deals that we need to have boost our exports. So I think they need to go hand in hand.
Clearly, Abha, this is a peculiar moment as far as currency is concerned, and policymakers have been at pains to point out in the past that when all of us talk about the rupee depreciation and perhaps feed into this debate, and the political opposition has spoken about it, that the rupee is becoming weaker and they link it to national pride. The fact is, you have to look at what is happening as far as dollar is concerned, as far as what the US economy is going through. Rumki, I wanted you to come in on this. Is rupee depreciation at a point where a macroeconomic discussion needs to happen between the trade-off of supporting exports and the negatives of costlier imports, particularly as manufacturing inputs?
I think it is. It is time because to some extent the currency depreciation helped because it kind of helped us offset some of the tariffs that were imposed on our exports. But now, if it depreciates further, we will also scare off many of our investors who were investing, because if the returns on those investments that the foreigners are making in dollar terms, it's basically ways off. Second is we have signed so many FTAs. So if we are importing cheap, but then if the currency is depreciating, then the consumers do not get the benefit of that, right? So clearly now is the time where the RBI should step in to ensure that the currency is more stable, and also it helps in also making these deals, forward contracts, etc., because then they know what rates they should be hedging themselves. Otherwise, a lot of resources and energy goes into hedging activities, and hence I think the policymakers should now intervene, ensure that there is a lot more stability. But there's also one fact that I would want to bring in. In India, currency always depreciates in step. So it depreciates very fast and remains stable for for some time. And this is something which we have seen since 2022. Depreciated, stable, depreciated, stable. So hopefully we have come to a point where it has depreciated enough and it will remain stable for the next 1 year. We'll see how the government kind of steps in and at what rate it stabilizes it.
Rumki is on the side of saying that enough of depreciation and perhaps the RBI needs to step in. We really don't know. The RBI, for the record, has always said that they are concerned with orderly depreciation and orderly management of the currency account. They don't defend a level, and past experience has shown us that the quantum of forex reserves may never be the guide to taking us call on defending a currency, but Abha, take it forward from there.
All right, I think we'll let go. Yesdi, thanks so much for joining us this morning and taking us through a whole variety of views. We've also got Sunil Singhania joining, and I can see him on the screen there as well. So great to have you with us, Sunil. Let's dive into markets. We're about half an hour to go.
Yes.
And right now it's looking pretty flat. Wait and watch more. We've been talking to Punita on the FI kind of view and what perhaps can be expected. We've been discussing economics and GDP data with Rumki. What's on your radar this morning, Sunil, when it comes to the budget speech and what you're anticipating?
I think we have had a very volatile last 1 month in the equity markets, and last 2 days on the precious metals and metal front. Good thing is that the budget has not been on anyone's mind, and to that extent, I don't think there is any major expectations. But at the same time, I'm very sure that the government is also cognizant of the fact that India needs flows. Both on the equity and fixed income side. India needs equity investment if we have to, focus on self-reliance, which is now going to be the order of the day with this tariff issue lingering for so long. And if we have to make ourselves autonomous and independent, we need to have very, very consistent flows on the equity side also. So I think if that kind of thought process is there, we are very sure that at the margin, there might be a few small announcements which might be favoring the equity markets and also the fixed income markets.
Okay, so we've been tracking a lot of the incoming data, Sunil, apart from what's happening on the metals pack and of course the tariffs of some very, very big pockets there. But on incoming data, whether it's auto sales, Jan GST numbers, the recent GDP or data or what we saw on in terms of growth indicators, everything seems to be moving along and seems to be fairly positive. How much room do you see the government having this time around to really attack what is the key area that's expected, which is Capex outlay?
I think there will definitely be some disappointment in terms of tax collection numbers. I think capital gains tax particularly, last year we had a very buoyant run into the budget in terms of capital gains collections, and therefore the Honorable Finance Minister increased the outlook on capital gains collection, which has not happened because no one has made any gains this year.
Right.
So yes, there is not too much of room, but I am very sure that we are a large economy, and government has a few aces up its sleeve. Hopefully, IDBI Bank should get done, and that is going to be a good $8-10 billion. Obviously, RBI continues to give a dividend, which should be good. On an annual basis, oil prices have been soft, which helps the government, though I think this time it has been more, been allowed to be kept by the oil companies, but doesn't matter, it will come by way of dividend. So I think it's a tight rope for the government between increasing the capital expenditure or the planned expenditure and maintaining fiscal prudence in terms of 4.2 or 4.3% as far as the number is concerned. But, I think that is one number which will be looked at very closely. You don't want a scenario where government borrowing program is very heavy. There's already a pressure on yield. Yields are almost at 6.7%, vis-a-vis 6.35, 6.4, which was the case last budget. And therefore, if the borrowing program becomes very heavy, we have the risk of the yield getting under pressure. Rupee has also been under pressure. So I think it is one of those years, maybe in the last 8-9 years, Honorable Finance Minister has presented the budget. I think this is going to be one of the most trickiest budget, so to say, where a lot of things have to be managed.
I think Sunil's just echoing, some of what we were just discussing.
In fact, Sunil, just to follow up that point, in terms of any sectors or industries that could be impacted and meaningfully drive earnings on account of policy measures, higher support or higher spending that may be announced in the budget, Sunil?
So that, gone are the days where budget used to be game changers for a lot of sectors and industry. I think tax tweaking has become very, very low, and GST is frankly outside the scope of the budget. So we don't see anything there. But I would say that this whole focus on Atmanirbharta, particularly given what is happening in the world, will mean that sectors like textile, which have borne the brunt of tariff, or even some of the other sectors like self-reliance on energy, particularly renewable energy, maybe to some extent increasing infrastructure, whether it is air infrastructure or road infrastructure or even railways infrastructure. The whole world is moving towards self-reliance as far as defense capability is concerned. And I think some of these sectors are very obvious. I don't see them not being obvious. But some of the other new age sectors where India can make a mark, whether it is setting up of data centers, whether it is setting up of semicon facilities, which are long-term, very, very crucial, nuclear power, I think some of them might find ways in terms of mention. But whether they will lead to immediate change in earnings, I don't think so.
So he touched upon one really interesting point, which was the IDBI bank divestment.
Yes.
Given that divestment has just been one of those areas where every year we expect something from the government and every year there's a disappointment or just lag of enough action on that front. Siddharth, do you think that this is going to be the year where we actually see, IDBI is set to conclude by February 5th, and that would be fairly substantive, as Sunil has just said, but could we expect more, and on how significant will this particular stake sale be for the government?
So, the economic survey speaks about this subject and harks back to this debate earlier, and Punya, maybe you can also step in on this, that how much of a shareholding should the government have? No one's really said that there should be wholesale exits by the government, particularly, for example, in the energy space. It's clear to us in the world that we live in that you need the petro complex and you need it to perhaps be in national hands.
Right.
It's very, very clear. Solar power, the fundamental push came in from the government, and then now there are very capable private sector companies taking it ahead. But at least come down to 51%, if not 26%. Pranita, you want to weigh in on this point, that how far can the government go, or ideally should go? We have cases like Air India, but we equally have a case like Bharat Sanchar.
Interesting, I did my PhD in privatization and IPOs.
Okay, we didn't know that.
That's amazing. Yeah.
So this was not a set question, viewers.
So I think just divestment without change in management or change in the fundamental operating environment for the company doesn't do much for the company itself. All it is a change, is resource gathering or money gathering for the government. So I think one has to take a holistic view as to what are the strategic sectors that India needs to own at the national level versus what should be held at the private sector level. We are seeing, the reversal in the US. President Trump is trying to acquire stakes in private companies for strategic reasons. So that's a bigger and longer conversation. But I think given that they need resources, they are doing divestment. I don't think they're doing divestment because they don't think these sectors are strategic necessarily. Air India could have been a strategic sector. Airlines could have been a strategic sector for the government, and they didn't need to divest, but they needed the money and they couldn't handle the losses. So I think if it is in the government hands, it has to be operated efficiently enough so that it doesn't lead to more losses and more fiscal strain.
Yeah. Sunil, can I just come in? You made that point earlier and I wanted to follow that up. Therefore, if an investor, and I'm sure they have questions while they're watching you, how should they be positioning their portfolio, particularly in light of some of the uncertainties, including the external factor?
I think very tough question, particularly given what has happened over the last 15 months. So September 24, sort of we peaked out in terms of the Nifty, maybe, the mid and small cap carried on for another month. But thereafter, we have seen, various headwinds, and obviously they've all got reflected into Indian equity markets being one of the worst performers globally. I think having said that, one good thing is that the growth in the economy continues despite all the headwinds. I think balance sheet generally is pretty okay. I would not say that it is looking the best, but with some luck and some maybe push from the government, the balance sheet is also pretty okay. Corporate profits so far which have come in have been pretty okay. I think we are trending towards that 9-10% profit growth. I think from here, how do we get to maybe, a nominal GDP growth of 11-12% and a profit growth of 14-15%? I think that is what will decide on what happens. So I think from a investor perspective, you have been brave and you have withstood what has happened over the last 1 year. I think this is a time just to be patient. Have a look. Don't get extraordinarily excited. At the same time, don't get too overawed by news flow, because we have seen so much volatility. Just stay across, and I think I'm very sure that we would do well.
Visuals again on your screen of the finance minister carrying that digital Bahi Khata or the digital budget book, beautifully bound in what seems to be red velvet. I haven't laid my hands on that, but again, I imagine these are visuals right from Parliament House, the new Parliament House, and you have various officials, including Mr. Nagaraju, the Financial Services Secretary, Chief Economic Advisor, Ananta Nageshwaran, Anuradha Thakur, the Secretary of Economic Affairs, Mr. Chaudhary, the Minister of State, Arunish Chawla is there. We have Mr. Worlingam, who is Expenditure, and other officials, including the Revenue Secretary. Customary visuals that kind of bring in a sense of occasion, and the Finance Minister, resplendent in that Tamil Nadu Kanjivaram Abha. Political, not a political choice. I'm just focusing on the fact that this is yet another glimpse of India's massive and high quality handicraft, handloom tradition. And it changes. Every 100 kilometers you can get a new masterpiece, Abha.
Absolutely. I have a few of those as well. but just looking at, I just feel like watching Nirmala Sitharaman sort of grow into this role over the last few years. It's been such a phenomenal journey. Just look at the ease, the grace, the confidence, and as you said, resplendent this morning, both with the Bhai Khata glowing in red and the beautiful sari. And that image of her with President Murmu also just about an hour ago was extremely powerful to see both of these.
Absolutely, and who knows, well on her way to set a record, beat from Morarji Desai in terms of the number of budgets. He did 10. I'm pretty sure that she's on her way to surpass that by a long margin. I think we have to thank Mr. Singhania for being here with us, and as we also dial in other guests, I can see Ajay Srivastav, MD Dimensions Corporate Finance Services. Ajay, welcome to the show. 15 minutes or thereabouts exactly left for the budget. Give us a sense of how the markets first are seeing this. For us, it's a big event. For the markets, what is it like?
Unfortunately, Siddharth, market is driven towards a different part of the system, the commodities. and metal at this point of time. So I think most people are focused there than the budget, because the gyrations there are making or killing your net worth in a magnitude which equity markets cannot do for years to come. So I think, unfortunately, the situation right now is everybody's eyes are glued on commodity screens and metal stocks and what's happening there. And I think
What's your silver position like, Ajay?
I have got silver position. I have got a silver position, and we've added today a little bit of more to it position at this point of time, because the correction is giving us opportunity. Again, we don't know what's going to happen tomorrow, because right now we are in the hands of regulators, whether it is the MCX margin or whether it is the US regulators, COMEX margins. So, at this point, sir, the fundamentals are not in play. What's in play is the temporary margins being put by various regulatory authorities to cool the system down. I think it's going to take about 10-15 days for us to understand fundamentally where the direction is. But by and large, one has to ride the storm calmly, carefully, and see where we take our portfolio allocations and not panic into it. Such panics often do good opportunities. So to my mind, metal has done the best in the last 1 year at this point of time, should be in the top 3 for the next year. And you can't build a portfolio without precious metal as well. So take it calm, don't get panicked, and you're an investor at the end of the day. If you're a big speculator, yeah, you got to put margins, you worry. But as an investor, calm down, give you opportunities. When you get opportunities on such days, use it. Maybe you'll get one more opportunity to buy. But don't panic. You need to have it in your portfolio, full stop.
All right, the Cabinet has approved Budget 2026. It's again ritual, part of protocol. That's coming in on your screen, and it's just another 10-15 minutes or so, we'll have the Finance Minister begin her speech as well. So we've had all the customs taken care of this morning, from meeting the President to the approval by Cabinet, and now, of course, heading towards the actual deliverance of the speech. Ajay, I'm going to grill you a little bit. I know you're focused on metals, but take a shot in the dark here in terms of the kind of move whether we could possibly expect if it is a positive budget for the markets.
I think, you can expect a move, because we have been rather tepid in the last 1 month. So any good news can be taken up by the market. But having said that, I think the Indian market psychosis or fear of the FI sale is just now so ingrained into us. And that's the challenge of the budget, is not an Indian investor. Indian investors already put money in it. However, the point is, how do you get the overseas investors to put money in this country? Sure. I think the challenge for the budget is to structure opportunities, framework, regulation, ease of doing business should be on the ground, that the money comes back to this country. We don't have enough dollars. So I think Indians are convinced to invest in India. You saw the SIPs, thousands of crore, lakhs of crore invested. Indians don't need to be convinced. The guy needs to be convinced, sitting outside and saying, can you bring your investment here? And more important than FDI investment. We don't see people putting up factories here. We don't see people investing here. Can the budget put a framework around? And linked to that is what I keep saying, and I think Geeta Gopinath's the same thing, is quality of life. Yeah. You can't get a foreign technician to come here if his AQI is 800 and his children to play outside. You won't come. Nobody will come. So I think budget should address the issue upfront and say how 70 or 75 most polluted cities will become zero in the next 5 years. Forget all development. The quality of life is most important. What will you do with development if you're dying of or your children are wheezing of asthma? So my mind, budget should be intrinsically focused on ease of doing business, get foreign capital here. The single litmus test for this budget and regulation is, will it reverse the flow of FDI and FPI, if you ask me. That's the single litmus test. Indian investors are convinced already.
Ajay, the good point there. Are defense stocks a buying opportunity ahead of this budget, given the expectations that the first full budget after Operation Sindoor will double down on the theme of defense modernization and upgrades?
See, sir, theoretically what you say, model is correct. But practically speaking, how much of these orders actually flow to Indian companies? If you look at all the Indian private sector growth defense companies, they haven't grown in the last 1 year. Post-Operation Sindoor, pre-Sindoor, everything, the growth is pathetic. Or put together all Indian private companies, the total defense sale billing is not more than 3,000 to 4,000 crores. That's all. So, it's nice defense budget to go up. Problem is, we don't have the technology the defense wants to buy. You already saw what's happened to the aircraft. The Air Chief Marshal saying, listen, I need my aircraft like yesterday. So I think defense is a great story. But the real life story is, in corporate sector, it hasn't flowed to the Indian defense companies. They are too small, they're tiny, and number two, they don't have the technology. Therefore, theoretically, answer is yes, defense budget goes up. We should do well. The practical answer is, which are the companies which are going to get the orders? L&T sits on idle capacity at this point of time. So who's going to get the orders? The others are very, very small. Now, if you want to buy PSUs, I keep saying again and again, repeating ad nauseum, would you buy a car from HAL? Forget buying a plane from HAL. PSUs are not meant to deliver sophisticated technology product at the end of the day. So as an investor, yes, we have some investment in defense stocks, particularly PSUs, none in private sector. But answer is, will it be the way your portfolio will go? I don't think portfolio returns are going to come from these defense things. You might as well buy US Aero Defense ETFs. You'll do a better job with that because those companies are going to gain not as much as what we think Indians are going to gain.
Ajay, in terms of the sectors that you think are likely to be the most major beneficiaries and individual winners, if you could highlight them for us.
Unfortunately, it's a very boring story to be repeated again. That metal did well, PSU banks did well last year. Unfortunately, it looks like they will do well. And with this time, surprise or surprise, maybe the private banks, the two largest ones, may add to the ticker to do very well because they've been so neglected. They're really forgotten in the market. Maybe they will perform. So I think we have these two sectors. And third is autos. I think autos will continue to give us a good return because of exports are doing very well and rupee dollar being where it is. Auto should be the third on our priority. So it's going to be, if you ask me, it's going to be metal again. It's going to be PSU and private banks. It's going to be autos and engineering segment. I think these four are going to gain traction, continue to be good companies. And good part is you got a lot of good companies there. So very nice companies, good promoters. And let's not forget gold loan companies. I think no matter what happens to gold prices, those companies have a flyer on the hand. So you got to, part of the investment portfolio is the gold loan companies. I think they will do well. And you saw so much investment coming into new banks. I think 3 or 4 banks have got huge investment. Hopefully those investments will start to perform. Last point, the man which has lagged the most is the hospital sector. Corrected rapidly, may correct still more, but offers a great opportunity from a 3-year perspective.
So on autos, Ajay, just talking about the recent, import duty cuts and so forth, we did see a reaction on that, and that was creating a little bit of havoc on the auto counters. Do you think it'll stabilize, or will we see perhaps some pressure on earnings on the back of increased competition?
Unfortunately, market is full of illiteracy, and therefore we, as Warren Buffett says, you got opportunities to buy and sell. Okay, the EU Pact will happen over a period of 9 months to start with. Okay. It has got a cap on the number of vehicles. Make cheap vehicles, but Indians buy mostly. So, so yes, a Mercedes may become cheaper and an Audi 7 may become cheaper. But will a Maruti face of music? Will a Mahindra face of music? The answer is no. They are producing at a price point where no one can compete with us in this market and bring a product to India, not even by chance. So I think markets are irrationally responding to an EU pact saying these companies will face competition. No, Europeans can't produce cheap cars. In fact, they should not be producing cars. They can't produce any cars anymore. And you may have heard it, that Germany stopped literally producing cars at the end of the day. It's just overrated. I think all has happened is that the very expensive cars are going to get cheaper. So if you are planning to buy one of the fancier ones, you can wait to buy your Lambo or your Ferrari. But I think barring for these companies, that's a very good point. That's a very good point. You know what happens in Gurgaon, right? You all drive it at 2 o'clock in the night.
But early numbers on the auto sales for the 1st of February, the numbers that are coming in are again very strong, Siddharth.
Yeah, absolutely. And the Sensex up 400 points from the day's low, and the Nifty also up. So markets recovering from their day's low. Minutes left for the budget speech, and very clearly you can see perhaps
I'm kind of excited about this budget because I know, we've got a Samir Arora saying it's a non-event, and we've got, even a Punita saying, I don't know what's going to be possible this time around. But this government, if it's managed so far to sort of maintain a fine balance and keep all things considered, I wouldn't put it past them to have some rabbit they're going to pull out of their hat.
Absolutely. And, I am not in the camp which says it is a non-event.
Exactly.
There is a rationale behind calling it a non-event, but Ajay, maybe you will also weigh in on this, but my feeling is that increasingly, if the government's spending instincts are to directly put cash in the hands of people, alongside doing robust infrastructure, we've seen the infrastructure story play out completely. Banking was spoken about. Ajay, you made that point. Look at this state of where our overall banking system and in terms of its health is. Compare it with 10 years ago when we used to be on shows in an earlier avatar, Abha, and with the headlines around NPAs, we would just be discussing NPAs day in, day out. You don't talk about that anymore. Now you are talking about where will the banking sector raise deposits from so that it continues to play a key role in driving growth. In our economy, the nature of our economy is that banks are becoming long-term financiers. Elsewhere in the world, it is the debt markets that fulfill that role. So Ajay, in fact, just on that banking point that you made,
it's a great
this deposit challenge, is that one of the biggest worries that our banking system has in the short to medium term?
It's a flip side to the story. You just talk about people investing in India's economic story. Now, the moment they stop investing in the economic story, they will come to the banks. All the problem with the banks is that RBI has artificially kept the interest rate down. And at that rate of return, 5-6%, you say, I'd rather put in mutual fund. Doesn't matter, 10% higher return. 10% means double the FD rate or 50% more than the FD rate. So that the challenge is that artificially keeping interest rates low have channeled the money into one sector away from the banks. Banks have a challenge of where to get the deposit from. You're absolutely correct that the deposit is the biggest today challenge for the bank. And they've been crying, saying equate us to mutual fund, which is a ridiculous argument. But the fact remains, and we are soundly believe, that India will be forced to increase interest rate to balance, one, this whole dichotomy of people putting money in equities and nothing in debt. And second is the FPI trying to come back to Indian debt markets. And we have a balance of equity in terms of savers and borrowers. Today, the whole equation is favoring the borrowers, not the savers. So you see the household debt is like multiplying like nobody's business. They don't know how they'll pay the money back. So the challenge is interest rates have to go up in the economy to put equilibrium to banks to get the deposits, to the bond markets to flourish, and the household borrowings to come down to a reasonable level, all to achieve. Unfortunately, the clamor is reduced it down. But I can tell you, I can predict you that interest rate will go up in the economy in the current year. Otherwise, the equilibrium is not going to be settled. And we need the dollars. We need NRI money. $330 billion of our borrowing is NRI money. We can't let it go away. Otherwise, who will plug the gap? So, so let's look at it. Out of 700 billion borrowing of India, 330 is NRI money. So therefore, interest rate play a paramount role. And today, the only thing holding back money going to the banks is the interest rates.
That's a very, very interesting take, Abha, and I must say this on record that Ajay, this is the first time I have heard such a passionate sort of argument for an interest rate hike, because by all conversations that I have had in the last quarter, and I'm including the month of January in that, Abha, nobody has been even remotely talking about interest rate hike, because inflation is low, growth is pretty steady. Goldilocks economy, a term that is frequently used. If growth is doing well and if inflation is under control, it's called a Goldilocks phase. Not exactly a hardcore economic term that hardcore economists talk about, but it sort of captures the mood of the moment. But as we stand by for budget 2026-27, let's try and bring you visuals from Parliament, because by my clock, just about a minute left on Nirmala Sitharaman's speech. You have the Lok Sabha feed, the new Parliament there on the screen. Once again, for the Finance Minister, the 9th outing to deliver a union budget, a budget of the size and scale that India has, a budget that aspires to reach and address 140 crore people, 1.4 billion people. In sheer numbers and in per capita terms, there is only so much that a union budget can do. But remember, one of the largest heads of expenditure that the government of India has, and these are all sobering realities, is interest payments on past borrowings. So borrowings, the numbers that will come out will be very, very significant. You can see the Lok Sabha Speaker walk in and take his chair. He's going to now call upon Finance Minister to speak. There are sometimes
वित्त मंत्री श्रीमती निर्मला सीतारमन जी. Item number one. Item number one.
Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3, explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमन जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin Part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our Kartavya. I now move to specific proposals. Under our first Kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through and approval timeframes through a dedicated scientific review cadre and specialists. India Semiconductor Mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme launched in April 2025 with an outlay of 22,919 crores already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. To enhance domestic chemical production and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool and jute, man-made fibers and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, one district, one product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a three-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGTMSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is tier 2, tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, rights have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated rights. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years. Starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradip and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on tier 2, tier 3 cities and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the portfolio investment scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10% with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology, and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, Viability Gap Funding and capital support, one girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences. 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka and Kerala. And 3, bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakhi Gadi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B, empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C, empowering the vulnerable to access mental health and trauma care. D, focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2, strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through a credit-linked subsidy program, B, scaling up and modernization of livestock enterprises, C, enhanced creation of livestock, dairy, and poultry, enhanced creation of livestock, dairy, and poultry-focused integrated value chains, and D, encourage creation of livestock farmer-producer organizations. High-value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas. Agar trees in Northeast and nuts such as almonds, walnuts and pine nuts in our hilly regions. All of them will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards and expand high-density cultivation of walnuts, almonds and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, Alimco, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional Apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya, I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offense. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offenses will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offense. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oil seeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards Ind AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit, or transshipment. To support aspirations of India's small businesses, artisans, and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues. but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind.
1.5 hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पूरे स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
All right, the budget. But I think what's taken the markets by surprise is the tax, the SCT tax. Clearly, here the finance minister doesn't want us to trade too much share. I can see how you reacted when that news came out. But, you know, for whatever reasons, a whole host of taxes when it comes to the STT, to buyback tax as well, capital gains, and so on and so forth. However, on the other side, we've got a whole host of reductions when it comes to, for example, duty cuts for items imported for personal use, and a whole host of other measures. So I think the budget is sort of continuing a theme in that they want consumers to spend, but at this point, one can argue that there's now limited room for consumers to actually trade, because that additional tax is going to put a little bit of a burn on some of those stock market investors.
Well, let's see how that's put into action. So, Abha, the Nifty was 25,380 before the finance minister mentioned an increased tax on futures trading as also on options premia. And from then on, it's a single one-sided slide, now 24,962. So that's a fall of almost 400 points on the Nifty alone. And look at how the Bombay Stock Exchange has dropped, because options trading is a direct correlation to its bottom line, 9% lower. MCX is down, I think, 15-17%. It also has, the metal rally being taken off the board. Look at IEX and look at the brokers. Look at Angel One, look at Novama, look at so many other broking stocks. All of them now really in a very deep shade of red.
So if you were watching the markets actually, and Sasha, I'll bring you in here as well, and she's made a whole host of announcements in line with expectations, even on the bond market, even on across the board, whether it be AI, whether it be segments like pharma, so on and so forth. But if you're watching the kind of progress of the markets through the budget, we were mildly up, I would say, through the host of spending announcements. She has stuck to the fiscal spending announcements. We are seeing huge allocation across the board, and market was gently up during that time, but they started losing ground just ahead of Part B. Perhaps there was some kind of inkling of what was to come on the STT.
Absolutely, Abha. So remember when we were talking ahead of the budget speech, there was a whole lot of anticipation from a lot of our market experts that this is the right time to review the LTCG or to give some kind of a relief on STT. Bank comes a raise that's coming in on STT, especially on FNO. That clearly makes out that the government is very, very careful on what the investors are losing money on, and they want to protect the investors there. Over 90% of investors even today lose money when it comes to FNO, and there are stringent and more stringent measures that even the SEBI has been putting out, and now the government has put that additional STT tax, and that's why you do see the markets come down. This is despite the fact that there is an increased capital expenditure outlay to 12.2 lakh crore rupees. This is a welcome move. The government is also sticking to its fiscal glide path of 4.4% for FY26 and 4.3% for FY27 as well. Despite all this good news, this one knock on STT has taken all the good news away.
Exactly. We've got Mr. Harina with us as well. Mr. Harina, it's the STT that everyone is really just a bit shocked at in terms of why, and especially when markets have been really giving investors an opportunity to build wealth. And currently, honestly, with what's happening in the metals market and precious metals, and now with this, I think investors have a lot to kind of cry about right now. But let me get your perspective on all the tax announcements today.
Well, the tax announcements are excellent as far as the entire ecosystem of data centers, global, people coming in. The tax holiday provision right up to 1947, which is another 19 years, is an excellent step. I think India needs to grow that sector, and India must become the hub of data centers. Global data centers. So this is an excellent move.
Yeah.
We never expected a tax holiday for such a long period of time. Secondly, the government has streamlined procedures for transfer pricing, for advance rulings. All this will help the foreign investors to look at India as the real center for global growth. And the whole object of this budget is to put India on the global map.
Yeah.
And the best way to do it is to give them this tax holiday, which I don't think any other country has done.
Exactly.
And I must say this to the credit of the finance minister.
Yeah.
She's a woman of great vision. She has realized that this is the one situation where entire global data centers will be used, India will be used as a hub for them. And this will make India a tremendous global power.
Well, at this point of time, 2.5% down on the Nifty, 24,700 is what we are staring at. Sakshi, just 3 out of 50 shares are in the green as far as Nifty is concerned. And when you look at the 500 index, only 41 are in the green. Be that as it may, we'll just take a view from the broader tax community. Gokul Chaudhary, President for Tax at Deloitte, joins us. Good afternoon to you, Gokul. A view that you might have on increased tax to be paid by promoters on buybacks.
So we are going to be closely watching the fine print as it comes through, because the definition of who's a promoter is going to be very critical. And I think equally it's going to be interesting to see whether in the case of foreign shareholders, whether the definition of promoter will even extend to non-residents. So I think it's going to be, I think it's a good move. But of course, as they say, the devil's in the details. Let's wait and see as to who gets captured in there. But I think the pronouncement of shifting back to a capital gains regime is going to be a positive one.
Right. Let me also welcome Sanjay, who's joining in. Sanjay Sena, founder of Citrus Advisors, on the program. Good afternoon to you. Help us understand, what would you make of the announcement that's come in? Are you disappointed with that STT hike for the F&O space? And, the markets that were already low before going into the budget, Nifty was down 4%. Today, another 2% hit there when we look at the, major indices. How are you looking at the announcements?
So if it is with specific context of the budget alone, I will say that, if you look at it from the market's perspective, definitely it's a disappointment that the market is facing right now with the STT hiked. But, traditionally, the budget is viewed in 3 parts. The first part is the reaction to the budget speech. The second part is the reaction to the finance bill. And the third part is the reaction to the actual outcome of the budget, which plays out over the next few months. So I think, today the knee-jerk reaction is not very surprising. But having said that, we also need to take a step back and see that, what was happening even before the budget speech started. We all are aware of the sheer crash in the commodity prices and more particularly the precious metal prices. So that has had an overhang on the market anyway, and on that, if you have a sort of, a near-term impact of the STT, and STT hike, and not a modest hike, it's a very aggressive hike in the STT. So obviously the market is disappointed. But if you look at some of the other announcements, and Mr. Renina mentioned that, I think the announcement on a tax holiday on data centers till 2047, nobody expected that. It's a bolt from the blue. And I think, it is going to bring a lot of attention to India from global investors, both on the capital market as well as on the foreign direct investment. So I think that's a very strong positive. Why did I mention that is because, one of the negatives playing on the market right now are the outflows from the foreign portfolio investors. If that stabilizes or reverses, I think that can also have a salutary effect on the market in the medium term.
So, Nischal, let me bring you in here as well, and let me get your reaction on the 3 points as we just heard as well. In terms of both the speech and the finance bill, what would you say were your key takeaways? We've just heard from some of our other guests as well, Sanjay also talking, and both Sanjay and Mr. Ranina as well as Gokul finding it very attractive, in terms of the global positioning. What would be your key takeaways?
So if I may say basically a few points, I think one, the usual things basically, it's a very, very strongly growth-oriented budget basically with a clear focus on R&D and the skill development. If you really look at it in the initial announcements which the finance minister made, I think there were a lot of ideas basically which she has put out for skill development. So I think that is one important point, and government is focused on growth, and the second thing they are focused on job creation. I think these are two things basically which we should look at it. From a stock market point of view, yes, the STT increase has got a implication basically, and that's why the market is reacting negatively, and all the market focused stocks are reacting negatively. But I think that was maybe it's a bit steeper than expected, but I think given that SEBI and government has been indicating that retail investors have been losing money on the F&O side, some sort of this thing was expected. So, but the increase is steeper, and that's why the market is reacting negatively. Otherwise, I don't see, I see a much positive things basically in the budget than just looking at one increase on the STT side. Possibly in the next 1 week, market will forget about it and move on.
Right, a massive dose of volatility coming into the market, 24,974, and Abha and Sakshi, the low was 24,571. So from 571, a bounce back to 957. That's an easy 250 points on the Nifty alone. This, ladies and gentlemen, is the intraday volatility that we are facing. Coming to Mr. Ranina, sir, would you want to comment on the fiscal glide path that the finance minister has unveiled? We've seen a lot of macro consolidation continuing despite global turmoil. Do you think the finance minister missed an opportunity to maybe open up the purse strings and feed the economy some good dose of populism?
Well, I think the global perception is that if you want to improve the credit rating of the country, you have to keep your debt in check. So the reduction in the debt GDP ratio is one good thing. Fiscal consolidation is one good thing. So this is something which will certainly give a boost to the Indian economy. Because if the credit rating agencies improve our rating, then cost of borrowings will go down and investors will come in. Today, the main problem in India is fall in foreign direct investment. And I think one of the steps to encourage foreign direct investment to come to India is to improve the credit rating of the country. So these two aspects of keeping the debt GDP ratio lower, reducing the fiscal deficit, going on the flight path of consolidation, these are the two aspects which will put India in a very bright spot as far as the rest of the world is concerned, which is going through a great turmoil. And therefore, I think this will certainly help. So one has to look at the broader picture. Apart from that, the huge capital outlay of 12.2 lakh crores, that is 12.2 trillion rupees, is a huge amount which will be very positively looked at by foreigners and credit rating agencies. So I want the whole global scenario to change, the global perception of India to change,
because one problem which we have been having is the fall in foreign direct investment.
Yes.
The outflows are more than the inflows, and that has to change. And this is what the finance minister has done in this year's budget, to create the perception where more capital flows into the country. Capital flow is one of the greatest issues which the country is facing today. And if more capital flows into the country, I think the entire economy will stand to gain.
Okay.
Secondly, she has done things on tourism. She has done things on improving the infrastructure. She has done things on improving women power by giving them a lot of incentives. So more tourists coming to India, all this is going to help in a substantial way.
Right. Sanjay, do you think this budget has done anything to bring back FII money sustainably, or will they still look for better opportunities outside?
So I think there are two things in the budget which will probably make a dent in terms of the FII flow trends. One of them is the one which I mentioned, the fact that we have given this aggressive tax holiday on data centers. Last year, if you recall, one of the criticism against India was that we didn't have anything to offer to a global investor for AI or in data center space. Now, in one stroke, the finance minister has created a massive opportunity in that space. So I'm quite sure that will bring that sort of attention to India. So that is one. And the second thing is, I think last year our sovereign rating got upgraded. And despite all the good things that were happening to the country in terms of inflation coming down, the fiscal deficit being kept in check, our currency kept on depreciating. And today we are probably on the verge of finalizing this long-awaited deal with the USA. So I think once that happens, that will also send out a positive signal to the global investors. So I think a third thing, which I digress a little bit, coming back to the budget. In the budget, the sort of focus that has been given to manufacturing, I think that is a very strong statement which will go out to foreign institutional investors. So I feel that two things if they happen. One is that the foreign portfolio outflows, if they reduce, that itself is a positive signal for the market. And I think, with these signals, there is every possibility. The thrust on manufacturing and the focus on data centers should make the flows positive also.
Let's look at the positive parts, Abha. Let me point out 2 or 3 stocks.
I was going to ask Nishchal just that. I would say the whole market's right. There have been positive moves announced.
Yes.
But everything's just reacting to the STT news.
So the positives, ladies and gentlemen, on the data center side is visible on one particular stock, Anantaraj Industries, which is a real estate play. The top gainer in the NSE 500 at the moment, days high and 8% higher. The lots of pharma companies are doing very well, as also are some hospital stocks for 2 reasons. Pharma, right at the beginning during the manufacturing speech that the finance minister said was an move towards enhancing biopharma, as also making India the global hub for biopharma manufacturing, and something like 10,000 crore rupees to be put over 5 years as an outlay. So biosimilars, biologics are the spaces that are doing well. Look at Newland Labs. So that's a big winner. Medanta is doing very well from the hospital space as it opens up, as the government wants to send up 5 major hubs. Nishchal, with this speech in front of you, now that there are no other major events left except for Mr. Trump, what do you think are research analysts and equity strategists such as you looking at in terms of sectoral plays?
So I think at the very beginning, the finance minister has really set out those 6 spots basically, and I would just enumerate them. One, you have already said that the government is going to focus on the biosimilars, which is a very big space which is emerging across the world, and we have got a huge competition because China is very big on the biosimilar space. So that's what I think is one of the spaces. The second one is the semiconductor. There the allocation is again very big, and you have got this this tax break also come through. So that's the second space. The third one is the basically rare earth, where again they have identified 3 or 4 states where they are going to be focusing on the rare earth side. So this is the third one, and the fourth is chemical parks And I think one or two of them basically, which have been talked about earlier, also electronics and focus on textile, because you have some issues basically as far as US exports are concerned. So these are 4 or 5 sectors basically which the government has highlighted again. And I want to highlight again basically, this whole budget is about saying that we want to focus on emerging technologies, focus on R&D. These are the 2 things basically which I take away. And upskilling India. These are 2 or 3 things which I take away very clearly from this budget. So focus on technologies, newer technologies, upskilling India, because there has been so many instances where they have been saying we are going to set up this college, that college, help the set up parks for education. I think this is 1 or 2 or 3 things basically which I take away from this budget. STT is, I'm saying this is more to do with the this thing. None of the FIs largely invest except for the HFTs. They will be impacted by the F&O. None of the FIs actually look at or do much on the F&O side. So this impact is largely on the local side, largely on the HFTs, which I think the government anyway wanted to, didn't want to promote. So that's the way I look at the market.
Okay. Gokul, let me come to you. How are you looking at the tax announcements? Do you think the foreign residents now getting an easier access to Indian markets will, prompt them more? Is that some good news that we can take away from?
Well, there are 3 good news that we can take away from this budget. One, of course, is that the government is put an emphasis on the cross-border services sector in a very significant way. So if you remember the economic survey that came in, it did have recognition that nearly 80% of the FDI that's coming into India is in the services sector. And I think what the government wants to do is provide tax certainty to the services sector, and is doing so by making sure that the ITA sector, and they have given a larger definition of it, will be getting a safe harbor. I think that was the ask of this sector for a long time. And I think therefore we will see a greater confidence in the services sector as being established into India. And I think the path and the journey for India being the GIC capital of the world is going to continue. So I think that's the one big takeaway which is there. The second is the finance minister recognizes that on the 1st of April 2026, the new Income Tax Act comes into effect. And they want to make sure that they can reduce the amount of friction that takes place in the new act on account of penalties, prosecutions, TDS defaults, TCS issues, conflict between what. So I think they are trying to make sure that the new act becomes a far more citizen-friendly act. That's the second thing that they're doing. The third part which they're doing is they're addressing some of the issues that were still niggling in some of the tax provisions, such as on MAT or minimum alternate tax. So they're trying to address that big piece. I think it impacts a lot of the manufacturing sector and asset-heavy sectors. So I think they're trying to do these 3 things. I think in that respect, it's kudos. It's a good budget.
Right. Abha, to gladden your heart, from a low of 24,600, we are back all the way to 25,000.
Yeah.
So a 400-point recovery from an intraday low. As we've been pointing out, this is extreme volatility, which a lot of people who were angry with the fact that there were hopes for an STT cut, and here we have a raise. So that's a bit of a disappointment.
Absolutely.
But then,
I think they're recovering from the shock, the markets, and maybe realizing.
They're emotional people.
Yes. We definitely are, and I think the markets are hoping to see more. But and I put this to all of you. Let me start one by one. Maybe Sanjay, you can take it, because if you look at the budget kind of holistically, I think there's a lot. And I think, as Gokul was also just mentioning, it'll go through the fine print, and they've addressed some very critical sectors. But for an individual who's possibly watching today, they're always, of course, looking for further tax SOPs or policy changes on that front. And for someone who's investing in the capital markets, like a retail investor, this was definitely, as Shell said, an emotional shock for them in the last hour or so. So, if you take a look at it that way, I mean, how do you kind of explain to someone whether or not to get excited about this budget, or how some of this is going to play out in the near term?
So, the first leg reaction to the budget is on the speech. And Shailendra has very rightly said that, today what you are seeing playing out in the market is more frustration and anger at the STT hike. But, if you take a step back, look at as to what the budget has done on a holistic basis, and I think that is where much of the retail investor will benefit from. They may not benefit from this STT tinkling, because only those who participate in the futures and options get affected. And we all know that the larger majority of the Indian retail investor actually is long only equity and not necessarily on the derivative side. So for them, one thing which is remarkable about this budget is that, look at the qualitative shift in the Capex spending now. The government is not talking about just the traditional areas of capacity expansion. They are focusing on rare earth and magnets. They are focusing on semiconductors and electronics. They are talking about data centers. They are talking about, setting up sophisticated tool rooms for the capital goods. So I think, the fact that, there is a qualitative shift in the focus of the government Capex itself is sending out a very big statement to the Indian retail investor as well as to the global portfolio investor. I think that's one big thing which, in my opinion, even if it is a disappointment today, over the next couple of months, we will see that playing out. The second reality, which the government is recognizing and is trying to make the Capex more productive. If you see, in number of times in her budget speech, the finance minister has used the word offering X project on a challenger basis. Now, in this one, the way I understand is that the central government sets out the criteria and the state governments have to bid for the projects and then take them there. So in the earlier budgets, what used to be happening was that, a lot of good statements used to be made, but, the execution on the ground used to be a little lackluster. But in the challenger mode, since all the states are going to be competing to get those projects to their state, I expect that the execution will also be much better, which is one of the handicaps in the past, when we have heard good words in the budget, but the execution on the ground has not been very good. So that is the second thing that I see. And the third one is the focus on urbanization. This explicit statement that, city industrial parks would be set up and, university conglomerates around these industrial parks and so on and so forth. So I think there is a lot of focus on moving to where the economic activity is now shifting. And the most of the economic activity today now is happening in and around urban centers, and there is a clear acknowledgement that, that is where you need to bring the focus on. So these three, I think, will play out very positively.
All right, let me also go across to Karishma Sudhani. She's been tracking the budget live on ground. Karishma, take us through what's the mood on ground, what have been some of the key highlights. You're in touch, of course, with all the officials there at the Finance Ministry. Give us a sense, give us a mood check.
Well, I interacted with a couple of members from India Inc. and while the Josh is pretty high in terms of a higher Capex announced, a stronger economic policy, all's not well with the way the market has reacted on the STT hike that Finance Minister Nirmala Sitharaman has announced both on FNO and options. That is not being taken in well by the market. In fact, a couple of analysts have been sharing that this could lead to a further downfall in the market with not a very happy market mood in comparison to what had happened last year, because government had given a clear income tax cut which did uplift the mood of a lot of people on ground in India. However, there is optimism seen in terms of the announcements that have come in for urban infrastructure, for youth. A lot has also been announced on participation of young entrepreneurs in different sectors, especially the champion sectors, and some kind of incentives that have come in on the export front, which even Business Today Television had reported a while ago. Let's talk about textiles, the 5 prolonged strategy that she's announced for textiles, the strategy that she's announced for sports industry. These are definitely going to go a long way. Also, what has come in from for MSMEs, the 10 lakh crore fund that she the 10,000 lakh crore fund that she announced will also go a long way, because these were on-ground challenges also with the US imposing a 50% tariff, where a lot of MSMEs had written to Finance Ministry, to also PMO. Exporters had directly reached out to PMO of the declining on-ground situation. So on the macroeconomic front, Abha, things look great, things look fine, just the way they have been in the past few years, where government is confident that their road towards 2047 is shining bright, with a 4.3% fiscal deficit target for FY27, with a 55.6% debt to GDP ratio that she has predicted and estimated, and a 12.2 Capex, which has been the highest ever for India, that government is banking big on. But on the market front, we may see a bit of a lull for some time.
Right, Karishma, we'll keep coming back to you for all those reactions from India Inc. at CII as well. But Nishal, coming to you, going into the budget, everybody was worried about these geopolitical tensions, the tariff shocks that continue to keep markets at the edge. Do you think any announcements on the export side, on the customs duty side, will be able to protect the Indian export-oriented sectors against all these tariff shocks?
So I think there have been very clearly two mentions about two industries which I could gather. One was about textiles, where I think there has been specific incentives which the government has set about man-made fibers and all. We need to go through the text, but definitely I think government is cognizant about that. Both textiles and leather. These are the two large industries which got impacted. Because of this is also hugely labor intensive. So that's why I think government has come out with specific incentives for both these industries. So I think beyond that, I think what they have done is, which I was highlighting earlier also, is the skill development. That is, I think, a very major thing, because government recognizes that as we go ahead, the same labor is not going to be eligible for as AI gets in, and the same people will not be able to get the jobs done, and that's why they need to upskill India. So I think that's a very, very big initiative which I see specifically in the economic context.
Right. Let's look at two other stocks which are seeing a little bit of buoyancy, and I'd like to have a view both from Sanjay and Nishalji. Mr. Sinha, the talk of revamping the public sector NBFCs, in particular PFC and REC, is this an eventual path to a merger between the two? Sanjay ji, first you.
So I can only speculate that, whether the word restructuring is an euphemism for merger. But, we are all aware that, there were a lot of overlaps in the businesses of PFC and REC, and, maybe merging them into a single entity will create a much bigger and economical entity. By the way, in the same context, the government also on various platforms has been talking about consolidating public sector banks also into larger entities. And I think, there's a third related point, which is that given the thrust on the power sector, when our need for additional infrastructure, additional funding for the power sector is going to be massive, maybe it makes logical sense to merge these two entities. But I can only speculate. We'll have to see what exactly does the finance minister have in mind and what is stated in the finance bill.
Right. Nishalji, your view on this potential merger ahead? Both PFC and REC have been very long-term wealth creators.
Also, I'm just going to let Sanjay go. Sanjay, thanks so much for joining us. I know you have to head off.
Thank you.
And yes, Nishal, please take that away.
So my view has been basically that why the need for a specific NBFC focused on the power sector? It is not that the banks are not financing. So the need for them, I think these are all institutions which had been set up 20, 25 years back when banks didn't have the same kind of capacity on the balance sheet side. And the PFC, REC used to fund for 20, 25-year loans. So I'm saying today banks are equally capable of doing that. So why this? Basically, I think both of them should be merged together and maybe put it into a bank. that is a much better way to basically operate in this kind of scenario. I think it's a very right and pragmatic step.
Just curious about pharma. Just putting it up just to see if there's any reaction, because there's a proper Capex outlay for pharma. It's marginal, just under 1% on most of those pharma names. Even IT is, it's pretty much marginal. I think the data center impact was more on like an Anantraj that you were saying, Shell.
Actually, Anantraj has actually gone up further from the point we had mentioned, so about 10.5% higher. But Abha, I think pharma was really beaten down, and it's a relief rally that's coming in. Mostly you see Sun Pharma 1.7% higher. Biocon, you know, the finance minister utters biologics and, you know, biopharma, and it being the global hub, therefore you see 1.3% higher. I was seeing a nice uptick on Newland Labs as well, but Mankind Pharma, Ajanta Pharma, Akums also doing pretty well. So these are, you know, sparks that you see in the market, desperate to sort of look at some breathing ground.
Absolutely, and I want to, you know, go back across to. Let me actually go back across to Mr. Ranina, because Mr. Ranina, you've said that this is a good budget, and I hear you, but given also a lot of the other elements that some of our guests have referred to, what would you say from the slew of reforms that she's announced outside of taxation that you have found to be on the right track, or that would be in, you know, that would be something that will be appreciated with the larger ecosystem? Okay, Mr. Reena, I think we just need to unmute your audio. I think your Zoom is on mute.
I'm
Yes.
sorry. The reform process has now been accelerated because we have always had this reform for the last 12 years, starting from 2014. So a lot of the final journey towards reforms is now being completed. And the main issue is decriminalization of laws, making laws simpler, removing penalties, prosecution. All this will help in the reform process, making the law simple and making people, the foreigners, come and invest in India. As I explained earlier, the rationalization of the transfer pricing regime, advance agreement regime, making presumptive taxation mandatory, which will be something which all foreigners want to look at. You know, we have been having this presumptive tax regime for foreigners right from 1976, for airlines, for shipping companies, for power plants, for those who are in the exploration business, and this has worked very well. So foreigners now want to have a decisive amount where they would have to realize how much they will have to pay by way of tax. Certainty is now being brought in, tax certainty, less litigation. This is the real reform which we need. And because India was always perceived as a country where there was a lot of litigation which went on for 20 years, 25 years, nobody wanted to invest in a country where we had litigation for 25 years. Now all this is gone. This is the real reform, making life simpler, making people easy for them to invest. They know exactly what their tax liability is now going to be, and therefore they will factor that in when they set up a project.
Yeah.
This is where foreign investment will come in. I think the real reform is when foreign investment comes into India. Foreign institutional investors are fair weather friends. The market will keep on dancing to their tune. But what India needs is foreign direct investment in industry, in manufacturing, in data centers. This is where the whole budget is about. Bring in money which is permanent so that the rupee stabilizes, the fluctuations in exchange do not take place, exporters tend to gain, making India export-oriented country, like for example sandalwood industry, just to give you one illustration. Now sandalwood is a great export potential. If we can increase the production of sandalwood in India, the export market will boom. So we have to now take advantage of that, especially with all the FTAs with the European Union, where there's zero excise duty, zero customs duty, zero tariffs. All this will make India a great destination, both for investment and for business. And this is where the reform process is now at this stage. The final leg of the reform process has been initiated in this year's budget.
Okay, thank you so much, Mr. Ranina, and thank you so much, Gokul. We'll thank you at that point. You have to be going elsewhere. Thank you so much for being with us and sharing all your insights, decoding for us the fine print of the budget. But Nishchal, let me come to you again. And I wanted to ask you specifically when it comes to sectoral bets, what should those be for investors after the budget? We have seen some outlay increase in defense to 5.94 lakh crores from 5.68 lakh crores earlier. Do you think the railway corridors that have been announced, we've been discussing about announcements on semiconductors, rare earth, how are you really going to be maneuvering these announcements and selecting the key winning pockets for investors?
So I think 2 or 3 things basically which I would clearly want to highlight. One is the government focus on manufacturing. That has been very clearly, whether it was setting up those 5 fast-track railway corridors, that's going to be a big flip to the whole construction industry as well as the railway gear manufacturers. The second one is the semiconductor side of the business, basically where government has given this huge tax incentive for foreigners to come and set up the data centers in India. And the third one is defense, where the outlay is once again been increased by around almost 20-21%. And the fourth one I would say basically is pharma. These are the 3-4 sectors basically which I would focus on. And most of the others are basically like rare earths, they are focusing on. So I think there are 4 or 5 sectors very clearly, but rare earth I would put in largely into manufacturing. So these are 3 or 4 sectors basically which I would focus on from the budget takeaway.
Right. Nishchalji, thank you so much for sparing your time, especially on a Sunday. And I'm sure that your Excel sheet, which details all earnings and all projections, will be working overtime tonight to find out winners and bigger guests bigger market movements that might come in over the next 12 months or so. Now for basic clarity on research post the budget. What should investors be doing? We are now joined by Mr. Nitin Raheja, Executive Director at Julius Baer Wealth Advisors. So Mr. Ashish Somaya joins us from CEO at White Oak Capital AMC, and of course Mr. Harendra Kumar, MD at Institutional Equities for Elara Capital. Coming to you first, Harendra, your thoughts on balance. How does the budget look after 1 hour of speech? What is your research team focusing on?
Good afternoon, Shell, and to everybody on the show. I think this is one of the very big pivots that the government has done with this budget. I would like to take a few minutes to explain. This follows the slew of FTAs that the government has signed, and this budget focuses on creating an ecosystem that will drive productivity, production, and the entire value chain to make us an export champion. So that's the underlying message of this budget. If you would have read the economic survey, our potential growth rate has gone to 7.5%. That we would have sustained if, on the long term, if we would not have taken such reform measures. But now with FTAs in the play, we needed to create a manufacturing ecosystem. The budget has catalyzed that. I think 27-28 onwards, we should see an incremental bump up in our annual GDP. If all the announcement that's been put out in the budget today actually get executed. So all in all, it shifts the budget towards a more manufacturing export oriented. The key emphasis, of course, is medical tourism, also export of individuals to UK, EU, etc. Then you have textile parks, then you have semiconductors, and then you have data center and nuclear energy. So a lot to digest for the market with respect to future opportunities. I think the devil will be in the details, but I think it's worthwhile to go in and find opportunities there.
Let me go across to Ashish. Good afternoon to you, Ashish. We are seeing a bounce back into the markets. From the lows, we are back up 1,000 points as far as the Sensex is concerned from the intraday lows that we've seen. We're also looking at the IT sector now up into the green as well. The safe harbor announcements that have come in and probably some others that have really led to some sentiment revival on the D Street after they have initially, we've seen the knee-jerk reaction on STT. How would you look at the announcements there? What would your approach be specifically on IT space?
So I think, if you really ask me, the budget has done a lot in terms of, like when you mentioned IT space, the safe harbor announcements and, a lot of the clarifications or, minor changes which actually, result in ease of doing business as well as, simplify interpretations. I think all of those are welcome. In fact, overall, if you see the budget itself, my first impression was that market would react negatively because STT was increased on FNO, and on the other hand, for some reason, everybody wanted to hear something about making capital markets more attractive, through some capital gains related or dividends related, some announcement. So obviously none of that has happened, and on the other hand, FNO, STT has gone up. So I think there was this initial knee-jerk reaction, but if you leave that aside and then you focus on the other areas, right, which is, say, for example, data center related investments having a tax holiday, or for example, all the announcements about making manufacturing more attractive, so all of those things are actually positive. I think the market would obviously get preoccupied or overwhelmed with the unexpected further increase. And I think FNO, we're probably coming in from this sin tax kind of perspective, almost it looks like, right? Maybe that was unexpected and probably not even required when, market is anyway struggling. But if you leave that aside, overall, my sense was always that, market would move ahead of that and look at the other aspects of the budget.
Let me just take this opportunity, Mark, the IT sector, as Sakshi pointed out, 1,000-point uptick on the Nifty IT index from a low of 37,300, now at 38,670. So that's more than 1,000 point. And look at how TCS, Infosys and Wipro are moving. TCS is up 2.7%. It's the top contributor on the Nifty. Infosys has surged 1.4%, and Wipro and L&T, Mindtree, are also gaining strength as we speak. Let's get Mr. Raheja into the conversation. Good afternoon to you, Nitin. Your first thoughts on how the budget shaped up?
No, I think most important facet was how do you sustain economic growth and improve economic growth. I think that is the key element. Let's not forget markets are very often derivatives of that, and markets attract flow based on economic growth. So I think from that perspective, if you look at it, what is very different is if you look at budgets traditionally, the first half of the budget always talks with a long monologue on rural agriculture. This time around it was different. It clearly showed where the government was going. It talked about manufacturing. So I think the fact that we have these FTAs in place, the fact that improving the share of global trade in our GDP has become important. The fact that new age areas as semiconductors, electronic manufacturing systems have become important. And that's sort of manifest in the kind of announcements that were made, for ECMS from 22,000 to 40,000 crores, the tax holiday for data centers. I think the budget seemed to have, identified clearly where the problem sort of rests and lies, and how do you sort of improve that growth. So whether even it was talking in services, whether it was tourism, and a lot of MSME and SME related areas, I think that's more important. The issue from a market perspective and a disappointment, I think it's pretty unfair considering that you've just had these tax tweaks to capital gains a couple of years ago. You had GST just about 3-4 months ago, and suddenly to have more tax changes, I don't think that was being rationally expecting this. Let's understand where we stand today. We were growing at rates of 15-16% our earnings, saw a slowdown in rates. We didn't have a big AI story. If you look at it from a global investor perspective, the key reason why we've been sealing this out is because India is perceived as an anti-AI trade, where we didn't have any clear story there. Today, you have put in a framework for the data center and given tax holidays till 2047. You've talked about investing in the semiconductor area, right? So you're trying to address one of those narratives. The flip side of that is some of the emerging markets, such as Korea, Taiwan, on a relative price to growth basis, PE to growth basis, look far more attractive, and hence money is going there. So you need to up your growth rates to get that money back. So I don't think that it's been particularly unfair from a capital market perspective. Yes, you could have probably, we've had a lot of tweaking with the STT in the past, and we could have sort of put, it to rest there. So I think that's the only, if you were to call it an irritant, but I think by and large, I think the government seems to have identified the key areas where it wants to grow, and they seem to be, indicating that's the right direction. So I'm not really disappointed. I think, this is more knee-jerk. I think markets ultimately will be driven by company growth and results.
Absolutely. So Harendra, let me bring you in as well. Given, just taking off from where Nitin left off, in terms of once we see the market sort of stabilize post the shock, and they've already recovered over 1,000 points, they're looking a lot better at this point of time. Do you feel there are certain sectors that we're going to start to see amplified interest in going forward as the markets have a little bit of time to digest some of this news?
Absolutely. Before we go to your question, let me also clarify on the STT. While this specific, tax will be negative some stocks, but it is a multi-dimensional positive for the economy.
Okay.
Number one, it's a very large tax collection source in the budget. Number two, a lot of the Indian youth was only playing F&O trades, and it was also guzzling up the savings. So with this money pool back into the saving system, it will be deployed productively. And number three, so it's positive on banks and it's positive consumption. So a cross section of players will be, the ripple effect of this tax will be positive on cross section of the economy, but negative on a few stocks. So it should be seen from that context, and there is merit for the government to go out and put such a tax. So now coming to the other sectoral benefits, I think the clear winner out here, of course, is textiles, number one. Number two is the fishery and agri piece. Again, if you will look at the subtext of the FTA's fisheries, aqua exports are a large factor. Third is leather and shoes. The government spoke about sports and others. So this is catalyzing a lot of sectors which are not traditionally a basket where fund managers have been investing. And third, of course, is nuclear energy, which is power, and of course the IT sector. So because we're going to be dominant exporters of engineers or skill set. So they've catalyzed a lot of sectors. These were not part of the playbook for investors till December. I think they will start evaluating them post this budget.
Right. Let's welcome in Mr. Pankaj Tibrewal, Founder and Chief Investment Officer at Ikigai Asset Management. Good afternoon to you, Pankaj. Where does work begin at this point of time? Are you happy with the fiscal glide path? What attracts you towards sectors? And broadly, how do you see this budget?
So I think budget is quite pragmatic, contrary to what the market is showing on the screen. And I think markets slightly bit is disappointed on the STT hike. But as equity investors, I don't think it should be a big botheration. And also when we look in the past, in the initial short term, there are some impact on volumes. But over a 3 months period, I think that gets adjusted. So yes, in the environment we are in today, market has taken it a bit negative. And over the last couple of years, we have seen enough documentation that finally retail investors losing money. And this is a step to discourage that kind of investment in futures and options. But the main positive, which I think budget is missing out and people are not talking, is the buyback tax, which has been rationalized to capital gains. A large part of corporate money was not going either in Capex or not getting distributed back to the investors. I think with the adjustment done back to capital gains, and corporate promoters at 22 and individual at 30% is a very, very welcome move. And from an overall, quality of the budget, I would say it's pragmatic. You have laid a lot of things on futures like data centers, AI. You have doubled your outlay on electronic manufacturing, and India has shown the way to the world. And a lot of manufacturing push. So I would say that market is currently overreacting to it. It will digest it slowly. from the day's lows, we have seen some recovery. I think over the next couple of days, market will digest that it's a very balanced one, not a very, negative one. And I always say that no negative is a big positive. So yes, except the STT part, there is, which market has been worried about. And there are, some kind of expectation at the margins that you will tweak with the long-term capital gains or short-term capital gains on the lower side, which has not happened. But otherwise, I would say that it's a pragmatic budget. It's a balanced budget. I don't see much negatives out there. In fact, there are a couple of positives.
Okay, pragmatic and balanced budget. Ashish, coming to you. Give me 3 top hits, that you found out from the budget, and 3 big misses that you think it's an opportunity gone, for the finance minister this time.
So see, I think, the top hits clearly, if you ask me, is, like say, for example, what was announced on the myriad set of simplifications and rationalizations related to all safe harbor related stuff. I think those kind of clarifications, they always help. Second thing is, if you ask me, it is related to the whole manufacturing, like Nitin also mentioned. He is absolutely, he said something very, very insightful, and I must appreciate that. Usually you see like a long description about the rural economy and those kinds of things. I know those are important and the government invests there, but this was all about manufacturing and manufacturing. And the third was obviously that, 2047 is obviously like nearly 21 years away. So taking such a long call and engendering a scenario where people can invest in India, and run cloud services and data centers from India for serving the whole world. We have a good amount of, we have land, we have the necessary infrastructure we are putting in place. It will be a fillip for energy and power sectors. It will, put us on the map when it comes to data centers. So I think those are the important ones that one can really focus on.
Right. There are clear emerging winners at this point of time, Abha, once the fine print is digested. One is the IT sector. You've talked about safe harbor. Sakshi's mentioned that. All our guests are also pointing about the fact that IT seems to be looking good. Also taking it away is to some extent the pharma space, both in terms of manufacturers and of course the hospital chains. Remember, with this problem in Bangladesh, which both countries are having, India and Bangladesh, a lot of medical tourism came to a bit of a pause. We get a lot of medical patients from Bangladesh, and that was an issue that both countries were trying to sort out. So these are 2 clear winners, and the fact that the Nifty is now well above 25,142. So it's both a shakeout as well as short covering. From a low of 24,577, we are now at 25,147. It's a clear 400-point uptick.
It's a steady budget. It's one where she's managed to holistically really look at all different parts of the industry. It's a progressive budget with clear moves on new age technology, on upskilling, so on and so forth. And it's also an inclusive budget with things like reducing tax on medicines that you may need on key illnesses, whether it's reducing tax on items for personal use. I keep on mentioning that because these will be big fillips, and very soon after we've also seen that import tax cut on luxury automakers. There's clearly a trend that's sort of emerging there as well. So she's also had sort of more inclusive measures for those with disabilities, for women entrepreneurs, for MSMEs. I mean, she's covered an entire spectrum, an entire gamut, and I think we will start to see that reflect in some of the pockets as we move along, from renewables and energy as was expected, pharma, AI and data centers, hospitality and tourism, and we're already seeing a little bit of move when it comes to that segment as well in the market today. Sure.
Yeah. Harindra, coming to you, this question of restructuring the public sector NBFCs, in particular PFC and REC, how do you see that panning out over the next 18 months or so? Is there a merger on the cards?
Technically one is a holdco and one is a sub. Right. And the point here is that India is looking at a huge expansion in the nuclear capacity. A new Electricity Bill Act is also on the anvil. which is looking at restructuring the state electricity boards with respect to what they have to do, and the data centers need to be funded. So you can only speculate with these aspects, and clearly you require huge funders for this credit guzzling programs that is on the anvil. So if you ask me, the major worry for PFC REC was the dwindling opportunity with respect to the SEBs. Now with nuclear and data centers availability and some tweaks in their MOAs and articles of association, a new opportunity might come up. They're great businesses, great companies. Maybe realigning to a new opportunity is what my reading is.
All right, let me also thank Ashish Somaya for joining us on the show today. Ashish, thanks so much for joining us. Okay, let's take a look at the markets as well. At 1:30, so we're looking at about an hour post the budget speech. Clear recovery coming in. The Nifty is at 25,130, down about 200 points now, and steady at this point. Remember, first budget on a Sunday, we'll see that rollover action. Tomorrow we'll see some key commentary also, of course, in the second half of the day on the budget as well, and the fine print. The Nifty IT index is now up 1.5%. It's looking really good. I've been waiting for that reaction, and it's finally coming just in the last couple of hours of trade, Shell, but IT is looking good for sure.
Yes, that's true. Let's take this conversation forward with our phenomenal research panel. A view coming in from Julius Baer. Nitinji, when you look at the global picture and the absence of a clear AI trade at this point of time, what the government has done is tweak the data center setup and given a very, very long tax break. Given that background, what are the 2 or 3 stocks or 2 or 3 subsectors you think will do well? We clearly do not have an AI trade in India as of now.
Well, what could happen because of this is, if you really look at it from an AI perspective, some of the and data centers, right? So one is you would see a lot of sort of T&D engineering companies who actually supply transformers and other electrical equipment which go into data centers. You could see the emergence of some of these data centers evolving into REIT sort of structures and providing an opportunity for investors as they go ahead. And of course, you could see real estate sort of benefit because of that. So I think these are some of the clear beneficiaries that are there immediately from a data center perspective.
Okay. We have Gaurav Dua also joining us. Gaurav, good to have you with us. We've just been dissecting and processing the budget speech, and markets are looking a little better right now. Let me get your first initial take on the Finance Minister's speech this time around.
So I think it was largely in line with expectation, apart from 1 or 2 announcements which I think have taken the market with little bit of a negative surprise. So it was more to do with the hike in STT, and secondly, the gross borrowing number has been higher than expectation. I think these are the 2 announcements which have basically hurt the street sentiments. Apart from this, there are like 2 announcements which were expected and have not come, which was to do with the rationalization of the LTCG, STCG, or to provide some kind of an incentive framework to attract FIIs. So I think barring these 4, a budget is largely in line with the policy statement. It is in line with what was expected. The fiscal math also, I think, is very, very realistic. Nominal growth of around around this 10%. Tax receipt growth of around 10.4%. The Capex allocation as compared to the revised number is pretty high. The effective allocation stands at around 17.1 lakh crore, which is around 22% hike. So I think overall, after this initial knee-jerk, what you see the selling in the market, I think the markets will come back to fundamentals will come back to fore, and things will stabilize.
Oh, Gaurav, how are you looking at stocks like Anant Raj? It's now up by 11.5% odd. The first 10% circuit has also opened. Remember that tax holiday announcement for making India a data center hub is really doing, its wonders at this point in time. How would you look at this announcement by way of any opportunity in the data center space? Anant Raj, do you think is the best placed stock there? Are there other opportunities too?
So I don't track that stock, so I will not be able to comment. But yes, there are a lot of stocks in that space which I think will do well. Apart from this, there are a lot of power transmission and transformer companies, generator companies, which I think will do well because of the expansion in the space.
Okay. Well, that's the story so far, ladies and gentlemen. After a very, very strong knee jerk, the market seems to be finding sanity. And of course, this was a very light market before we began. Remember Sakshi's opening comments, 4.5% down in January alone. The Nifty was the world's worst performing global index. Well, to say that there were not many negatives is itself such a big positive, and perhaps that's the reason why you see this knee jerk. As good a time as any to invite Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sudeep is smiling, so he's digested the budget and read the fine print and will now offer his critical remarks.
I want to ask Sudeep some specific questions. Sudeep, of course, on the fiscal glide path and also the dilution in terms of the move towards 4.3 versus 4.4. So the states are actually going to get less, and that's probably going to play out politically. And thirdly, she's even addressed bond markets. So fairly significant measures across some of these key paradigms.
You're absolutely right. I think the government has very clearly stuck to the path of fiscal consolidation. And that's quite commendable. And they have been doing it year on year. So I think it's a very good thing. They have maintained 4.4% target, and they're going to remain on target. Next year's target, they're put at 4.3. So the roadmap continues to remain as mentioned many years back. The other thing I would like to point out is that the capital expenditure, I think there were a lot of talk that whether they will be able to maintain or not, whether they will reduce. But they have not only maintained, they have taken it up to 12.2 lakh crore, which is roughly about 9% more than last year's. So I think, again, that's a very, very commendable thing because, private capital expenditure hasn't picked up and government continues to do the heavy lifting. So these two, I would say, are very good steps which the government has taken. Apart from the, sector-specific measures and other things, the net borrowing figure looks absolutely fine. The gross borrowing, there's a little bit of confusion still because the gross borrowing figure which has been given out by the finance minister looks little on the higher side, but one needs to study the detail to understand the nitty-gritties there. But on the face of it, it looks a bit higher. But what the market is reacting to is, of course, the STT. Yeah. The futures STT has gone up by 150%. The options, it has gone up by 50%, and definitely the market is upset. There was some expectation of some long-term capital gains tax exemption or relief or things like that. While that hasn't come, the STT has been hiked significantly, and that is creating a lot of nervousness, a lot of selling, and a lot of panic in the market. I expect this to continue today and probably tomorrow also, because today FIIs and foreign investors are not present in the market, being a Sunday, and tomorrow they will come. So you can expect weakness tomorrow as well as pressure on the currency tomorrow.
Right. Abha, the bond markets are shut. The rupee is not trading.
Yeah.
Call money market is shut too. The only people who are working are the equity guys, and they are getting dodged.
Yes. That's true.
Welcoming, how should I describe Trideep? Well, he runs a wonderful mid-cap fund called Edelweiss Mid-Cap Fund, which has done phenomenally well over the last 3-4 years or so. A warm welcome to you, Trideep.
Good afternoon.
What are you thinking at this point of time in terms of a stock picker What does this budget open for your research team in terms of new picks, and how do you navigate the pain points?
See, markets occasionally, once in a while, finds an excuse to wave off the extreme momentum in certain trades which have been prevalent over the last month or two. Whether it is in commodities, whether it is in some of the capital market stocks, or otherwise, basically it's been going in one direction for a good few months. Some of the measures that have come through in the budget, like STT, the previous gentleman was talking about, breaks a bit of a momentum in that we see as a bit of a pause rather than kind of changing the major direction. It's probably not yet reached the levels where one could start bottom hunting, but I would keep an eye on two sectors particularly who are also taking a knock. One is defense, where stocks have corrected despite allocations being up. Secondly, after a strong run, if the capital market stocks do come at a reasonable levels, would be happy to take a look at them. At the moment, I think we are just watching rather than trying to take action immediately.
Well, that's a very interesting point you mentioned, Trideep, the fact that you might take a look at capital market stocks. Abha, this cut in STT also has an this jump in STT also has an implication on the valuation of the NSE IPO, because a large chunk of volume comes from options trading. Look at how BSC has moved down 9% last time I checked. So that's a very sensible thing to look at. You look at beaten down valuations and then maybe re-enter the same sector. Gaurav with us. Gauravji, a thought on how you see this 7 sectors that the government has highlighted. What will the research team at Stanchart Securities be looking at? Rare earth metals, the semiconductor space, you have biologics and biopharma, you have a choice from the railway space as well. What attracts your attention the most?
So I think these spaces were already in focus. If you see, a lot of being done in terms of basically trying to incentivize the growth there. So biologics is something which has been there in our listing radar. Semiconductors, electronics manufacturing is again spaces which have been doing well and is a part of our focus. But overall, what we believe is that macro environment has clearly changed. The government over the last year or so has done a lot to stimulate the demand, and that is why I feel that this consumption and the banking space, financials, could be the leaders of the next leg of the rally in the market.
All right, I love that. Let's talk about that a little bit more when it comes to banking and financials. And Sudeep, we were really talking about how the focus has shifted now that the banking sector has become so robust in terms of really how we can increase deposit growth. We're looking at further consolidation. We've looked at capitalization of the banks, and equally some of the measures announced today are all pretty much in line with ensuring that things move along in this direction and continue to contribute to the growth economy. What's your take when it comes to the banking and financial space?
I think definitely the announcement of a standing committee on this on this area, I think is a welcome development. They will try to further facilitate the streamlining of this sector. There are small issues here and there which can be ironed out by a standing committee, which continues. It's not a one-time committee; it's a standing committee. The other announcement, which I think is not directly linked but related, is the divestment target, disinvestment target has been raised from 33,000 crore to 80,000 crore. Of course, this is still a very conservative target, but I'm assuming that IDBI transaction will get completed, and I'm sure that is included in this 80,000 crore target which has been given out by the government. Probably this will also include further divestment of stake in LIC. So I think these two financial services related activity is also planned by the government, and I think in the long term these are very, very positive development for the sector as a whole.
Okay, one standout winner for the budget, Abha, is Anantaraj Industries, now up 13%. I think each passing 15-minute window, it's adding a percentage points to its tally. And 5.7 times the 5-day average has been traded, which is 1 crore 35 lakh shares as we speak at about 1340. Sudeep, at this point of time, your entire mid-cap and small-cap space is undergoing a massive churn, as also, a rethink, if I may say so. What are you trying to communicate to your investors in the small-cap and the mid-cap fund in terms of when the tide will turn? Do you think the budget has it?
I think budget in that context in the historical years have gradually kind of started being lower in importance in the context of investing, particularly medium-term investing from whether it's large caps, mid caps, or small caps. I think we have been saying for a year or year and a half that there's been a strong 3 or 4 years of small cap performance. We might see a bit of consolidation. What we are saying in small caps particularly is that we are in the final stages of that consolidation in the next 3 to 6 months, and after which they start getting kind of attractive as well. In the context of mid caps and budget, since some of the sectors where mid and small caps are heavy, which include capital markets, some of the defense names, the announcements have not particularly been pleasing to these segments. They are obviously taking higher knock than otherwise. But it doesn't sort of change. There are other sectors, like, for example, hospitals, which have done reasonably well. Likewise, some of the EMS areas are kind of, gradually coming back. So I think mid and small cap is a segment is all about stock picking and how do we pick those areas where the valuation growth equilibrium is still in favor of investing. And we continue to do the same on a day in, day out basis. That's worked well for us in the past and will continue to do that going forward as well.
Okay, fair enough. Let's just take a look at the markets for a moment. Just mark the action there right now. Nifty 50 still down about 1%, about 200 points as we speak right now. Share any bright sparks that you're spotting?
Yeah, Abha, I was just thinking of marking the entire internet space, something that you are very well connected to. Yes. So deliveries
I did see that, but I wasn't being able to connect the dots.
Exactly.
Yeah.
But the fact is that,
is it TCS? Is something to do with...
No, I think all those safe harbor statements and plus the fact that they were really beaten down. So look at Paytm, top gainer in NSE 500, 5.5% higher. You have delivery buzzing. You have a lot of strength coming into Honasa, and there was one more stock that I saw from the internet space that was doing well. Let me just find that out. But I was just trying to somehow fix 1 plus 1, but well, it's sort of not getting into me at this point of time. But mid-cap IT, look at Emphasis. That's doing pretty well, 1.3% higher, 1840 for you. My apologies, 2805 for you. And a bit of the insurance space also coming up. But then winners are few and far between. And at this point of time, the Nifty, ladies and gentlemen, is still down, but not down that badly. 1% lower, 25,056. And just let me tell you, the low today was 24,571. So a bit relief.
Okay, so I think to some extent they're tracking, of course, I guess, further boost to consumer spending, more digital transactions, so on and so forth. But Sudeep, anything that you're spotting as to why we're seeing some of these e-commerce or internet stocks higher post the budgets? It's particularly, all of them.
Well, I think very clearly there are two things which are positive. One is this buyback-related announcement. That is significantly positive for most of these IT companies. Remember, Indian IT companies have been doing regularly buybacks, and this buyback taxation has changing the buyback taxation the way they have now done brings back a lot of relief to the non-promoter shareholder category. Instead of being taxed as a business income or a normal income, now onwards, buyback will be treated as capital gains in the hands of non-promoter shareholders. This is a big relief, and I think this will encourage further buybacks by IT companies. And I think that's the reason why some of these stocks are getting excited. Also, the data center related announcement and the kind of relief tax holiday being sought to be provided to this sector for this entire space, I think is encouraging the sector. Not sure at this stage, other than Anant Raj and few other companies who are into data center building, who will benefit and how far they will benefit. But I think this is a good development, and some of the IT companies may look forward to taking benefit of these.
Right. I'd like to also mark 4 stocks. They may be in the red, but Abha, before markets began, they had hit record highs. In order of seniority, State Bank of India.
Yes.
At the moment, 1,034. It's down 4%, but early morning it hit a fresh peak. BEL down 3.5%, but fresh high. Oil India, and of course, Axis Bank. Sudeepji, this comes to you. We haven't discussed Axis Bank ever. This is not a stock that comes on any radar or any show, but yet we see a nice record high on this one. How are you looking at the private banking space? More importantly, the increasing importance of State Bank of India post the Nifty and the Bank Nifty weightage rejig.
Well, I think, Shalji, I have been positive on the PSU banking space for some time, and I maintain my view. As far as Axis Bank is concerned, of course, amongst the larger private sector banks, Axis Bank valuation-wise looks attractive and definitely worth picking up from a medium-term perspective. But if I have to pick up, 1 or 2 banking stocks, I will still go to the PSU pack. SBI has been my favorite for last 1 year plus, and I continue to maintain my positive view there. If you look at the valuation, it explains itself. Some of the large NBFCs quotes at 5 to 7 times book, whereas SBI still quotes at 1.1 time book. If you look at the smaller PSU banks, and some of them I like very much, mid-tier and smaller PSU banks, they are really quoting still at a significantly discounted valuation compared to their private sector and even NBFCs, and they definitely deserve a better valuation. So those can be picked up. And this has nothing to do with consolidation, which the government is talking about. Whether consolidation happens or not, these stocks are definitely worth picking up.
Abha, one real big corporate battle which is not getting reported but is happening is between the market capitalizations of State Bank of India and ICICI Bank. Every day they fight, 2,000 crore idhar udhar, it's like a tug of war. So the moment the rejig of the Nifty and the Bank Nifty was put into place, SBI's weightage increased and therefore funds started buying. Once funds started buying, the market capitalization came up, and now it's a battle of wits, so to say. Aaj kaun aage aur kaun piche. So keep an eye out, ladies and gentlemen, on ICICI Bank's market capitalization and that of SBI. Remember, SBI controls 26% of Indian banking, yet is not the top bank in terms of market capitalization. That crown is with HDFC Bank, and it is far ahead of the pack.
Okay. Let me thank Trideep. Trideep, thanks so much for joining us. Good to get your perspective on the budget. And let me go across to Pankaj as well. Pankaj, in terms of what to watch out for, I mean, we're still heading towards closing, so let's not completely sit back yet. But once the market has a complete chance to process the budget, what are you anticipating in terms of sectoral implications going forward? Okay, I'm not sure. Okay, let me also check with Gaurav as well. Gaurav, both the money markets as well as, of course, FIIs are all going to really be addressing some of these budget implications coming Monday. So as we head into trade tomorrow, what do you think will be the likely things to watch out for?
So yes, I think given the high gross borrowing number which has come out, bond yields are not going to react in a favorable manner, and that again could have some impact on the banking stocks. But overall, what we see this is that, the core advances are growing. They have started growing at a healthy rate. The consumer demand push, which has been this thing given, will also help the space grow, especially NBFCs. So we think this weakness will be an opportunity in that space. Secondly, of course, some of these spaces like, this thing chemicals, defense, data center, and all these kind of stocks will be again in focus, because a lot of that small print will be worked out. How much of the allocation has actually increased for what space? And I think this is the spaces where what I see as of now has seen a significant amount of increase in allocation.
Okay. I'll also pull out a neat trick, Abha. This time what we'll do is, since the week is ending and we also have the beginning of February, we'll pull out weekly gainers. It gives you an idea how right or wrong the analyst was while tracking a particular sector, and you'll see a very distinct, how should I say, underlying tone. I'll request the PCR to kindly fire the weekly chart of GE Vernova TND. It's up 23%. Look at Schneider Electric, it's gained 14%. Power India is up 14%. ABB has gained 11% in the past 5 trading sessions. All of them, Abha, are underlying thoughts for the data center space.
I just love that, Shell's mood has drastically improved.
I'm having good coffee.
After the initial first hour post the budget. And yes, data centers clearly seem to be the big thing. And I know that Siddharth's been talking about this for a while and how this is going to be a big sort of pocket and driver of growth going forward as well. I'm just trying to look at, what else is moving as we sort of head into the last leg of trade, and also keep an eye out on other commentary coming in. But, we were talking about, for instance, let's look at the kind of NRI investment that they've started to kind of, they've eased, drastically cut actually, the implications there so that more NRIs can come in and invest in the markets. That's actually a pretty solid step, isn't it, Trideep?
That's definitely a welcome development. And I think this is one step which the government has taken, which definitely will have a good impact in the medium to long term. I'm not sure whether immediately there will be impact, but medium to long term, this is definitely positive. And this is par for the course. This should have been done, and this has been done. But I will also say that, at some level, the steps taken on fiscal consolidation, the step taken on ensuring that capital expenditure remains buoyant from a public perspective, definitely will encourage the foreign investors, considering the macro stability which the government is focusing on, to definitely come to India at some stage or the other. Of course, corporate earnings needs to improve, and multiples needs to become a little more reasonable for things to stabilize and they to start coming. There is an issue as far as currency depreciation is concerned, and we need to ensure that currency movement is not very sharp. Let's hope and pray that these things do get achieved in the medium term.
Okay. One sector, Abha, I'd like to highlight again. I'll request the PCR to kindly show the chart of Vardhman Textiles. Now up about 4.5% at 451. Amongst the 7 manufacturing sectors that the finance minister began her speech, she focused also on textiles, on the integrating of many, myriad schemes that they have, the National Fiber Scheme, providing capital support, providing technical upgrade and technological upgrade as well, on the khadi side, on the handloom side, as also setting up mega textile parks, including adding value-added technical expertise to the textile sector. So apart from Vardhman Textiles, there are many other smaller textile companies that are doing immensely well. One thing that had happened over the last 2-3 months or so, Abha, everybody was looking at the metal space. You
Right.
remember our early morning conversations on gold and silver every day?
Yes, every
right?
single day,
So
yes.
all that money actually came from these sectors that were taken to the cleaners for no fault of theirs. Because money is finite, you move from one to the other. And now the money is moving back in thanks to a tailwind provided by the budget. So a textile space is worth looking at. Also, please show Himmat Singha Textiles. Please show Gokul Das Exports. These are all fabricators, exporters, which may do well on the market as well. Abha.
Okay, let me go across to Gaurav as well. Gaurav, in terms of, we've been looking, of course, at the kind of reaction across the board. In terms of money markets, what's your sense? Is that an area that you're concerned about as well, with the pressure building up on the currency? We're not completely able to get a sense today, being Sunday, but how much of a concern is this to you?
So I think pressure on the rupee is largely because of the trade deficit, which has been growing. Our imports have been this thing surging. Exports, obviously, have been slow. So there's been a lot of demand for for this thing dollar. This thing supply is less. So that is what is putting this pressure on the rupee. Apart from the fact that you have these outflows from from FIIs, FDI has been inflows have been extremely muted. So given these two larger factors, rupee will remain under pressure. Having said this, on a REER basis, which is the real effective rate of of this currency, rupee is no more expensive. In fact, it has come down to a very, very undervalued zone. So hopefully, if this things stabilize, or if we have some progress on the India-US trade deal, I think the fall in the rupee will get this in control and limited.
Okay. Well, the trade deal seems to be pretty elusive at the moment, even though of course, we'll keep hearing the rhetoric that it's on the way, and it possibly is, but who knows how soon that will happen. All right, we'll keep that on our radar, of course, but there's a clear alignment towards increasing ease of doing business, digital transactions, move towards AI. And of course, we talked about data centers. So, definitely progressive and aligned with, also looking at tech progress and trying to, increase the efficiency and ease of doing business as well. Gaurav, would you say when we look at it from that point of view, we were talking about e-commerce earlier, but even some of the tech companies are all likely to benefit. Nifty IT is now up over 1% this afternoon.
Vivek or Vivek Agia?
Hello. So I think IT is doing well because of the safe harbor changes which has been done. And second, the mid-cap IT has been outperforming anyway for past about year and a half. That is because the niche IT players in this mid-cap space have been showing a much steady and a healthier growth compared to the large cap IT companies, which are struggling to fine-tune their business model because of the changes that are happening in the macro environment, business environment globally. So I think mid-cap IT will this thing continue to do well, though the valuation there compared to the large cap IT are on the premium side, but I think that premium is very well this is justified.
Right. Thank you, Gaurav, for spending your time and, of course, sharing such wonderful thoughts on the market. We now welcome Mr. Dhirendra Kumar, CEO at Value Research, a person who looks at the entire equity space with a kind of calmness that's unbelievable. He will narrow down what looks good, what looks better, and what is best for investors in the longer term. A very warm welcome to you, Dhiren. Your first thoughts on
Thank you, Shailendra.
How the budget panned out and what is good for us in this document.
The good for us is that we are still a growing economy. The good for us is that we have not borrowed our money to poverty. We are not going bankrupt. I have been, a votary of doing uninteresting things, doing boring things when it comes to financial stuff. And this is what it is. It's a very boring budget, nothing interesting. If you are making 12,75,000 rupee last year, it was tax free, it remains so. Some tweaks here and there, and mention of AI 10 times in the budget speech is just interesting. Some incentives here and there, tweaking. And one thing which looked clearly, what actually dragged the market soon after.
और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है। दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले। इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है, वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है। देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है, वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं, उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव गरीब किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
तो अशोक प्रधानमंत्री
Dhirenji, can you hear me?
Can hear you, Shailendra.
Please continue with your thoughts. I think you're on mute.
No, I'm not. Just check at your end.
Yeah, it's better now. Please continue.
Okay. Yeah, I was actually, started thinking little differently when Prime Minister was saying that, they are working, they have, earmarked resources for Khelo India, Khelo. On the other hand, what has happened, as for an active trader, STT on futures increased by 150% and on options by 50%. This is actually pulling people away from Khelo India, Khelo in the market. This will be a big dampener and it's good news. Raising transaction costs significantly, options STT from 0.017 to 0.025. It's a big thing, 150% on futures and 50% on options. So what SEBI has been coming out with all over these years, 92% people losing. Now maybe, with these costs, if people don't really become, and that is encouraging long-term investment. People should not participate in the market for a few days and on an intraday basis. And this is something which was completely unexpected. Everybody was talking about a reduction, and we have seen a big jump here.
Also joining us, our common friend, Mr. A. Balasubramanian, the CEO at Aditya Birla Sun Life Asset Management Company. Good afternoon to you, sir. For a bond trader, which you are a very well-known one, what do you see are the changes that have happened in this budget? And of course, how do you see this document helping capital markets as such?
Sure. Of course, I see it's a good budget. I think if you look at the overall, the approach that they have taken, especially building long-term sustainable growth in the country, focusing on multiple sectors, including MSMEs, as well as health sectors and tourism, and even the manufacturing sectors in continuing what the support they used to give earlier, and now expanding that definition to other sectors, including energy sectors. That's something I see as a good long-term growth, sustainable budget. Secondly, they also give a lot of visibility in terms of taxations, especially giving a data centers 2047 up to 2047 tax holiday. This is something over in the past it has happened. That one they are given very clear visibility for taxation structures so that they can come freely. And third is the safe harbor mechanism they have introduced, especially for GCC and other such industries. Also giving a clarity in terms of taxation, which has been sometimes that becomes one of the point of discussion when somebody wants to build. So in that sense, I would say give big mark for the budget, focusing on the long-term sustainable growth for India. With respect to the bond market, I think the borrowing program, the gross borrowing is about 17.1 lakh crore, which is higher by about 40,000 crores compared to what the market is expecting. But however, they have stated that net borrowing would be about 11 lakh crores, which is more or less at par with the last year number. Therefore, ideally speaking, the bond market should not see much impact. Today, the bond market was closed. Therefore, we couldn't see the immediate reaction in the bond market, both in the currency market and this, I'm sure will be known tomorrow. But as it stands today, the expectation about 3 or 4 basis points reductions in increase in yields because of this confusion that exists. But otherwise, my own belief is the divestment target that we have put, this time the divestment target is not by way of selling shares. I think it looks like it will come through the monetizing the real estate asset that the public sector companies are owning it. I think some bit of revenue will come from there, as well as the RBI receipt, about 3.5 lakh crore they are taking. Also would ensure that the borrowing program doesn't is more or less met in the same level last year. So as for the equity capital market concerns, the STT increase, it's actually in a way I see as a positive. And given the fact that the people have been trading in the F&O market and not only losing money, they also pay higher STT transaction tax. They can now more shift towards either the cash market or the mutual fund investors. Okay. I see as a positive on that front.
So two people, ladies and gentlemen, have publicly said that the 150% increase on tax on futures trading on STT and a 50% increase on options are actually good things which they are very keen on. Dhirendra, coming to you, you also run a wonderful research outfit for stock picking. With this budget document in front of you, the sectors that the government is now focusing on, plus the fact that REITs and InvITs have been given a fillip, what are things that are coming to your mind when your research team sits with the document today? What are the thoughts that you're looking forward to in terms of newer and better stock picks for the next 2 years or so?
The devil lies in detail, and that will take some time for us to decode. We are going through the document in great detail, and the market has the tendency to discount the future immediately or instantly. And in that way, broadly speaking, if you look at the decline in the stock prices of the brokers and the exchanges, it's quite understandable. That is the business model. They make money when people trade. And if the whole design is to discourage trading of an unnecessary kind, they're going to be... So the negatives are clearly visible. And one thing which comes out very clearly as a result of the broad number that has come up, the spending mix of the government, yes, or we are looking like such a stable economy. The revenue deficit is stable at 1.5%. Effective revenue deficit, half to 0.3% from 0.6. That is real. If I have to look at these numbers as a company, I'll be very impressed with the cash flow.
To both you gentlemen, Bala sir, first coming to you, the macro balance sheet was strong, and that's visible in the economic survey as also the budget document. Now, with this global turbulence that we see and the record low that we have on the rupee, do you think there are some steps taken in the budget to stem the flow of the rupee at this point of time, which may in turn help foreign institutionals to at least pause their sell mode? Bala sir, first to you.
In the step that is being considered is to make investment destination of India more attractive, such as the safe harbor measures is to attract more FDI investment, and giving a data centers tax holiday is again to bring in people like Google and others come to India, make India as a hub for the data center, not only produced for India through the subsidiary companies, even for taking the service to the global market. This, in my view, is the focused on FDI. And second is giving importance for certain sectors like textiles, giving them some kind of incentive for the sectors, again as export-oriented sectors. I think they are mostly focused on more on business-related stuff rather than portfolio-related stuff. With respect to the portfolio related stuff, I think they have made a clear definition on PROA, which is a person of overseas origin. And then the ownership on companies, it was earlier 5%, 5%, 10%, or 10 has been made to 24%. Anybody who is actually overseas investors who wants to own a single company exposure, either collectively or singly, at about 24% they can own. This, in my view, not only give a clarity for the ownership coming from overseas companies, overseas investors, it can also actually bring in more overseas investments into specific companies to own large chunk of them without getting worried about the regulatory framework. And the last, of course, is something they also done is to develop a GIFT City, which is again part of India. They have given a tax holiday for 20 years. If somebody set up a unit in GIFT City, not many people talk about it, but it's something which has come in the budgetary provisions where really the tax holiday about 10 years. Now the tax holiday has been extended about 20 years. Therefore, there are more and more asset management companies can be encouraged to actually look at GIFT City as an alternate to the IFC centers in which they are operating, either in Hong Kong or Singapore or London or even the Dubai. I think they can seriously look at GIFT City as an alternate. Therefore, the world can actually make GIFT City as a more of a base for the global asset management business or investment business. And that's something also I see as a big change in the budget. Therefore, the rupee dollar, I think, is something related to the current turmoil that we are seeing in the global market. But I'm sure with these changes, Reserve Bank of India may put their act to right. The next policy which is coming in, they may even address it next week that is coming in. They may address that as well.
Right. Thank you, Bala sir, and we look forward to engaging with you again next week once the budget document is discussed and detailed a bit more. Thank you for your time, sir. Dhirendra, coming back to you, two very important questions which are now niggling mutual fund investors, traders at large. What happens to the silver market? What happens to the metal space? You and I have seen these rallies, these speculative jumps that often happen. What should investors be doing now for those who have entered into the silver and gold ETFs recently?
You can't do anything because the market is stuck. And, going by what has happened in the market while the markets are closed, and today it's open, but these trades are not possible today in the ETFs. So you can't do much. You just have to carry on. And it looks like most investors, when it comes to investing in these, investors chase recent great momentum. And most investors caught in the month of, if once they realize that they have missed it and the scale of money that came in the month of December, looks like many investors will be stuck there. You can't get out of these ETFs. And I think it is also about time that investors should look at having these metals as part of their long-term portfolio. If it was such, then think in terms of, there might be correction, you might be stuck. If it was a speculative thing, get out of it, spur up your losses because it is going to be very turbulent. But, and right now, the market dynamics is such that because of the short trade and the covering and all that, the market, the trading dynamics is extremely unfavorable.
Yes.
And I don't know if you can work on some plan. But many investors, historically, I have said that, never have gold as a very long-term part of it. It's not a productive asset. Now I'm changing my mind as, most central bankers went about accumulating, the de-dollarization. It started gaining strength at such a scale that I would like investors to have, something like 2% to 10% allocation to these and substantially gold, more as a diversifier, not as a performer. Right now, investors are chasing it as a performing asset. So if you can think of it like that, fine. Otherwise, square up your losses, go back home.
That's a very sage, practical and brutal advice that is coming from one of the most longest term advisors and watchers of the market that I have had the pleasure of interacting with. Dhirendra, my final question to you. Now that a major event is over in our lives as financial analysts and investors, how do you construct a fresh mutual fund portfolio for a person who's entering the market, wants to invest 10 lakh rupees, is looking for creating long-term wealth? How much, where?
If you are investing 10 lakh rupees and you don't need that money for 5 years and more, I would urge anybody, because we are living in very eventful times. We are not in the market stability is missing, and and it's only accelerating. So I would like anybody to be investing 10 lakh rupees, a lakh of rupees every month. Choose for multi-cap fund. I'm not saying flexi-cap fund. It will give you a broad exposure of the fund of the market, or maybe three multi-cap fund and 25% of your money, 25,000 rupees, to be invested in something that you like, because many people have their own likings, dislikings, but make sure that you're investing in a fund which has 3 to 5 years of credible history, has been able to withstand a big decline, and build a portfolio of 4 funds to be invested over the next 10 months.
Okay, did you say 3 multi-cap funds and another 25?
I said, 3 multi-cap funds of 3 separate fund companies, so that you have a diversification of a fund manager as well.
Okay, do 3 come at the top of your mind?
No, I'm unable to list them, and I think it will be improper to list 3.
So we leave that for a different program. And your final thoughts that you might have on the market in general. I know you don't track it on a regular basis, but are we in a dislocated environment? Are times getting tougher for equity investors? Do they need to?
No, not at all.
Okay.
Not at all. In fact, I would say that these are very useful time for most investors, because if you are a long-term equity investor, you need intermittent corrections of severe kind to profit from it. And that is where traders get trapped. That is where short-term investors get trapped. That is when the way for you to buy low and selling high is only time is on your side. And for short-term investors, you don't have that luxury. So keep calm, carry on, think long-term. And make sure that you are diversified. You are not getting attracted to the fashionable thing, the fads of the market. And that is where investors will be disappointed when they start chasing the recent performance, chasing recent past performance and getting stuck.
Okay. One thing that's marked out the last 18 months or so is the resilience, or maybe the patience of investors in the small cap and the mid cap fund space. On a regular basis, we've seen SIPs being continued. Do you see something to the tune of, the last straw on the camel's back, which was this budget? How do you see this space at this point of time? Should investors continue with their SIPs?
Absolutely. In fact, the reason why the SIPs are carrying on, or they are not discontinuing, the scale is rising, and scale is rising month after month, is not because of market volatility, because investors have chosen a path where they don't get upset. Only when you invest 10 lakh rupees, 15 lakh rupees, 1 crore rupee, and then see the market tumbling, investors are not looking at the values on a month-on-month basis when you start your 10,000 rupee SIP with a UPI mandate.
Also, in terms of this budget's roadmap towards, improving the taxation part, the niggling things that happen between an IT officer and a tax payee. Do you see that being harmonized? The finance minister spent considerable time on detailing how the new regime will now be better in terms of, less interaction between authorities and taxpayers. Do you see that actually panning out?
Yes, I think it takes the pressure off. You don't have the deadline of December 31st. You have time till March. You can revise it. You can pay a fees. Having a mechanism of, some mistake, procedural mistake, some omissions, which you can fix it, and enabling a provision like that. The whole decriminalization of silly mistakes which we do in our accounting, in our reporting.
Dhiren, we'll just interrupt in a while. The CEO of the National Stock Exchange, Mr. Chauhan, is offering his views on the budget. Just hold on for a moment, please.
Already, महाराष्ट्र के मुख्यमंत्री जी एजुकेशन हब के ऊपर भी कार्य कर रहे हैं, और कई ऐसी चीज़ें जिससे इंफ्रास्ट्रक्चर भी मुंबई महाराष्ट्र का भी बहुत बढ़ने वाला है. तो ओवरऑल ये ग्रोथ ओरिएंटेड बट फिस्कली कंजर्वेटिव बजट पे कहूँगा.
एसटीटी के हमने देखे जो फिगर्स बढ़ाए गए हैं एफएनओ पे, तो कितना असर आप देखते हैं उससे?
एक तरह से जो अमाउंट बढ़ाया गया वो 0.05%, 0.02% से लेकर के वो फ्यूचर्स के लिए, और ऑप्शंस में भी एक छोटी सी बढ़ोतरी करी गई है। तो ओवरऑल मार्केट उसको अपनी स्ट्राइड में लेकर के धीरे धीरे एडजस्ट हो जाता है, और आगे जाकर के भी भारत माने जो भी एसेट्स हैं, जितने भी स्टॉक ब्रोकर्स लिस्टेड या एक्सचेंजेस लिस्टेड, उनकी जो एसेट क्वालिटी उस पर कोई खास असर नहीं पड़ेगा, क्योंकि भारत का जो ग्रोथ मोमेंटम इतना ज़्यादा है कि जिससे ओवरऑल ज़्यादा से ज़्यादा लोग भारत में स्टॉक मार्केट में भी निवेश करते हैं, और उसकी वजह से ज़्यादा से ज़्यादा लोग दूसरे इंस्ट्रूमेंट जो है फ्यूचर्स, ऑप्शंस, बॉन्ड, रीट्स, इन्वेस्ट वगैरह में सब में निवेश करना चाहते हैं। तो ओवरऑल एनएससी की आईपीओ भी उसका खास असर नहीं पड़ेगा, और जो आज ऑलरेडी लिस्टेड कंपनी है उन पे भी उनका खास असर नहीं पड़ेगा।
टीडीएस और टीसीएस की बात करें, उनके जो डिटेक्शन है उसे आप किस तरह से देखते हैं?
तो एक तरह से टीडीएस और टीसीएस में जो पहले बढ़ोतरी हुई थी उसको कम किया गया है। तो जो बच्चे बाहर पढ़ने जाते हैं, या तो जो टूरिज्म के लिए जाते हैं या मेडिकल के लिए जाते हैं, उनके लिए और उनके जो माता पिता है उनके लिए बहुत महत्व की बात है। और एक जो फॉरेन एक्सचेंज का मैनेजमेंट में नया फ्रेमवर्क लाने भी आदरणीय वित्त मंत्री जी ने बात की है। तो मुझे लग रहा है कि एक तरह से ओवरऑल बहुत कॉन्फिडेंट फॉरेन एक्सचेंज मैनेजमेंट में।
That's the Chairman Managing Director, Mr. Ashish Chauhan of India's largest exchange, the National Stock Exchange. With that, ladies and gentlemen, we'll shift focus a bit on what this budget has done for the markets as also for investors. Dhirendra Kumar was with us for a while. He suggested a lot of very practical things that we can do post this document. Thank you, Dhirendra, for your inputs. We'll definitely get back together once the fine print is adjusted at your end. And joining us now, ladies and gentlemen, is a market veteran, Mr. Anand Rathi, founder and chairman at Anand Rathi Group, a gentleman who has definitely seen more than 40 budgets. राठी साहब नमस्कार, आपका बहुत बहुत स्वागत है। सिर्फ दर्शकों की जानकारी के लिए, कितने बजट गुजर गए आपके सामने से?
नमस्कार। मेरे सामने तो भाई मैंने तो 55-60 बजट देख लिए हैं। तो
और
तो
इसी
आपका कहना सही है
जी, इसी तजुर्बे को और इसी नज़रिए को राठी साहब इस्तेमाल में लाइए और बताइए इस बजट में आपको क्या अच्छा लगा, क्या और बेहतर हो सकता था, और क्या पसंद नहीं आया?
देखिए, मेरा तजुर्बा एक तो ये बताता है कि जब भी कोई बजट आता है तो उसके नेगेटिव्स पे जल्दी से ध्यान जाता है, और पॉजिटिव को समझने में थोड़ा समय ज़्यादा लगता है। तो यही इस बजट में हुआ है कि इस बजट में जो एसटीटी बढ़ाई गई है, जैसे उसका अनाउंस हुआ मार्केट एकदम नीचे जाने लगा और नीचे गया, और उसका इम्पैक्ट जो है अभी भी मार्केट में लग रहा है। क्योंकि मुझे लगता है कि हालांकि वित्त मंत्री जी ने बोला नहीं कि भाई पर्पज ये है कि वो चाहते हैं कंटिन्यूस एफर्ट्स है कि लोग एफएनओ में नहीं जाएं, इसलिए शायद कॉस्ट बढ़ाने की वो हुई है, परंतु शायद वो अवॉइडेबल था, क्योंकि एट द एंड ऑफ द डे एंट्री बैरियर करने के लिए और कई तरीके हैं। एक मिनिमम कैपिटल रिक्वायरमेंट, किस लेवल के लोग कर सकते हैं, सब मार्केट्स में वो बेस ज़्यादा होता है। परंतु हैविंग सेड दैट, अब मैं बात करूँगा कि इस मार्केट में क्या अच्छे हुए हैं। मैं समझता हूँ कई चीज़ें मार्केट में आज जो सर्कमस्टांसेस जिसमें अपने गुजर रहे हैं, आज यूएस की जो सिचुएशन अपने वर्सेस इंडिया है, जो टैरिफ की अनसर्टेनिटी चल रही है, और जिस तरह के हालात में अमेरिका इंडिया को फेवर नहीं करके डिसफेवर कर रहा है, उसके बावजूद भी मार्केट में देखिए क्या अच्छी चीज़ें। मैं हमेशा ये ध्यान देता हूँ कि अच्छी चीज़ को पहले देखो। तो एक तो अच्छी चीज़ एक देखिए, फिस्कल डेफिसिट इस साल भी बड़ा नहीं है, इन स्पाइट ऑफ इनकम टैक्स में काफ़ी रिलीफ दी गई लास्ट ईयर, जीएसटी में रिलीफ दी गई। उन दोनों इतनी बड़ी रिलीफ के बाद भी फिस्कल डेफिसिट नहीं बढ़ा है, वो मेरे ख्याल से बहुत बड़ी चीज़ है। और अगले साल भी फिस्कल डेफिसिट जो है 4.3% की जो घोषणा की है वो भी बहुत अच्छी है, क्योंकि नेक्स्ट ईयर में भी देखिए टोटल रेवेन्यू की ग्रोथ करीब 10.1% के आसपास ली गई है। 7% का जीडीपी ग्रोथ की बात की गई है। वो अब दुनिया में भी सब लोग कह रहे हैं कि इंडिया में 7% डिजिटल ग्रोथ जीडीपी ग्रोथ आ सकती है 6.5 के बजाय। इन्फ्लेशन कम होने से नॉमिनल ग्रोथ कम रह रही है, अब इन्फ्लेशन अगर वापस थोड़ा सा बढ़ेगा, मुझे लगता है अगले साल, तो नॉमिनल ग्रोथ बढ़ेगी। तो आप, और बजट में खास बात यह है कि हर माइन्यूटेस्ट डिटेल्स में वित्त मंत्री ने कहा कि कहाँ स्टेप्स लेना है, किस इंडस्ट्री को हेल्प चाहिए, एसएमई के लिए बहुत अच्छा है। तो मैं तो इस बजट को कहूंगा कि ऑन द होल, बारिंग एसटीटी जो नहीं एक्सपेक्टेशन नहीं थी वो हुआ। कैपिटल गेन्स में देखिए, ये बाईबैक का जो प्रोविजन आया सैलरी, बहुत मतलब लास्ट टाइम गलत हुआ था, अब उसको ठीक करने की कोशिश की गई। ठीक है, थोड़ा इम्पैक्ट प्रमोटर्स के ऊपर इन्होंने ज्यादा रखा, क्योंकि उनको लगता था भाई प्रमोटर्स एडवांटेज ले रहे हैं, परंतु रियल एडवांटेज तो आम निवेशक को मिलता था। तो कई अच्छे पॉइंट इसमें हैं बजट में, और मैं समझूंगा कि ओवरऑल बजट उस दृष्टि से अच्छा बजट है।
राइट, राठी साहब, आपका बहुत बहुत शुक्रिया इस विस्तार से बताने के लिए, और साक्षी मेरे साथ स्टूडियो में जुड़ी हुई हैं। सबसे पहला मेरा उनसे प्रश्न था कि कितने बजट राठी साहब आपने देखे? उन्होंने कहा 55 या 60।
Wow. Which one has been your best budget that you've seen?
देखिए, नहीं, आई डोंट रिमेम्बर विच वन इज बेस्ट, बट ऑब्वियसली आई थिंक मोर इम्पोर्टेंट इज कि जैसे जहाँ टैक्स में रिलीफ हुई, जैसे इनकम टैक्स कम हुआ, वन बिग बजट वाज कॉर्पोरेट टैक्स से 25% पे लाया गया, दैट वाज बिग बजट। उसके पहले जब मार्जिनल रेट ऑफ टैक्स, जब मैंने अपना करियर चालू किया था, तो यूज्ड टू बी 80% मार्जिनल रेट ऑफ टैक्स, व्हेन इन वन बजट इट वाज ब्रॉट डाउन टू 30%, आई मीन ओवर पीरियड ऑफ टाइम। तो वो बजट एक जबरदस्त बजट था कि भाई पर्सनल टैक्सेशन 30% के ऊपर नहीं होना चाहिए। तो मैं मानता हूँ कि जैसे जैसे लोगों को, एंटरप्रेन्योर्स को बड़ा मिले हुए, टैक्स को रीजनेबल लेवल पे रखा जाए। आज जिस कंट्री में ग्रोथ आई, चाइना वगैरह में कहीं भी 20-25% के ऊपर टैक्स नहीं है, वो मैं जिस बजट में लाया गया उससे कंट्री को बहुत फायदा हुआ।
Thank you so much, Mr. Rathi, and all the very best to you. We will again get an opportunity to speak to you eventually. Let's also welcome another veteran of markets, Mr. Shankar Sharma, founder of G Quant, and joining in on the program. Warm welcome to you, Shankar. Thank you so much for taking the time out. How disappointed are you on a scale of 1 to 10 with this increase in STT?
I'm not disappointed. In fact, if you see my tweet, which I just put out 10 minutes ago, the budget was singularly made great because of this single move of the finance minister. I wholeheartedly commend and support her that this poison, this cocaine that has seeped deep into India's society should be, I mean, my view, should be stopped for retail investors. There is no business speculating in stock market. You come to buy long-term equity for long-term asset building, not this rubbish like F&O trading, which is just generating brokerage revenue and STT revenues for the parties concerned. This is ridiculous. I think she has done a fantastic job. I hope in the next budget they triple this tax so that this whole malaise, which has infected the smallest of people, just dies a natural death. It cannot be stopped, obviously, but it should be killed slowly. I think they are on the right track.
Good afternoon to you, Shankar, and a very warm welcome. What part of the global geography are we seeing you from? That's my first question. And the second question is, how does the overall budget document look to you, given that 7 sectors has been chosen, and the fact that a clear tax holiday has been provided to global data centers? How do you see these two moves?
नहीं, तो आपका पहला सवाल का जवाब आपको चाहिए कि मैं सिर्फ सब्सटैंटिव सवालों का जवाब दूं?
नहीं, पहले का तो बहुत जरूरी चाहिए, तो ये पता चलेगा कि शाम को हम लोग मिल रहे हैं या नहीं।
हाँ, शाम को अगर आप दुबई में होंगे तो बेशक आप जाता है। फिलहाल मैं दुबई में ही हूँ। और जहां तक रही बात इस चीज की कि जो डेटा सेंटर्स के ऊपर इंसेंटिव्स मिले हैं और बाकी चीजों के ऊपर जो आपने बोला, सात इंडस्ट्रीज के ऊपर, देयर ऑल फैंटास्टिक मूव्स। आई मीन, फ्रैंकली स्पीकिंग, दीज आर लॉन्ग टर्म मूव्स। स्टॉक मार्केट एक शॉर्ट टर्म मैकेनिज्म है, इंजन है, उसको लॉन्ग टर्म से कोई लेना देना नहीं है। इट विल रिएक्ट द वे इट इज गोइंग टू रिएक्ट, देयर इज नो टू वेज अबाउट इट। But the fact is, if you look at 5 years out, all these moves will bear a lot of fruit. So there is a short term, there is a long term. The short term, we got boosts enough through the GST cuts in the last year, the corporate tax cut of 2019, the personal income tax of the last budget. अब और क्या आप उम्मीद कर रहे हो personal taxation पर? Now we have to make capacity building for the future. I think that's what she has done.
Okay. Shankar, what do you think the FIs will be happy looking at this budget? Will they finally make their way back to India? They have been evading us. And how, like in 2025, we have seen 3 lakh crore rupees worth of money being pulled out on the cash market, 40,000 crores in January ahead of the budget. What do you expect now?
I don't think the FIIs are going to be enthused by the budget because for them, the budget is more a long-term document. Remember, everybody is ultimately more a 12-month investor. Rest is all, easy talk for, making good headlines. But otherwise, ultimately, people live, frankly, many people live. Daily NAVs are there. So we have to perform on a daily basis. In my view, FIIs are unlikely to change their view on India because of this budget. Frankly, this budget doesn't do anything for or against the India case that they might have built in their heads. I think FIIs will be, generally speaking, finding better options elsewhere in the world. I don't think this budget does anything to change that perspective, which is why we have seen the numbers from them being what they are.
Fair point. For an investor who wants to put in fresh money and that lot is decreasing by every passing day, Shankar, what would make sense? Should they look for overseas investments via ETFs, which are now very popular in India, or should they focus domestically?
So my view is the ETFs in India, as far as I know, they are already priced at a big premium, the foreign ETFs in India. So if they are already at a premium, I don't think you're going to make much money incrementally, because if the premium is, 10, 20, 30%, then it's already pricing in a 30% move in global markets, which is not going to happen that quickly. So there is a lot of inefficiency or a barrier to a lot of local domestic capital to escape from India and invest overseas. I don't think that's going to be eased up by the Indian government anytime soon, given the pressure of outflows on variety of counts, be it on the FDI front where big sales have happened, big exits have happened. IPOs where promoters and founders and VCs have cashed out. And of course, the secondary market sales from the FPI. So I don't think the government is going to give you any concessions and relaxation for investing money overseas in overseas equities. I think the best options for Indian investors are to buy gold, silver, and the non-equity related foreign exposed elements. And that people who did that in the last 2 years have benefited handsomely. But I don't think Indians can easily invest overseas as we speak right now.
Okay. Shankar, this budget has been presented at the backdrop of a lot of tariff-related uncertainty, geopolitical tensions as well. Do you think this budget has done enough to guard our economy against any of these external shocks for the rest of 2026, given the sense that Donald Trump is still at the helm and there could be many more shockers that could be coming in?
I don't think anything has been done, and I don't think anything can be done either. What do you do when things can suddenly go from 9%, 10% tariff to 25, then 50, then suddenly 500? You can't deal with a volatile bunch of policies. There has been no predictability to American policy towards India. I don't think the government can prepare for the unpreparable. I mean, what do you do? So I think the only option left for India is to sit down and do a graceful negotiation and finish this thing off on the trade front. Although I must add at this stage, I don't think that will have any material lasting bearing on the stock market. I just want to be very clear about it.
Okay.
That a trade deal with America will in no way alter the trajectory of the stock market, barring a day or a week of a sharp upward rally. I don't think structurally anything will change for Indian equity markets should the trade deal actually come through.
Okay, what is the trajectory of the Indian equity market at this point of time, according to you?
When you ask a question which has not a good answer, you should not ask it.
Okay, I get your answer. Now, in the previous answer, you mentioned that we should stick to gold, silver. So this very sharp speculative bout that has shaved off a lot of speculators from the market, are entry points in rupee terms for gold and silver sensible to you, or is there still a downside?
No, you should buy all the dips in gold and silver. There will be massive immediate crashes of the kind we have seen in the last couple of days. That's any trending
commodity or security or market will have sharp cutbacks, but I think they're structurally in a bull market. And I don't think we should attach too much importance to these kinds of sharp corrections. More than Indian equities, I would favor gold and silver, even copper over Indian equities at this point. I'm not talking individual stocks. There are plenty out there. I'm talking main headline indexes. I don't think you will make much money, if any money at all, buying Indian broad basket or an index, but you will still make money buying gold and silver and copper.
Okay. How do you see the appointment of Kevin Warsh as the new Federal Reserve Chair by Donald Trump? What kind of a trajectory do you think central government policies, central bank policies will have to take now, looking at this change at the helm, looking at two factors? One, that he's always known as an inflation hawk, and second of all, that it could be largely on the understanding of how Trump wants the policies to go from here. How would you really see it?
So there's a very nice, very, very erudite and learned economic journalist, Vivek Kaul, who put out a very nice tweet yesterday, which I was reading, and he correctly pointed out that the Fed chief, while ornamentally appears to be the man making all decisions, is actually a monetary policy committee, and he's only one vote himself versus 11 other votes. So to expect that one guy will be able to influence 11 other people is a bit of a stretch. And of course, philosophically, he's a hawk rather than a dove. So I don't think it's so easy to conclude that he will start cutting interest rates and reverse the whole relatively tight money policy of Powell. In any case, Powell can also continue for a very long time as a committee member, even though he may not be a governor. So he's explained beautifully in that tweet of his, which I strongly recommend all of you must read. He's explained the way the structure is and what the laws and the norms are. So I don't think it seems simple to conclude that Warsh will come and completely reverse whatever Powell was doing, because he's just one out of 12 people.
Right. Thank you, Shankar. As always, it's such a pleasure to talk to you, and looking forward to catching up with you somewhere in the Indian geography. Thank you for your time.
Sure thing, sir. Hopefully soon. Thank you.
Yes.
Thank you so much.
And joining us on the show is the one and only Vijay Kedia, a very well-known investor and a wonderful singer and a practitioner of great stock picking. Namaste Vijay ji, बहुत-बहुत स्वागत आपका.
नमस्ते सर, नमस्ते
जी.
नमस्ते विजय जी. आपने कल एक ट्वीट किया था जिसमें आपने हमारे पिछले साल के बजट इवेंट का आपने जो गाना गाया था फाइनेंस मिनिस्टर के लिए, उसका आपने कल ट्वीट किया, जिसमें आपने खास तौर पर अपनी लाइन बोली थी, जो आप बेहतर गाएंगे, मैं सिर्फ बोल देती हूँ, डिविडेंड पे टैक्स लगाती हैं क्यों बार बार. इस बार तो एफएनओ के ऊपर और एसटीटी लग गया. आज क्या गाना गाएंगे आप?
आज वही गाना गा रहा हूँ सुबह से कि दिल के अरमा आंसुओं में बह गए, हम वफा करके भी तन्हा रह गए, शायद उनका होगा क्या आखिरी ये सितम, हर सितम ये सोच के हम सह गए, दिल के अरमा आंसुओं में बह गए.
तो ऐसा है केडिया साहब, देखिए हम लोग लंबी अवधि के निवेशक हैं और ये सब झटके जो हैं लगते रहते हैं. आप खुद ट्रेडिंग से परे हैं, बड़े लंबे निवेश रखते हैं और बहुत दूर की सोच बाजार में आप प्रेरित करते हैं लोगों को. बताइए, कुछ पसंद आया हो इस बजट में? एसटीटी को ज़रा बाईं तरफ रखते हैं थोड़ी देर के लिए, लेकिन कुछ तो ऐसा होगा जो आपको पसंद आया होगा.
नहीं, ऑफ कोर्स एसटीटी को छोड़ देना चाहिए, क्योंकि वही जीवन नहीं है और वही कोई इकोनॉमी नहीं है. हमारे $4.5 ट्रिलियन की इकोनॉमी है, वो कोई एसटीटी पे डिपेंडेंट नहीं है. तो वो इकोनॉमी अलग चीज है और एसटीटी जो उन्होंने लगाया वो अलग चीज है. और एसटीटी में जैसे सब जानते हैं रुपया सब खोते हैं, सेबी भी बार बार बोलती है, मैंने भी कई गाने लिखे हैं एसटीटी के ऊपर में, सॉरी फ्यूचर एंड ऑप्शन के ऊपर में, कि हाँ भी लोग इतना बड़ा रुपया इसके अंदर में खो रहे हैं. तो वो ठीक है, उसको कटेल करने के लिए गवर्नमेंट ने लगाया, ये अलग मुद्दा है. मेरा मतलब खाली और था कि मेरा ऐसा मन में रहता है कि हाँ भी जो हम $4.5 ट्रिलियन की हमारी इकोनॉमी है, अभी हमको एक्शन जो लेनी चाहिए, पॉलिसी जो, हाँ वो
सुनते हैं वित्त मंत्री को पीआईबी इंडिया पे आ चुकी हैं और अब बोलना शुरू करने वाली है. बिल्कुल.
I also welcome Secretary, Department of Public Enterprises, Secretary Expenditure, Secretary Deepam, Secretary Financial Services, Secretary Expenditure, Secretary Deepam, Secretary Financial Services, Secretary Economic Affairs, Revenue Secretary, Chief Economic Advisor. Friends, first the Honorable Finance Minister will make her opening remarks. Thereafter, we will take some questions. Please remember, identify yourself and your organization's name. And I would request you to ask one question only so that your friends can be accommodated. Thank you very much. Over to Honorable Finance Minister.
Good afternoon. This is the customary press conference that we hold with all the secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Vikasit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities, so it will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Also, technology, 21st century, this century is completely driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his businesses to prosper, or for farmers for greater productivity, or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on. And also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we are coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years, 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced. The destinations are clear so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over 5 years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We have also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us, our dependency on external sources for bringing in the rare earths will be lesser, and we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh and Tamil Nadu. So these are very important developments and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again for reducing our import dependence. High-tech tool rooms for research, that will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments which we are relying on imports. We want to manufacture them in India, and that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipment. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points. Whereas there are equipments which today are produced abroad, which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else, from small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they are not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive, and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the supports, and three-pronged approach is being taken up there. We are giving equity support, we are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the Chartered Accountant and Cost Accountant institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard the speech, so I won't want to take your time on it. High-powered education to employment enterprise, standing committees being formed so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. New export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the import exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start this question, taking the questions. First question is 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. the primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason.
54. मैम तरुण शर्मा फ्रॉम जी बिजनेस। मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है। मैम मेरा सवाल आपसे दो हैं यदि आप अलाउ करें। एक मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है। दूसरा मैम जो आपने एमएसएमई के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज करना होगा, तो क्या मैम ये सीपीएसईज के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू।
I'll take the second question, ma'am. So, हाँ, ये CPSEs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा ताकि वो 45 दिन में भुगतान MSME को कर पाएं, और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है। So, we want to make CPSEs as pioneers. We hope, like ma'am has said in her speech also, that other corporates will also follow.
On excise.
Increased by 22%, sir, from last year B to this year.
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year. 209. Ma'am, Prakash Pedashi from ET Now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not going to?
Merged going forward?
Yeah, I've said we are rationalizing it. You will get to know as we go forward. We want to streamline it, and therefore we will be taking some steps. We'll let you know the moment we decide how to go about it.
234. Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for any kind of merger or something? Since government is continuously saying that we need at least two of the big banks, at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are a large number of aspects relating to the banking requirement. For example, the credit to the GDP, commercial credit to the GDP ratio low, and the expansion of the banking network, and what kind of procedure currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee. And well, we'll definitely have TOR and then also consult the all the stakeholders. And the government will take a view on how to lay strong foundation for 2047 Viksit Bharat.
Ma'am, one more question. 229. Left side, yes.
Ma'am, Premanshu from Ananda Bazar Patrika. Ma'am, have you consciously avoided announcing any bonanza for the pole-bound states? And secondly, can you elaborate on this East Coast corridor, industrial corridor you announced?
See, the industrial corridors are very critical for supply chains. We need a predictable mineral, rare earth and magnet related products to be made available for India's manufacturing. Whether it's lithium ion, whether it's automobile sector, whether it's the new age solar, you need these rare earths to be processed and be made available. We have enough raw materials. The coastal areas are rich in these minerals. And therefore, states also felt, I must credit that the interaction that I had with the finance ministers pre-budget, many states felt that there are rare earths which they can utilize. We then sat up in the budget group that we have, Revenue Secretary, Secretary DA, and thrashed out, talking with the states. What are the kind of things that we can do so that their capacities to extract these minerals, process them, make them something which the industry can benefit from. So India can be less dependent on imports of these materials. That is where, having spoken to states, we thought it's very important to recognize the corridor and give a policy for it so that industries can invest, private sector can come in, governments, state and center can come together on it. That is where these corridors were announced. And looking at the success of the defense corridor, I can confidently say these rare earth corridors will make that big a difference to the Indian economy. The first question, I think there's enough to cover all the election states. If I do, you will ask me, why have you done it only for the election states? Now I've done it for election and non-election states as well. You want me to spell out what has been done only for the election states? I'm quite happy to do it.
262, front. At the front, please. Here, front side. Front row.
Good afternoon, ma'am. Sapna Das here from CNBC TV 18. Two quick questions. Just wanted to understand the gross borrowing at over 17 lakh odd crore. Would the government look at it as being on the higher side? Just asking that. And within that also, if you look at your net tax revenue stream, of course, B to RE it's higher, and a lot of concessions have been given away both on direct and indirect taxes. But the trend seems to be a bit flat, around 28 lakh odd crore. So if you could explain to us, how is this entire thing looking? And second, ma'am, in terms of the disinvestment aim, 80,000 crores, would this also include IDBI stake sale sometime in FY27, ma'am? Thank you very much.
So you've covered a number of secretaries all at one go. So on the borrowings, no, we don't think it's on the higher side because the net market borrowings are in the range of 11.73, which is been plus around that number for the last couple of years. The larger number is because we have 5.5 lakh crores which have to be repaid this year. So to that extent, we don't think that it's a large number. We have a plan how to manage this, and according to that plan, which also gets released from time to time, the markets would also know, as well as all of you all.
4. Okay. So, on the tax stream, because of some concessions that were given this year, there has been some course correction. But if you look at the next year, the direct tax is growing at 11.4% and continues to be 3.1% of the GDP. The total collection would be 6.9%. The indirect tax excise is growing very healthily because of the base correction. The base which has got added. Customs too is showing a decent buoyancy. So on the tax revenue, I think we are looking up. And even GST, as you would have seen the collection figures today, after rate rationalization, the buoyancy which we had expected, and in this hall we had discussed about it, you can see that coming back on that tax.
Hi, ma'am. Meghna Mittal from Money Control. The fiscal deficit target that you have set for next year from 4.4 to 4.3 is being seen as very, very gradual. Is there a specific reason, or is it because of the global uncertainties as one of the major factors for being such a gradual fiscal consolidation path?
I would have thought you'll appreciate it being gradual. Because particularly fiscal, drastic changes don't go down well. One or the other section gets hurt. We will have to be gradual, but yet keep it well within that band which gives confidence. And to show that we care for fiscal prudent management. There's no point in me dropping it to, let's say, 4. It has to be steady so that the economy goes in a steady speed. So it is a responsible number and realistic number. It's not as if I wanted it to be so gradual. It is a responsible number. We should achieve it and equally not bring in any kind of turbulence anywhere.
Thank you. From the center flank, 190.
Thank you, and congratulations on a very comprehensive budget.
Before you start, I was going to look at PIB and say this side is being ignored.
Yes.
But good that we called you.
Thank you. I'm Aprajita Saxena from CNBC International in Singapore. I'm very curious because you started talking about tech, and I want to ask a question about the ISM 2.0. There are those on the outside who say that India sort of lags when it comes to AI innovation, especially innate innovative LLMs. Is the strategy of ISM 2.0 to sort of become part of the global value chain, or are you more positioning towards India creating its own native LLMs? Thank you.
I think Ashwini Vaishnav, the minister, has been speaking extensively about this. There are several aspects of it. We want to be sure that in the semiconductor domain, we have every expertise for all those 5 major chip or modeling or, the infrastructure, design, every aspect of it. So he is talking about creating capacities within the country to be able to have that kind of infrastructure well laid out within the country. And similarly, if you're looking at the way in which our startups are working, using AI, and very clearly we have also shown a path that it is not just the large language models, but also smaller ones, medium-sized ones, which can serve the requirement of your economy. So AI in India, particularly when you have a huge demographic dividend, will have to give us results to ensure that our people have work and also the opportunities are going to be enticing enough for the youth. It cannot replace human efforts. So we are at the same time redefining for ourselves, if I may use that expression, on how to use AI, what is the capacity that we have to create, the kind of infrastructure that we have to lay in the ground for it. Equally, the products which come out of it will have to benefit our people because our youth are revving to do more and new. For them to do something new and for them to do something more, we have to create benefits out of AI rather than, push along with AI unthinkingly that it doesn't serve our people. So I think these many different factors play in making a decision on semiconductor. And that is where ISM 2.0 looks into these aspects as well. And I'll ask the CEA to speak a bit on it because he spent a lot of time so that he could write effectively capturing what's happening down. Ananta, you want to say anything on it?
Actually, we have to see the semiconductor mission and the announcements related to the rare earth corridor, which ma'am talked about a few minutes ago. All of them as part of the framework that we presented a couple of days ago here on the strategic resilience part. So, in fact, many elements of this ma'am's budget speech focus both on equipping us to handle the AI-related technology as well as skilling the population in areas where they can be immune to some of the AI-related impacts as well. So it covers both dimensions, and therefore the semiconductor mission, the rare earth corridor, and also some of the Part B announcements ma'am made about the various electronics and manufacturing sectors were all part of the initiatives to make sure that we make ourselves strategically resilient in a very fraught global environment.
138 at the back side. Yeah.
I'm Rishabh with NDTV Profit. Just wanted to ask on the buyback tax, the rationale behind it, because was it essential to do it now? Because in 2025, there were a lot of companies that came out with significant share buybacks. Also because, and also do you foresee some sort of a reduction in buybacks? And secondly, on pollution-related schemes, the outlay has been very stagnant, but pollution as a problem remains. Is this not a policy priority for the government now?
On the buyback, I'll have Revenue Secretary brief us.
So first of all, on the buyback, I'd like to clarify. I hope that the point was clear enough in the speech also, that it is in fact a relief. It's not a tax, additional tax. It is a relief. Buyback tax system was changed to make it as a dividend income, which is income at the applicable income tax rate at the hand of the shareholder. It has been corrected now, and we have put the tax to be in the hands of shareholder as a capital gains.
Investment Guru Steps will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-powered by Purvankara, the art of development celebrating 50 years.
Hello and welcome. You're watching the collab show between Business Today and India Today Television. This is the market closing show. Last 10 minutes to go before the market shuts shop. It's presented by NSE. Let me quickly welcome all our guests joining in. Saurabh Mukherjee, founder and CIO, Marcellus Investment Manager. Swaroop Mohanty, CEO, Mirai Asset Mutual Fund. And we also have with us Dheeraj Relly, MD and CEO of HDFC Securities. Welcome to all of you. Thank you for standing by. The Finance Minister just took some of the questions from media on the budget that she's presented. Sort of coming to you first, what do you think is the key reason why the markets are disappointed so much? 2% down for the Nifty, 24,800 has been given up. Is it the disappointment on STT or is it the disappointment of some more announcements that have gone missed?
I think the market had unrealistic expectations going into the budget. We're living in a country where dollar EPS growth, right, is close to zero now for 2 years, and the market trades at 20 times forward, right? So you can just get just to give you a sort of headline view of how unrealistic views are. Earnings growth in rupees is 5%, in dollars is barely anything. The market trades at rich multiples compared to any other country. And therefore, the unrealistic nature of expectations meant that they were more likely than not to be disappointed. I think the FM hasn't done anything wrong. It's a good budget. It was a high time that FNO taxes were increased. I've been shouting myself hoarse for the last couple of years that this doesn't make any sense. We have 1 trillion rupees of speculative activity in FNO markets. Much of that money is ending outside India, as smart algo traders on Wall Street take retail investors in India to the cleaners. I'm glad that the FM has decided to tax that activity at higher rate. It's basically a sin tax. It's a good idea. And the second, I think, positive thing she's announced is a big review of the banking sector. I don't know exactly how the review will play out, but unless the FM wants the repetition of the status quo, there is possibility that the review of the banking sector leads to more foreign capital, perhaps more foreign corporate capital also entering the banking system. More capital in the banking system is much needed, given where we are with many of our smaller banks struggling with profitability. The only negative I could spot was this obsession about jacking up capex, which obviously results in more borrowing in the bond market. I think tomorrow morning, when the bond markets open in India, we'll see bond yields going up, and that's unwelcome, especially since the CE has said, the chief economic advisor has said, India needs cheaper capital. I'm not quite sure how the government borrowing more money in the bond market is going to reduce the cost of capital for the country. But in difficult circumstances, a decent budget. I think the market being disappointed is more the market's own unrealistic expectations than anything that the FM has done.
Right. Let me come to you, Dheeraj, and quickly ask you as well, what stood out for you in this budget, and where do you think the finance minister could have done more?
I think this budget is a more nuanced and fine print oriented budget rather than, a big bang reforms. We've seen government continuing to focus on the Capex side. I think that is good because India is a infrastructure deficit country, and Capex has its own repercussions on the employment and growth also. So to that extent, I think more or less FM has ticked all check boxes. No big bang reforms. Yes, STT increase in FNO have been a dampener, and I think this is a knee-jerk reaction in the market. Maybe there for a couple of days, and then markets will move on from here. What I think FM could have done better. My take is that we have good enough of assets available with the government to monetize. I don't know why they are reluctant to monetize the assets, because with that monetization of assets, they can get funds and they need not to borrow more from the markets. So that would assuage the concerns Saurabh was pointing out. Government is sitting with a lot of assets and they must look at monetizing the same. They can also reduce their stakes in some of the PSU banks also. Hopefully the high-powered committee, sustained committee could work in these directions.
Okay. Saurabh, to you as well. On a scale of 1 to 10, how would you rate this budget, and what adjective would you use to describe this one?
If you just take out the stock market perspective and look at it from a broad India, destination or path story, I would rate it 8 to 9. But at this moment, it's completely wrong to discount the stock market at a time when people are abandoning India with the quantum of money that's going out. That was a message being given to the country, and I'm not against the implementation of STT, but I think it could have been avoided at this moment. Please understand, today the FIs are not at play in the market. We'll come to see the full impact tomorrow. And see, there is a lot of noise on the world. We can ignore that noise and continue our path of fiscal prudence, which the budget has continued, which is, I think, controlling the controllables. I think when you look at the broad budget, I think the focus on that has been a standout. A lot of factors which the world was screaming out, because the world's divided into two parts. Again, speaking from a stock market perspective, there's an AI world and a non-AI world. Yes, we've addressed our intent to be there through data centers and semiconductors. That's an intent. Time will tell whether people will take that bait. Now, the concern for the country has been private capex. The government cannot be, ticked anywhere out of 10 on its intent on public capex, which it continues. This is a phenomenal budget, but time will tell whether people will take the bait on private capex. The other part, which is very significant for me, is, at 9% unemployment, this budget also lays down the ground for the beginning of employment across sectors, which these were three things which stood out for me. But ignoring the stock market, we'll come to see the full impact tomorrow.
That's where the impact is. Okay, Saurabh, to you as well. Do you think this budget has done enough on two accounts? Taking a leaf out of what Saurabh also mentioned, Swaroop also mentioned, and that's as far as the private capex is concerned. That's been subdued. We've seen only the government doing all the heavy lifting. Will it finally pick up? And second of all, will FIIs come back that have been awaiting us?
So, two aspects to understand on private capex, right? A promoter of a private sector company looks at demand. If you have tax revenues growing at 3 to 4% in a country, if you have capacity utilization at 70-75%, right, but demand has been weak for a couple of years now, job creation in the private sector is anemic, real wage growth in the private sector is negative. Difficult to see why a promoter should press the back button on capex. After all, he or she, the promoter, is a profit-oriented creature, and if he does not see the ground level economic activity to justify private capex, I'm not so sure what the FM can suddenly do to trigger private capex. So I think that's the first piece. It will be a while before we can see private capex, because job creation, private sector job creation, especially white collar job creation, does not seem to be happening at this juncture. Coming to FPIs, or let's focus on FPI money, the point that Swaroop was saying, where FPIs are heading for the door. The FPI's bone of contention is very simple. Their point is, look, you're one of the few countries in the world which taxes us at destination. Most countries have residence-based taxation. Most countries do not tax FPIs. We are one of the rare countries which taxes FPIs. When we were a country where earnings growth was in 15% or high teens, right, FPIs were happy to pay that tax. Now they're saying that there is no earnings growth in dollar terms, valuations are rich, and yet you guys continue taxing us. And their point is, why should we therefore invest in your country? Now, I'm not the person to address that issue. I think it's high time that between now and the next budget, the government and the FPIs have a chat with each other and figure out a middle ground which suits both sides, because I don't see FPIs returning to India with the GT regime that currently prevails for foreign investors.
Okay. Neeraj, coming to you. We just are a few seconds away from the market shut shop, maybe 1 minute to go, and we're already down sharply across the board. There's a broad-based sell-off. So the markets are clearly unhappy with what the budget has done. But for an average retail investor, from tomorrow, what is the strategy you're advising them? Is it back to earnings, back to tracking those companies which are, tracking with profitability? How should one be really understanding what their strategy should be post this budget?
One thing they can do is to relook at their portfolios and try and optimize their portfolios in the sectors where we see better earning growth, because ultimately budget or geopolitical issues, these are more bigger noises only, and they'll have to focus on the earnings. And we can safely assume that FY27 will be a better year for earning in terms of quality of the earning, and overall earning should be better. That's what our estimates are. And that's where we believe that they can look at the sectors which are where we have better potential for earning. BFSI is one space they can look at. I know PSU banks and some of the banks got hammered today, and capital market stocks are also hammered. But my take is that BFSI is one strong sector. And with the impetus given in the GST 2.0 and last year relief in the taxation and no tweaking this year, I think the benefit will continue, and that continuity should provide more money in the hands of Indians, and that should pay well for the consumption related stocks. And now that they haven't seen the volume growth, they have been riding only on premiumization in last few years. We're hoping that the demand will pick up in the next fiscal, and that's where consumption oriented stocks and low cost discretionary stocks should do well.
Okay, let me quickly just wrap up the markets and come back to all of you. 24,825 barely moved up above that 24,800 mark, but ending 495 points lower on the Nifty today. The Nifty Bank also has seen a sharp fall in today's trading session, viewers, especially led by the fall in the PSU banking story, 2% down, 1,193 point of a cut on the Nifty Bank. All the sectors have slipped into the red, barring just minute gains on the IT sector today. It's the India VIX that shot up almost 11%, indicating heightened volatility in trade today. Look at what the metals are doing. Last couple of sessions, we've seen heavy sell-off, and it again ends with about 4% losses in today's trading session as well. PSU banks are coming under heavy pressure, something that Dheeraj was also marking out, that it's the borrowing that the government has indicated in the budget, a record borrowing of over 17 lakh crore rupees, and that's creating some pressure there. Look at the defense stocks. There has been an increase in the outlay, but you still see the index down by 5% in trade. So it's an all across the board sharp sell-off that you've seen in the markets today. A lot of those stocks also getting under pressure. Let me come to you, Swaroop, and and try and understand, what should be an investor's understanding of asset allocation from here. Up until thus far, people were riding on this entire FOMO of gold and silver, jumping onto every opportunity, riding it high. But bang comes the sharp correction, which anybody of us would have anticipated, but not so sharply in just the last 2-3 sessions as to what has happened. For those investors who were heavy on gold and silver, what would you advise? For those under equities, what would you advise?
See, my smile was whenever I hear the term asset allocation, a smile comes to my face because asset allocation only happens on Twitter. In real terms, people buy last 1 year returns. If you're talking about the frenzy of gold and silver in the last 6-8 months, there was a frenzy of small caps prior to that, right? Till that is not corrected and investor behavior does not get into future thinking, asset allocation will not happen. That's the truth, right? And so there are two types of people in the market. One is a buyer, one is a seller. Buyer wants the market to go up. The buyer wants the market to go down. The seller wants the market to go up. Now, anybody who looks at the macro of India, it's probably the strongest macro globally. As a decadal growth, if you see 6.5-7% growth consistently is probably the most consistent growing country in the world. That's where you sit. I mean, as a buyer, I'm very happy that the market's where it is. I would probably top up my SIPs a bit and leave the worrying of which stock to buy to the fund manager. Once I give it to the fund manager, I would refrain from being a fund manager over the fund manager and keep it simple. Some of the valuations and what Saurabh actually referred to at the beginning is something which people should know. Whenever the market is in an overbought situation or overvalued situation, such triggers lead to a sell-off, and it will get into a far more realistic space and a good space for investors to be.
All right. Okay, we have time for a short break right here, but viewers, stay tuned with us. We are going to be continuing to decode the fine print of the Union Budget 2026 on the other side. Stay tuned.
Presented by National Stock Exchange.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. 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 Presented by National
As the country counts down to Union Budget 2026, the tone is already being set by the economic survey by the Prime Minister and by the markets. The message is clear. Reforms must accelerate, growth must endure, and people must remain at the center.